All right, shall we start? First of all, for those who celebrate, at least, happy Holi to everyone. For others, I think it's International Women's Day is what I see. So for all my female friends, a very happy International Women's Day. We generally say the house is run by the females. So, I do understand the challenges which a female goes through for getting all this done. It's not never easy, for the monthly cycles which you go through, for the pain which you go through, for the challenges you face from the society. It's never an easy job for all of you, but battling all that and still coming to a class is something which is very appreciated, definitely in the morning at least. So yeah, I think hands off to all of you. But yeah, having said that only works as long as you continue that journey. Just continue the journey along with me and see how we can clear the CA Inter and then become a CA finalist, and then clear CA finalist and then become. Let's come to that journey, because that is when people will start appreciating you to that extent. Your story seems, or at least gets that kind of value when you can show your struggle along with the success. Struggle alone does not help you with anything, because the success is what people actually look for. Your struggle always appreciates. It's always appreciated, but it doesn't find a fruitful value against someone unless there is a struggle. So let's work with that success and let's go with that. Yes. On that note, let's start for today. We are doing what? IFOS. Okay, great. We have already discussed what is the IFOS provisions, right? Okay. Great. Quickly revising while I find this out. We were into the chapter called IFOS, where we trying to understand what are the provisions taxable under IFOS, and we clarified somewhere that this basically is a garbage section. It's a garbage section where whatever does not fall into the other 4 heads of income is falling under the 5th head of income. Some examples you should discuss is called as interest on enhanced compensation, which is taxable only on receipt basis. Allowed as deduction is 50% allowed as deduction. If you have any kind of advance forfeiture, this is taxable only if it is received after 1st April 2014. The purchasing law. Then after that, we had something called as post office savings, where we came and said first 3,500 exempt from IFOS itself. Balance will become exempt under 80 TTA up to a limit of 10,000. Up to a limit of 10,000 under TTA, 50,000 under TTB, whatever you want to call it. Yes. After that, we had something called as family pension, where we said family pension is allowed as deduction up to 1/3 or 15,000, whichever is lower. Yes, 1/3 or 15,000, whichever is lower. Then we try to discuss what do you happen if you give shares at a premium. If you are a private company giving shares at a premium to resident shareholders, in that case, you should ensure that the FMV is less than the issue price. FMV is less than the issue price, because if the FMV is more than the issue price, what will happen? The difference will become taxable under IFOS. And then we learned the last provision called as gift. Where we said there are 3 kinds of assets. One is called as money, specified mobile assets and immobile assets. When it comes to money, you can get maximum of 50,000 per person per year. Full year, you can only get 50,000 rupees. If you get beyond 50,000, above 50,000 only taxable. Correct? Full 50,000 taxable. Then we went into specified mobile property. We said specified mobile property is BA pass DJ, bullions, archaeological collections, paintings, any work of art, chairs, sculptures, drawings, jewelry. These are only the assets which are taxable under IFOS. Balance every assets are not taxable. You have 2 kinds of mode. One is non-consideration and one is inadequate consideration. If it is a non-consideration, FMB, if it is above 50,000 per asset, all year round. Full year, all assets. If it goes beyond 50,000, everything is taxable. But if it's inadequate consideration, the gift element, meaning FMB minus consideration. Should be more than 50,000. If that is so, then everything becomes taxable. If you go into immobile property, now it is full assets or per asset. It is per asset. You have nil consideration, you have inadequate consideration. If it is nil consideration, it will become SDV. If the SDV is more than 50,000 rupees per asset, it will become taxable under IFOS. If it is nil consideration, if it is inadequate consideration, you need to check 2 conditions. Condition number 1. If SDV is within 110% of consideration, no tax. Second one, If SDV minus the consideration is less than 50,000 rupees, no tax. Both of them not satisfied. SDV minus the actual will become taxable under IFOS. Will become taxable under IFOS. Certain exceptions given to you. They said, boss, if you follow these exceptions, no taxability under IFOS. It is called as dirt min clot. It's called as dirt min clot. D refers for death. I refers for inheritance. R refers for relative. Relatives meaning self, spouse. First, your parents, spouse or parents. Your siblings, spouse or siblings. Your grandparents, spouse or grandparents. Then your kids, their kids. Your kids, their kids. And then spouse or siblings. Spouse or siblings, everyone's spouse. Sorry, not spouse or siblings. Family or siblings. Parent or siblings. Parent or siblings and everyone's a spouse. Everyone's spouse. Yes, if you don't understand, there is an image here somewhere. There is an image here somewhere. In that image also I would have clarified, because any kind of spouse, parents, siblings are not covered. Any other person's kids are not covered except for your own kids. Except for your own kids. Yes. With an IFOS provision getting over, we also clarified that, was if anything is taxable under IFOS, the element which is taxable under IFOS will be added to your cost of the asset. Will be added to your cost of the asset. Period of holding will start from today. Will start from today, the date of transfer. Will start from the date of transfer. Here, with this, the IFOS chapter was over, and we now have to jump to the next chapter called as dividends. We now have to jump to the next chapter called as dividends. In my IFOS chapter, you will find some two charts. You'll find some two charts. We cannot discuss the chart right now because you still need to do capital gains. Once you're done with capital gains, we'll discuss both the charts. Okay. As of now, this is something which is very complicated because we don't know what the capital gain provisions are. Let's discuss those things and let's come back to this chart. Before that, let's get into dividends. We get into dividends. I have separated the chapter under IFOS for my sake of convenience, but otherwise it's the same chapter as part of IFOS. Provisions basically come and say that, boss, if at all there is any dividends which you give, who gives? Companies. If there is a dividend which is given by the company, the income of the dividend will be taxable in the hands of shareholders. Will be taxable in the hands of shareholders. I'm telling you this because what happened is 3 years back, it was taxable in the hands of company itself. It was taxable in the hands of company itself. You had something called as DDT, dividend distribution tax. Ignoring all that, now it is taxable in the hands of shareholders. The provision basically comes and says this: if you are going to tax something as dividends in the hands of shareholders, you can claim only one expense. You can claim only one expense. This one expense is called as interest. What is it called? Interest. Meaning, if you have any kind of loan taken for the purpose of purchasing the share, if you have any loan taken for the purpose of purchasing the share, the interest will become allowed as a deduction. Here also they put a condition saying you can only claim 20%. You can only claim 20% of what? 20% of what? Dividend income. 20% of your dividend income. Meaning minimum 80% of dividend income has to be given as income. Has to be given as income. Okay. So what the provision comes and says is, if you have any kind of dividend income, the interest cost which you have pertaining to the dividend income can be claimed as a deduction, but only up to a maximum of 20% of the dividend income. 20% of the dividend income. Anything excess will be ignored. Anything excess will be ignored. Ignored meaning you will not claim a deduction. That's all. You will not claim a deduction. Income will still be taxable. Income will be taxable. That is what the provision means. Clear? Question to you. In exam, will they clarify 20%? Will they clarify 20%? No. It is a silent adjustment you need to take care. It's something which you need to take care. Meaning, in the exam, if they give you an example saying dividend income is 100 rupees. How much is dividend income? 100 rupees. Interest cost is 35. Interest cost is 35. How much is the dividend income to be offered to IFOS? By you can maximum only claim 20 rupees. Therefore, balance 80 will become taxable. Balance 80 will become taxable. What happened to the 15 rupees? Ignored. What happened to 15? Ignored. Rahul, for the purpose of purchasing shares, I also paid something called as brokerage commission. I paid something called as brokerage commission. Allowed, not allowed? Registration fees. Nothing is allowed. Nothing is allowed. The only one expense allowed as reduction is dividend. Interest on loan. Interest on loan taken for the purpose of dividend. Clear? Yes. 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 This is what the chapter says. That's all. This is what the chapter says. The other chapter does not have anything except for some theory. Except for some theory. They're trying to understand what do you mean by dividend first. What do you mean by Dividend first. Dividend has been given into 5 forms. Dividend has been given into 5 forms. In IFOS, they have come and said, boss, dividend means 5. Dividend means 5. If you classify any of these 5 items, it will be called as dividends. Section is 222. Section is 222. Abdina? 2? Called as 2 clause 22. It is not linked to each other, therefore it is 2 clause 22. Let's understand all the items one by one. I'm only going to read it for you. Not coming in exam. Okay, not coming in exam. First item is called as distribution of all or any part of the assets of the company to its shareholders. What? Instead of you giving cash in hand, you have now given assets of the company. Question to you: how do you value the dividends? Take the FMB of the asset. Simple. What do you do? Take the FMB of the asset as on that date, whatever asset you gave to him, because tomorrow if he sells his asset, he will get what? FMB. So technically that is what you gave as dividends. First item is called as distribution of assets of the company. Yes. Point number 2. Distribution of debentures, debenture stock or deposit certificates to shareholders or bonus shares to preference shareholders. They are coming and saying what? First, I'm giving you debentures to whom? Shareholders. Generally, debentures should be given to debenture holders. They are giving it to shareholders. Why are they giving it to shareholders? Very simple. Because today, you're instead of giving money, you're giving debentures. Instead of giving money, you gave debentures. Tomorrow, what will happen? You need to repay back the debenture. You will give it in the form of cash only. No, you give it in the form of cash. That time you will come and say it's a repayment of debenture. Therefore, you will say no tax on dividend. Correct? Huh? No. Now it is taxable. They came and said, boss, you're just routing mechanism. Summa nadula or instrument you have brought in. You've simply brought in an instrument in the middle in the form of debentures. If this debenture is ignored, technically what you did, you gave free money to them. And that free money is nothing but dividends. Same logic applies for preference shareholders. Ideally speaking, preference shareholders, you're supposed to repay back the shares. If you're giving them bonus, what it means? You never collected something. You're simply repaying back. This is nothing but dividend. Question to you: why is their bonus to equity shareholders not covered?
The bonus should not be issued in share of dividend.
That's theory. Why is bonus to equity shareholders not covered?
So there is no repayment criteria for equity shareholders. As for preference shareholders, they have to repay instead of repaying.
No idea. Look at the logic. Let's say the company net of everything, they have paid every loans, they have paid every debt, whatever it is, net of everything, they have 3 lakh rupees in hand. This 3 lakh rupees will go to equity shareholders. Correct or not? 3 lakh rupees will go to equity shareholders. Let's say, for example, the company has 10,000 shareholders. Equal ratio. Each shareholder will get how much? Each shareholder will get, calculate. 30 rupees. Yes or no? 10,000 shareholders, everyone is holding one share, everyone is going to get 30 rupees. Tomorrow I issue bonus. Every shareholder will get every one share. For every one bonus, you will have one share. Which means now how many shares are there? 20,000. How many shares are there? 20,000. Per share will get how much? 15. Each shareholder is holding how many shares? Which means each shareholder will get. There is the difference. Yes or no? Whether you give bonus or not, shareholder is going to get the same money. Because at the end of the day, whatever is the profit left in the company is fully going to equity shareholders. When nothing is going to change, where is the dividend element here? Correct or not? This same logic does not apply in preference. Because it is not 3 lakhs which you are going to distribute to preference shareholders. In preference shareholders, you would have come and said, boss, the share itself is 100 rupees. Meaning tomorrow you will repay back only 100. And tomorrow if you give them a bonus of 200, it technically means you have to give them back 200. Does that 3 lakh impact them? No. The 3 lakh impacts equity shareholders. You give them the same shares, you give them different shares, it doesn't matter. At the end of the day, equity shareholders are going to get the same number. Yes or no? Is there a dividend element? That is why it is not covered. That is why if you go to capital gains covers bonus. Capital gains covers bonus. They came and say, boss, bonus will be taxable at cost of acquisition of 0. With the cost of acquisition of 0, whatever is your whatever the sale value which you get will become the full profit under CG. Will become full profit under CG. In the logic, Purida. Clear? Clear? So second item, what is it? It is debentures to shareholders or any kind of bonus to preference shareholders. Any kind of bonus to preference shareholders. Point number C we will discuss later. Point number C we will discuss later when we go to capital gains. Point number C talks about liquidation. Talks about liquidation. We'll discuss when we do capital gains. We'll discuss when we do capital gains. We are into point number D now. Point number D comes and says reduction of share capital. What? Where have you learned this? Companies Act where? Section number 66. Section number 66 talks about reduction of share capital. Basically, what you're coming and saying is, boss, there were some shares which I had in my hand. I'm going to reduce your share capital and give it back to you. Give it back to you in this income tax claim and said, boss, again, this is in the form of dividends only. Because tomorrow, if there is any profit in the company, that still will be distributed to him. As a cover, if you're giving some reduction, that is nothing but your dividends. That is nothing but your dividends. So point number D talks about reduction of share capital. What you learned from A to D is not relevant for exam. What is relevant for exam is point number E. What is relevant is point number E. E comes and says that, boss, you are a closely held company. Where did we learn this before? Where did we learn this before? No, we are still an IFOS only. We are still an IFOS only. Where did we learn this? Which provision? Premium on issue of this. Last class na padchu. Premium on issue of shares. Closely held company, meaning you are nothing but a private company. You are nothing but a private company. Income tax comes and says, boss, if you are a private company, which is going to give any kind of loans or advances, you're going to give any kind of loans or advances to your shareholders. Which shareholders? Equity shareholders. Which you're going to give loans or advances to your equity shareholder. If this equity shareholder holds at least 10% in the company, this equity shareholder holds at least 10% in the company, whatever is the loan advance you give to him will be called as useless of the provisions. Useless of the provisions comes and says that if you are a private company who gives loans and advances to your shareholders, if the shareholder is holding more than 10%, whatever loans and advances you give will be taxable as what have you given him? Loan. Will you get it back from him? Will you get it back from him? Yes, you will get it back from him. Question to you. Today, because you gave the loan, it is taxable as dividend. Tomorrow you got it back from him. Can you claim as reduction? Can you claim as reduction? No. No. Will continue to be taxable. Your repayment has no criteria. The moment you give a loan to your shareholders, it is fully taxable as dividend. Will never be treated as a reduction. Even on repayment. So rule number 1, never treat it as a reduction on repayment. Clear? Since the provision was that useless, I wanted to avoid taxes. So I came and told boss, do one thing. This is not a loan to be given to me. Who's I'm? So shareholder came and said to company, boss, do one thing. Don't give the loan to me. Give it to my concern. So what happened is he had another company or a firm or any other entity. He said, do one thing, boss. Instead of you giving the loan to me, directly give it to my entity. Income tax came and said, boss, this will also now become taxable. Provided this shareholder holds at least 20%. In income tax, we use the word substantial interest. What? If this shareholder holds substantial interest in another concern and the other concern receives any kind of loans from the company, in that case also the loan will become taxable. As dividends. Question to you. Taxable as dividends for whom? Shareholder in the and the concern. Hi. கையில காசு வரலையே. கையில காசு இருந்ததுன்னா பே பண்ண முடியும். Where do I pay this tax from? My kidney. Then I get from the company. We'll go to the company and come and say, Unnalada and tax pay pandra, adnala you pay it to me, correct? The company will come and say, tomorrow I'm going to repay the loan, which means 20% if I give you today, next 100% I have to give back to the company, and the tax any loss up uchala. How is the loss? Correct. Taxable in the hands of whom? Company. Yarra company? Private company. அதான் நீ சொல்றல அந்த கன்சர்ன் will come and say, டேய் உன்னால தான் எனக்கு டாக்ஸ் வருது, நான் எதுக்கு டாக்ஸ் பே பண்ணணும்? கரெக்ட்டா? What is the right answer? What is the right answer? இந்த லாஜிக் யோசிக்கவே இல்லல. That and all is never happening. That and all is never happening. That would become DDT. It's taxable in the hands of bank. இந்த கையில காசு கொடுத்தா தெரியல. ICI also does not know. ICI also does not know. They also do not know whom to tax. They simply came and said it is taxable. They simply came and said it is. Well, who do you want to pay tax on? I don't know. Don't even answer. Don't even answer. ICI பொறுத்த வரைக்கும், if in exam this question comes, you will simply say it is taxable as dividends, full stop. It is taxable as dividends. Never come and clarify whose hands. Get Tara. Question will come and say, boss, there is a loan which has come from company to the concern. Company to the concern. Is the dividend taxable? Full stop. What will you say? Yes, dividend is taxable. Full stop. That's all. Okay. Don't give extra information more than what they're asking for. That's step number 1. What is step number 1? Identify the question and its requirement. Question A asking only for whether it is taxable or not. Did they ask you whose hand taxable? Why do you want to show off? Yes or no? Practical life பொறுத்த வரைக்கும் no one knows the answer. Practical life பொறுத்த வரைக்கும் no one knows the answer. When it is taxable in the hands of shareholder, they will come and say collect from the firm. When it is taxable in the hands of firm will come and say collect from the shareholder. Both will go and fight an appeal in the court. The court will say you collect from him. That court will say you collect from him. Kadasila no one will pay tax. Kadasila no one will pay tax. No one will take the responsibility on their head. So practical world, technically this never happens itself. The only place it can happen is in ICI. The only place it can happen is in ICI. And since ICI also does not know the answer, they will also never give it to you. Simple answer is it is taxable as. Clear or not clear? Clear? Yes, this is what the provisions are. If a private company gives a loan or advance to the shareholder directly, then the shareholder should hold 10%, in which case it is taxable. If they do not give it to the shareholder directly, but give it to a concern in which the shareholder has a substantial interest, then also it is taxable. This also did not happen. What happened is the shareholder went to the company and came and said, do one thing, boss, don't give it to me. Don't give it to a concern. Go and give it to my wife. She is going to get the loan for my benefit. Correct? She is going to get the loan for my benefit. Income tax came and said, boss, if you are going to give the loan to someone else, for the benefit of the shareholder, then also it is taxable as dividends. In whose hands? You don't know. Whose hands? You don't know. It is taxable. Full stop. That's all. Okay. Yes. So it is taxable as dividend. That's all. Full stop. Okay. Whose hands and all? I don't know. It is taxable. That is all the answer. Clear? This is what the provisions are when it comes to dividends. Just to clarify to you, whatever dividends we earn will only be taxable to the extent of accumulated profits of the company. First, do you give dividends from losses or you give dividends from profits? So they came and said, do one thing. Go and check the P&L of the check the balance sheet. Sorry, not the P&L. Check the balance sheet of the company. In the balance sheet of the company, you have something called as reserve and surplus. to the extent of reserve and surplus is only you can give us dividends. You can give us dividends. If the reserve and surplus is 0, dividends will be 0. If the reserve and surplus is negative, dividends will be dividends will be 0. Dividends will be 0. If the reserve and surplus is 1 lakh rupees, you are planning to give a loan of 2 lakh rupees. Planning to give a loan of 2 lakh rupees. Dividend taxable is clear. Clear. Yes. Any doubt? No? Clear? This is what the provisions are. This is what the provisions are. Just be careful. Reserve and surplus is 1 lakh. Reserve and surplus is 1 lakh. Shareholder is holding only 10%. Shareholder is holding only 10%. Can you come and say, boss, out of the reserve and surplus of 1 lakh, only 10% is my share. So dividend in my hands to be taxable is only 10,000 rupees. Follow mudiyama? Mudiyadu. Income tax comes and says, I don't care. Income tax comes and says, I don't care. If the reserve and surplus is 1 lakh, even if you hold 10% or you hold 50%, full 1 lakh will become taxable in your hands. Full 1 lakh will become taxable in your hands. Shareholding percentage is not relevant. Shareholding percentage is not relevant. It is only relevant to check whether it is dividend income or not. To check whether it is dividend income or not. How much is the quantum to be distributed to him will never be checked. Will never be checked. Clear? Not clear?
Yes, sir.
Clear? Yes. 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 This is the end of the provision. This is the end of the provisions. With this, we come to an end of IFOS. We come to an end of IFOS. Let's quickly do the sums. Shall we read? Yes. Yes. Examine the following transaction in the context of Income Tax Act 1961. Mr. B has transferred 500 shares of R Private Limited to Mrs. MS B Co Private Limited. Who is Mr. B? He is the current shareholder. He is transferring shares of R Private Limited to B Private Limited. R Private Limited to B Private Limited. There is a B. He is going to give it to B Co. He is going to give it to B Co. What is he going to give to B Co? R Co. He is going to give to B Co R Co. On 10/10/2022 for 3 lakh rupees. When the market price of the share is 5 lakh rupees. When the market price of the share is 5 lakh rupees. Market is quoting 5 lakhs for this share. I have given it for 3 lakhs. Where are we? We are in gift. The index cost of acquisition of the share for Mr. B is given as 4,45,000. The transaction was not subjected to securities transaction tax, meaning this is LTCG under 112. LTCG under 112. You are required to determine the tax in the hands of Mr. B and B Co Private Limited because of the above transaction. What is happening? First, B is selling the share. Next, B Co is receiving the share. Is R Co relevant here? No, R Co is not relevant. It's just the underlying asset. Ignore it. Come to B Co. B Co is selling the share, meaning for him the income will be taxable under. Income will be taxable under the head. B income taxable under the head. What is B Co here? The current shareholder. What is he doing? Selling the shares. Capital asset, not a capital asset. Income taxable under. Hey, golden rule number. 4 5. After 3 classes also, if this is not in your head, then exam is not in your head only. 4. If you can't classify your income even now, gone only case. For B, this is taxable under capital gains. How does the provision work like? FPOC, correct? What is the FPOC? What is the FPOC? 5 lakhs or 4 lakh 45? Sorry, 5 lakhs or 3 lakhs? Sorry. 5 lakhs or 3 lakhs? 5 lakhs. It is 5 lakhs. Section 50 CA comes in. Section 50 CA comes in. Not 50 CA, sorry. 50 CA. Section 50 CA comes in where it comes and says if it is an unquoted share. If it is an unquoted share, you need to sell it at minimum of fair market value. If you don't sell it at minimum of fair market value, FMB will treat it as your FPOC. So therefore, FPOC will become 5 lakhs less ICOA. What is ICOA? Index cost of acquisition. Vessel மொட்டையா கொடுத்திருக்காங்களா இல்ல நீ கம்ப்யூட் பண்ணுமா? கொடுத்திருக்காங்க. Number is 4.45 lakhs. So therefore, LTCG under section 112 will be 55 lakhs. Correct? Yes or no? LTCG under section 112 will be 55 lakhs for whom? For B. I don't. 55,000. Yes. Next person is your BCO. Now, what is the BCO doing? BCO is receiving share at good consideration, inadequate consideration. Taxable under the head IFOS. You should have received it at what consideration? 5 lakhs. You received it at 3 lakhs. Difference is 2 lakhs. With the difference being 2 lakhs, more than 50, less than 50. More than 50. Amount taxable is 1 lakh 50. Correct? Fully na 5 lakhs. IFOS income taxable is 2 lakh rupees. IFOS income taxable is 2 lakh rupees. Cost of acquisition for BCO will become 5 lakhs. How did you get this 5 lakhs? 3 lakhs was the consideration he paid. 2 lakhs is what is taxed as IFOS. Therefore, the final income becomes 5 lakhs. Please understand, people. Question is coming and saying, what is the income chargeable to tax? What is the income chargeable to tax? They want you to tell the all considerations. Whatever is the tax implications, everything has to be clarified to them. Which means if you don't clarify the cost of acquisition in the hands of BCO, that also will lose marks. That also will lose marks. You have to give all the implications. First implication is from the hands of B in the form of capital gains. Second implication is in the hands of BCO in the form of IFOS. Third implications in the hands of capital gains as a cost of acquisition. Clear? Not clear? A provisions purida. Any doubts? No? Come to the next one. Mr. Shejian is employed in a company with a taxable salary income of 5 lakhs. Question to you. Standard deduction. Kudukunama kudukudada. Kudukunama kudukudada. Kudukudada. No. Word itself clearly says. Word itself clearly says it's an income, which means it's already allowed for standard deduction. He received a cash gift of 1 lakh from Atma Charitable Trust in December 2022 for meeting his medical expenses. Is the cash gift so received taxable in the hands of Shejian? Yes or no? Yes or no? No. Why? T. The T, trust. If you receive any gift from a trust, will become not taxable. Become not taxable. Okay. When it comes to gifts, I follow 3 steps. When it comes to gifts, I follow 3 steps. Step number 1, identify whether it is an asset or not. Identify whether it is an asset or not. There are 3 assets. It should be either a money, it should be either specified, or it should be immovable. What is the first step? Identify whether it is 3 assets or not. Step number 2, identify whether it is taxable or not. Meaning, it should not fall within dirt min clot. Not fall within dirt min clot. If none of these satisfy, then check for the 50,000 or 110% limit. Then check for the 50,000 or 110% limit. In this first scenario, you got money. Money is covered under step number 1. Step number 2, whether it is taxable or not, it is not taxable because of dirt min clot trust. Therefore, you ignore the provision. Follow the step religiously. Answer will always come out. Clear? Yes. Third one. Akhil received 75,000 in cash from niece of Akhil. Akhil is the karta of HUF. Akhil is the karta of HUF. Step number 1, identify whether it is an asset or not. Is it an asset? Cash is an asset. Therefore, covered in step number 1. Step number 2, check whether it is an taxable limit or not. We are into relatives now. Who is receiving the gift? HUF is receiving the gift. For an HUF, relative is any member of HUF. For the HUF, relative is any member of the HUF. And I think I clarified to you, HUF is you become a member of the HUF provided you are born into the family or brought into the family. You are born into the family or brought into the family. Who is given the gift?
Niece.
Daughter of Akhil. Akhil's sister. Akhil is the owner of the HF. Akhil is the owner of the HF. Sister of Akhil. Is she part of HF? Akhil's sister, is she part of HF? Yes, she was also born into the family. She was also born into the family. Daughter of Akhil's sister, is she part of the HF? Is she the part of HF? No, because sister got married, went into another family. Sister got married, went into another family. Daughter is a part of another family. Daughter is a part of another family, which means, is she part of this HF? If she is not a part of this HF, will this become taxable? Yes or no? Yes. So step number 2 covered. Step number 2 covered. Step number 3, check for the limit. The limit is 50,000. Here the limit is 75,000. Therefore, income taxable is fully taxable. Fully taxable. Let's change the question. Let's change the question. It is not Akhil's sister's daughter. It is Akhil's brother's daughter. Akhil's brother's daughter. Taxable, exempt. Taxable or exempt? Exempt. Why? Brother is the part of HUF. The daughter of brother is also part of HUF. Therefore, it becomes exempt. Please understand, the gift is received by the HUF, not by Akhil. If the gift was received by Akhil, brother or a daughter would have been taxable. Brother or a daughter would have been taxable because from an individual capacity, she is not a relative. From an individual capacity, she is not a relative. From HUF capacity, she is a relative. Please be very careful about who is receiving the gift. In this scenario, HUF is receiving the gift. Therefore, she is a relative. If HUF was not receiving the gift, but Akhil would have been receiving the gift, this would have also been taxable. Yana, it was a nephew. It was a nephew, would have been taxable. Clear? Not clear? Clear? Be careful about these provisions. Okay. Mr. Akshat has received 100 shares of A Limited from his friend. From his friend on the as the gift occasion on his 25th marriage anniversary. He has received what? Shares. He has received shares. First step, taxable, not taxable. Taxable. It's a specified mobile asset. Step number 2, received from friend. Related, not relative. Not relative. Then, is it in account of marriage? No, which means not exempt there also. It is a marriage anniversary. So step number 2, all conditions not satisfied. Meaning still taxable. Meaning still taxable. Now you need to check for the number. Now you need to check for the number. We don't know what the number is. Let's figure it out. The fair market value of the share is given as 100 per share. You gave one share as 100 rupees. 100 shares is what you have given. Total number of shares is 10,000. Total number of shares is 10,000. Taxable, not taxable. As of now, not taxable because 50,000 is the limit. As of now, not taxable because 50,000 is the limit. Next step. He also received jewelry worth 45,000 from his nephew. From Yarin? Nephew. Whoever. It is your siblings' kids. It is your siblings' kid. Siblings' kid. Covered, not covered. Covered. Meaning this income taxable, not taxable. Why? Because it is a jewelry specified mobile assets not covered under relatives and the number is 45,000. And the number is 45,000. 45,000 standalone not taxable. 10,000 standalone not taxable. But both are specified mobile property. So you will add together. You will add together. Add together it becomes 55,000. Therefore income taxable is. Okay, clear? Looks easy now? Yes. Next one. Kishan HUF gifted a car to the son of Karta for achieving good marks in 12th standard board. Who has received the car? HUF, student, kid. Kid has received. Individual, HUF. Individual has received the gift. Individual has received the gift. The fair market value of the car is given as 5,25,000. Amount taxable is 5. Very good. Very good. Step number 1 is to identify the asset. Asset here is car. Does it fall under the 3 brackets? No. With the asset not falling into the 3 brackets, amount directly becomes. What I said, no, you follow the steps religiously, answer will automatically come out right. Okay. Yes, next one. A sum of 1,20,000 was received as gift from non-relatives by Raj. By Raj. A sum of 1,20,000 was received as gift from non-relatives by Raj on the occasion of the marriage of his son Praveen. On the occasion of his marriage of his son Praveen. Question number 1. Asset covered, not covered? Covered asset. Question number 2. Is it exempt, not exempt? Why? Very good. The asset should have been received by the person who's getting married. The asset should be received by the person who's getting married. Here, the asset is received by the father of the person who's getting married. Therefore, not exempt. Therefore, not exempt. Number is 1,20,000, which is beyond 50,000. Amount taxable is full 1,20,000. Exemption only applied for the person who receives the gift. Exemption only applied for the person who receives the gift. Next one. Cash gift of 51,000 received from the friend on the occasion of her Shastipata Purti, a wedding function celebrated on her husband completing 60 years of age. Taxable, not taxable? Why? It is more than 50,000. It is money and not received on marriage. Received on anniversary. Received on anniversary. Diamond necklace worth 2 lakh rupees presented by sister living in Dubai. Why? Very good. Understand, although it is an asset, it is received by a relative, which is your sister. Therefore, amount becomes fixed deposit assigned in favor of Mrs. Hemali, held in a scheduled bank. Value of the fixed deposit and the accrued interest on the said date was 52,000. See, here is where the challenge comes. Step number 1 is to understand what is the asset. Here the asset is a FD. Here the asset is an FD. There are two schools of thoughts. One is where they come and say, boss, you look at FD as this. You look at FD as meaning FD itself is an asset. If you look at the FD as an asset, then in that case, it does not fall into any of the three. Therefore, amount will become zero. Option number 2, you come and say, no, boss, essence of the FD is what? Money. In which case, you have to look at the money element. If you look at the money element, it is covered in first one. You have your choice. You can choose any of the two. My preference to choose money. Because at the end of the day, in the asset is going to get matured only. See, if you give an asset as such, it is your option to sell or not. But when you give an FD, what happens? You mandatory will get it matured. Kaila kaas varudhaan porudu. Therefore, my preference is to take it as cash. With the cash amount being how much? 52,000. Who has received it? Mrs. Hemali. Where has she received it from? Nothing is given, which means nothing is covered. Everything is taxable. Amount becomes 52,000. Clear? Next one. Mr. A dealer in shares, has received from his friend C, who is also a dealer in shares, 1,000 shares of X Limited on 19th June 2022 at rupees 400 each. The fair market value of the share is given as 600 each. Mr. A sold the shares in the course of his business. Inadequate consideration in the taxable then. Very good. Understand, we are into IFOS. Question on the top itself comes and says, what are the transactions in the Income Tax Act? And here it somewhere says, what do you say? Achha, I forgot to say it. My mistake. The question was, what is the IFOS income taxable? What is the IFOS income taxable here? Zero. Why? It is not a capital asset. I told you when it comes to IFOS income, what is covered is the asset received in the form of capital nature. Because if it is an asset received in the form of stock in trade, it goes in tax under PGBP. Whether this transaction is taxable or not, yes, it is taxable, but it is taxable under PGBP. Under IFOS, it is zero. Clear, not clear? Clear? Next one. On 1st November 2022, Mr. A took possession of a property booked by him 2 years back at 20 lakh rupees. The consideration in this case would be 20 lakhs. The stamp value of the property on 1st November was 32 lakhs. On the date of booking is 23 lakhs. It was 23 lakhs. Today when I took the property, it is 32 lakhs. He paid 1 lakh rupees by account pay check as on the date of booking. You have been given two stamp duty values. Which one to consider? Five. There are two conditions. Generally, you should take the stamp duty value as on today. Generally, you're supposed to take stamp duty value as on today, but you can take the stamp duty value on the booking, provided two conditions are satisfied. Condition number one, that day you took the property on booking, meaning you paid token money. You paid token money. Token money is nothing but advance. Token money is nothing but advance. Second condition, you should be able to prove to the assessing officer that you gave a token money. You're able to prove to the assessing officer you gave a token money. Tomorrow you gave cash, will you be able to prove? No. Which means the only way you'll be able to prove is by permissible modes. Is by permissible modes. Permissible modes means account pay check, account pay draft, electronic clearing system, or any other prescribed modes. Two conditions given. You have to satisfy both the conditions. If you satisfy both the conditions, I will take the stamp duty value on the date of booking. If you don't satisfy any one condition, I will take the stamp duty value as on the date of registration. In this case, you have given token money, yes or no?
Yes, sir.
Have you given it by permissible mode? What is the permissible mode? Account pay check, meaning you can take the stamp duty value as on booking. Number is 23 lakhs. Your consideration is 20 lakhs. Your SDV is now 23 lakhs. Is it taxable? Not taxable. Taxable? Not taxable. Why?
More than that.
Check two conditions. First condition is it should be within 110% of consideration. 20 lakhs to mala 110 pota, it will become 22 lakhs. Is stamp duty value within 110%? No. Which means condition number one violated. Condition number two, the stamp duty value and the actual consideration difference should be less than 50,000. In this case, the difference is more than 50,000, which means both the condition not satisfied, amount will become taxable. Amount taxable is 3 lakhs. Clear?
Yes, sir.
Clear? Everyone here? Yes? Shall we go to the next one? Yes. Mr. Arun received an advance of 56,000 on 11th September 2022 against the sale of his house. However, due to non-payment of installment in time, the contract has been cancelled and the amount of 56,000 has been forfeited. This is your forfeiture of advance money. Taxable under the head. I. It is received after 2014, therefore it becomes fully taxable under IFOS. Yes. Next one. Mr. Tanmay gifted a refrigerator to his sister's daughter Tannu on her marriage. The fair market value of the refrigerator is 75,000. Amount taxable is why? It is not because of marriage. It is because of It is not because of marriage, it is because of your refrigerator. It is because of your refrigerator. I told you to follow the steps. Step number one is to identify asset. Identify the asset first before you get into the non-taxability. Okay. Always follow the rules, people. It is important. You miss on the step, answer will go for a toss. Okay. So therefore, first step is to check for an asset. The asset is your refrigerator. Refrigerator is not a movable property specified under Income Tax Act, and therefore it becomes exempt. Here, next one. Post Office Savings Bank interest of 19,000 is received by assessee resident Ram, aged 46 years. Amount taxable under IFOS is how much is the amount exempt? 3,500. 19,000 minus 3,500 will become 15,500. இப்போதானே ரிவைஸ் பண்ண அதுக்குள்ள போச்சா? Shall we? Mr. Hari is the property dealer, sold a building in the course of his business to Mr. Rajesh, who is a dealer in automobile spare parts. The person giving the property is a property dealer. For him, it is a stock in trade. He has given it to Rajesh, who is a dealer in automobile spare parts, which means this person is going to hold this asset as a capital asset. He's going to hold it as a capital asset. He got this asset from him for 90 lakhs as on 1st January 2023. When the stamp duty value was 150 lakhs. The agreement was, however, entered on 1st September 2022 when the stamp duty was 140 lakhs. You will consider which of the two? Check the conditions. Mr. Hari had received a down payment of 15 lakhs. Did he give token money? Yes, but he gave this money by cross to check. Allowed, not allowed? Allowed, not allowed? Allowed, not allowed? Not allowed. Not allowed. Only three modes are permitted. Account pay check, account pay draft, electronic clearing system, other permissible modes. Cross the check, bearer check and all not covered. Cross the check and bearer checks are not covered. These are non-permissible modes. These are non-permissible modes. Since the condition is not satisfied, stamp duty value now is 150 lakh. Correct? Huh? Yes. You are required to discuss the tax implications in the hands of Hari and in the hands of Rajesh, assuming Mr. Hari had purchased the building for 75 lakhs. First of all, for Hari, this is taxable under the head. This is taxable under the head by the asset is a stock in trade. The asset is a stock in trade. Therefore, it will be taxable in the hands of Hari under the head. For Hari, FVOC is, what is FVOC, people? For Hari, what is FVOC? என்னம்மா யோசிக்கிறீங்க அவ்வளவுதான் இதுக்கு யோசிக்கிறீங்க 150 lakhs 150 lakhs why because you should treat it as minimum of stamp duty value or the actual consideration. Your stamp duty value is more by 110%, more by 110%. Therefore, that becomes the actual consideration. What is the cost of acquisition? What is the cost of acquisition? Huh? 75 lakhs. 90 is what you're giving it to him for. 90 is what you're giving it to him for. 75 is what is your cost of acquisition. Question to you: should you apply indexation? Should you apply indexation? Huh? Hey, you are under PGBP. Lose. Indexation only comes under the head. You are under the head. Engel in the indexation. That's step number 4. If you classify properly, only step number 5 will come out properly. Step number 4 was PGBP. Upon step number 5, like cost of indexation cannot happen itself. Yes or no? More care we get 75 lakhs becomes your PGBP income. 75 lakhs becomes your PGBP income. Clear? Yes, this is in the hands of Hari. Now you are in the hands of Rajesh. Now you are in the hands of Rajesh. Taxable under the head. Huh? Taxable under the head. You are receiving. So therefore, it is under IFOS. Under IFOS, you need to check for which of the 3 immovable property. In immovable property, you have inadequate consideration, nil consideration. This one is inadequate consideration. Meaning now you need to check for 2 conditions. Condition number 1, check for 110%. Here the consideration is 90 lakhs. Stamp duty value is 150 lakhs. 90 lakhs to 110 potalo 99 which means it is more. Condition 1 not satisfied. Condition number 2, it should be less than 50,000. Here the difference is 60 lakh rupees. Therefore, none of them satisfied. IFOS income taxable for you will become done. Would your answer be different if Hari was a share broker instead of a property dealer? Why? Will it change for Rajesh? Will it change for Rajesh? No. Will it change for Hari? Yes. What will happen? This will now become. Will this become in CG? Can you claim indexation? No. Again, it's short term. When did you get the asset, people? 12th July 2021. Asset has to be long term only after 24 months, which means 12th July 2023. You are on 1st January 2023. 1st January 2023. Have you satisfied 24 months? Therefore, this is a short term, and indexation will not be applicable. PGBP will change and become short term capital gains under section. One money is for share market income. One money is for share market income. Sorry, da. Triple one, 111, triple one is only for share market income. Triple one is there only for share market income. Therefore, short term capital gains will go under slab rate model. Will go under slab rate model, meaning as per finance. Meaning as per finance. MLX Investments Private Limited was incorporated during the previous year 2021, having a paid up capital of 10 lakh rupees. In order to increase its capital, the company further issues 1 lakh rupees, having face value of 100 each. Face value is given as 100 rupees each during the year at par. On par, you have given it at 1 lakh rupees face value, 1 lakh shares of face value 100 each, of face value 100 each. The fair market value of the share is given as 85. Fair market of the share is given as 85. You are required to determine the tax implications of the above transaction in the hands of company, assuming it is the only transaction during the year. What is the tax implications? What is the tax implications? What is the tax implication? Number क्या? Why?
Because it's not going to
Which section are you in? Are you in the premium section or are you in the gift section? Which section are you in, people? You are in the premium section. You are in the premium section. What is the tax implications in this? What is the tax implications? Amount to taxable is 0. Why? Shares are issued at par. Shares are issued at par. In the hands of the company, the shares are issued at par. Therefore, the tax implications is 0. Okay, first to properly understand which section are we in. Okay, everything does not become gift. Okay. Next one. Will your answer change if the shares were issued at 105 each? Will your answer change? 5. Now it is issued at premium. Face value is given as 100. Issue price is given as 105. Fair market value is given as income taxable under IFOS is I gave you 3 numbers. Tell me the number. 20. What is 20? Issue price minus fair market value. Issue price minus fair market value. Number becomes 20. Number of shares is 1 lakh. Therefore, it is 20 lakhs. Yes. Last one. What will be your answer if the shares were issued at 105 and the fair market value is 120? Now fair market value is 120. Amount taxable under IFOS is why? There is no income for you. Market itself is quoting at 120. You have received lesser than the market itself. No income for you. Therefore, amount becomes done. Purida. Yes. Look at the question properly, people. If you see the question where it is a private company and they use the words premium, par, issue price and all is coming in, gift is not the answer. Gift is not the answer. Gift only comes when you're taking that share and someone else gives it. You remember the example where we said B is going to give shares of R co to B co. There are 3 people involved. That's where gift comes into picture. Here only 2 people are there. Who are the 2 people? Company and the shareholder. In this case, only 2 things can apply. Either it will be the premium one or it will be the deemed dividend one. Be extremely careful about it. Okay. Last one. Rahul is holding 28% of equity shares in a company and has taken a loan of 5 lakhs from the same company. On the date of granting the loan, the company had an accumulated profits of 4 lakh rupees. The company is engaged in some manufacturing activity. You are required to tell whether the amount of loan is taxable as deemed dividend in the company. If the company is a company in which public are substantially interested. Abhina, is it a closely held company or a widely held company? Widely held company. If it is a widely held company, is there any tax implications? Is the question. No. What would be your answer if the lending company is a private company? Yes, and not. It is taxable. What is taxable? 4 lakhs is taxable as deemed dividend under section 222E. 222E. How do you read? 2. Clause 22. It is taxable as deemed dividend under 2 clause 22 subclause E. Amount taxable is only 4 lakh rupees because the accumulated profit is only 4 lakh rupees. Clear? Done. With this, we are done with the chapter called as IFOS also. Any doubt before we go to the next one? No? 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 Done? Which chapter do you want to do, people? Someone called me? Tell me. Yes. Entering one of the biggest chapters of this subject called as kind of a mixed review for me when it comes to salaries because I feel it's tough. For the simple reason that I feel too much to mug up. That's all. Okay. Because PGBP also it might be lengthy, but at the someday you can understand the logic and you can work it out. Okay. But the problem with salaries is there's no logic for me to give to you also. Most of the things are to mug up. So if you're able to mug up things good enough for you, you can go and write your exam properly, or else it becomes a challenge. Having said that, also salaries is not as important as PGBP because when it comes to your full-fledged question, what they check with you is only PGBP along with your other sections. Okay. Salary comes as the third or fourth question. It comes as a third or fourth question. It's an optional question. Unga salary go to seventh question, write the theory part and come back. Okay. Having said that, yes, salaries will not be the toughest thing in your subject because there is some other chapter called as TDS. There is another chapter called as TDS. So you need to make a choice between salaries or TDS in the exam. You need to make a choice between salaries or TDS in exam. Technically, I would prefer TDS more. No? Salaries are 8 marks compulsory now. If TDS easy, good enough. See, honestly, yes, TDS is actually easy. Because there are only certain sections to remember. And most of the rates are the same. If you get the flow of the understanding, you'll automatically get the answer. Okay. And pretty much in exams, they will apparently give it to you. Okay, that is how that apparent it will be. So generally speaking, TDS is easier. The reason I'm preferring having the answer solved of TDS more is because TDS will only be first subdivision. There will be a second subdivision in that, which will technically be your clubbing or it be set off. Either be your clubbing or set off, and that is in score away paper. Okay, that is not a chapter you can leave and go. But when it comes to salaries, this will come as a full-fledged question. Meaning this itself will carry your 8 to 10 marks. Okay, so you need to make that kind of choice in exam. How do you understand what choice to make? Practice. That's all. Okay. After you get over with this class, if someone has this thought, Rahul, you've given me the question bank, I will just prepare this question bank and write my exam. No. Please understand this question bank is prepared in a chapter format. So which means you will at any given point of time know which chapter you're looking at and how to solve the question. And we are pretty much solving all the questions. The trick will happen after you sit on an actual paper. Main mistake which most of the people do is they go to the exam hall preparing only from their own question banks which the faculty taught them. And that's where you lose the marks. Because the moment you enter the exam hall, the paper pressure will be very different. Because you don't know. Suddenly you're looking at question number 1 talking about PGBP, question number 5 talking about TDS. Whereas in your question bank, you would have done it in sequence. Yes or no? That pressure itself will be very different. Okay. And the problem which most of the people have is they are not ready for the exam because they don't know how to answer the paper. They don't know how to answer the paper. My recommendation, if you're done with the crash course, the recommendation was not that you take this question bank and complete after we're done with the class. No, it was what to do. You were doing it in this same day. You were supposed to do it on the same day. Today you learn it from me. Evening you complete the question bank. Evening you complete the question bank. By the time the chapter batch is over, take 1 week's time, prepare for this income tax, write a paper. Because we have properly structured in such a way that by the time you're done with this batch, your mock test paper would have started. Yes, sir. By the time you're done with this batch, take 1 more week, mock test would have started for you. Okay. That is the whole thought of action when we did this fast start thing. So by 13th, your mock test would have started, your direct tax paper would be ready with you. Your thought is very simple. Take 1 week's time, prepare, and next minute you should write the mock test paper. Get the hang of how the paper looks like. First time you will fail. It is supposed to happen. First time you will fail. That is when you will realize what kind of chapters you don't know, what are the mistakes you're making, and how to solve it next time. That is when mock test 2 will come in April. Mock test 2, you will somehow try to pass. By the time you are ready with mock test 2, your exams are ready, and in exams you will pass. First paper is supposed to be failed. And the problem is you're failing that first paper in your exam. Never experiment with your exam paper. Okay? Never experiment with your exam paper. Get that feel pressure first. How an exam paper looks like. How do you need to judge yourself? Because in an exam, you have been given this problematic scenario where you have been given a choice. They will not give you exactly 60 marks. They'll give you 69 marks or 70 marks or 68 marks. I don't know what number they'll give you. Okay, they'll give you that 68, 69 marks and they're telling you to make a choice. So the problem with you is if you don't make the right choice, your answer is anyway gone. And you will only learn to make a choice after you read the proper exam paper. So you need to get that feel. Okay. I'm telling you this right away also because we have done 2 classes right now. And I still notice a lot of people have not practiced their question bank even now. Okay. Don't make that mistake. You've already made that kind of mistakes. That's why you're sitting in this batch right now. Yes or no? You've already made those kind of mistakes. That's why you're sitting in this batch right now. If you have chosen to come to this batch, come at 7 o'clock in the morning and spend the time along with me looking at my face, at least think that kind of pressure happening on you. Okay. This should be the last time you're writing this exam. Never come back to me next November and come and say, Rahul, I liked your class so much, I'm coming back again. I'm not interested for it. We will want to do it together. We'll do it in finals together. Okay. But Inter is not the place I want you to be coming back to. Clear? Yes. Please start practicing right away. The reason I'm giving you the answers alone and not the solution is because I want you to practice right away. Don't procrastinate and wait for another time to come. The other time will be another attempt only, nothing else. Okay, so you complete the class today. Next class is only on Saturday. This next class is only on Saturday. You have a good amount of Thursday, Friday, 2 days are there, and we are not completing too much also. Please practice all your solutions. Before you come for the Saturday's class. Keep it ready so that by the time we complete our batches, you are already done with the question bank and the subject also. The only thing left for you is to revise. For those who are thinking right now, Rahul, you're only giving me the solution. There is no step format and all. Don't worry. After this batch gets over, somewhere the last 3 questions are your full-fledged questions. Last 3 or 4 questions in your question bank will be your full-fledged question, which will be around 12-13 marks. When we are doing the 12-13 marks, I will prepare the sum for you. Okay, that is the time we'll do the full sum. That is not the time I'll give you the answers alone. I'll give you the full sum. We will sit and solve the full sum together. That is when you will understand how the format should look like, what is the steps to be followed, and how should you present your exam. Until then, these 1 mark questions and all is not something I want to waste time and put a provision because there's no use to it. It is not coming straightforward in an exam. Clear? Don't worry. I know how to take a batch. I will complete the batch in all satisfactory mode. Okay. I know how to complete all the batch in the most satisfactory mode. Batch mudichidukapra, if you have a complaint, come and let me know. We will discuss about it. Batch pour the mode, trust me and go. Okay. Yes. Have I given any complaints in the last 2 days? Let's go with that. We are into the chapter called as salaries. We are into the biggest chapter of the CA Inter syllabus and only CA Inter syllabus because it is not there in finals. It is only there in Inter syllabus, which means it's the one and the last place you are going to learn it. After you qualify, you will definitely come back to it. But until then, this is the only one and last place you learn it, and the only one time you'll write it is May 23. The only one time you write it is May 23. Yes, in the chapter called as salaries, first thing you need to understand in this chapter is the charging section. Chapter has a charging section. Charging section comes in this because it is taxable only when there is an employer-employee relationship. When there is an employer-employee relationship. In a very crude sense, it should be a master-servant relationship. What? Relationship. I should be your servant. I should be your servant. Then only it will be called as salaries. Then only be called as salaries. Second thing, I should give you this whatever money I'm giving you because of your relationship. Because of your relationship. Tomorrow, if you're getting married and I suddenly come to your wedding hall and I come and give you something as a gift, will it be taxable under salaries? No, it will not be taxable under salaries. It is not given on account of that consideration. It is not given on account of that consideration. Keeping said in mind, we have something called as employer-employee relationship. So the question to you is, if you pay any salaries to your partner, will it be taxable under salaries? Why? Because the employer also is partner, the employee also is partner, cannot be the same person. Therefore, it will go under the head PGBP. If you are paying any salaries to the members of parliament, by same thing. Modi is not my servant. Same thing. Modi is not my servant. He is a representative of India. Tomorrow I cannot call and come and say, Modi, come and make tea for me in my home. Not happening. Okay, no tea and all happening for me from Modi Sarkar. Okay, so therefore it is taxable under IFOS. Why not PGBP, people? Ideally, legally, it is not a business for them. Ideally and legally, it is not a business for them. They are trying to develop India. Trying to develop. Okay, they are trying to develop India. I am not saying they're developing India. I am saying they're trying to develop India. What is happening on the back end is not what I will discuss. Okay, I don't care what is happening on the back end. It is not you and I discussion. For income tax purposes, for your CA inter purposes, any kind of salary paid to members of parliament will be taxable under. Clear? Any salary given to chief ministers, same thing only. It will all be taxable under. Clear? This is what the provision is. Having said that, we need to now understand how does the taxability work. They came and said, was salary is taxable on due or payment, whichever is earlier. Due or payment, whichever is earlier. If you give them earlier, if you give them advance salary, it is taxable as advance salary. If you do not give them salary and give it in the next month, I will tax it in the same month. It is taxable on due or payment, whichever is earlier. Having said that, please understand what I will tax is only the salary given to you as advance. What I will not tax you is the loan given to you in advance. Simple example. If I come today and I come and say, Rahul, I am in need of money. Next 2 months of salary you give me today itself. This will be taxable when? That is what the problem is. Understand? I am only giving him a loan today. Tomorrow, if I choose to quit the company, will he recover the money? Not recover the money. Tomorrow, if he chooses to quit the company before serving for the next 2 months, will you recover the money from him or not recover the money? Which means technically, is this an income for him? No, because it is merely a receipt. It will only become income after he serves then that jump. After he serves for that month, correct or not? This is not an advance salary. This is an advance loan. In this scenario, it will be taxable only on due basis. Purida, Puridian. Rahul, what is the example where it is taxable on advance salary? It is very simple. You can come and say, boss, for you to work in the month of May, I will give you the salary on 1st May itself. For you to work on the month of May, I will give you the salary 1st May. It is basically me coming and saying, first you pay me the money, then only I will work. This is called as advance salary. In this case, it will be taxable on 1st May. Because you are anyway going to work for the full month, basis that payment. Which means technically you got the payment and then you service. Yes or no? This is a salary. In my example, what happened? It was not obligated for me to give you the 2 month salary. I made a special request to you and that's why you gave me that 2 month salary in advance. This will only be taxable on due basis because tomorrow if you leave the company and go, I have the right to recover it from you. Rahul, what if you did not have the right? No problem. The day when you realize you don't have the right, that is an income for him. That time it will become salary. Okay. Until you have the right to recover, you will not treat it as clear, not clear. Clear. So it is taxable on due or receipt, whichever is earlier, but only if it is an income. Only if it is an income. If it is a receipt in the form of a loan, it is not. Clear, not clear? Yes. Question number 2. Today you. Hey, don't push. Where was I?
You are
Advance salary is over. After that, we were discussing what happens if you, for example, receive a salary today of 10,000 rupees. Receive a salary today of 10,000 rupees, and 2 months later they came and said, boss, do one thing. I will change your salary retrospectively. I will change your salary retrospectively. From January itself, your salary has now become 12,000 rupees. From January itself, your salary has become 12,000 rupees. That extra 2,000 rupees of Jan and Feb, I will pay in the month of March. I will pay in the month of March. 6,000 I received in the month of, not 6,000, 4,000 I received in the month of March. Question to you: this 4,000 is taxable on Jana, March. Jana, March. Jana, March. March. Why? Why? Did you know on January you would receive 2,000? How did you tax it in Jan? உனக்கு ஜானுக்கு தெரிஞ்சாதானே நீ அதை டாக்ஸ் பண்ண முடியும். I told you only in March that I will change it from Jan. It is due only in March. It is due only in March. I only informed you about this increase in salary in the month of March, which means I can only tax it in the month of. Clear, not clear? Yes, 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 yes. Third person. I have due to receive bonus. Due to receive. Company decided that for the year 2022-23, your previous year, for the previous year 22-23, I will give you the bonus on May 23. I will give you the bonus on May 23. For the period FY 22-23, the bonus will be received on May 23. Question to you: bonus is taxable in the year. Why? Adan due is. Adan due no. Due is 22-23 no.
It's not sure that they will. That's no surety that they will issue bonus.
For you to tax something, you need two things. One is surety, the next is amount. One is surety, next is amount. Can you tell today itself how much is your bonus next year? Can you go and tell the government today itself, sir, I am sure I will receive 2 lakhs rupees bonus. Tell my government, tell my employer to give me 2 lakh rupees bonus. You want to tax, you tax it today itself. You decide today itself 2 lakhs rupees bonus. That guy will take the 2 lakh rupees and never work for the day. Bonus is determined based on your performance. You perform good, you will get bonus. You don't perform good, that's only for you. They'll throw you out of the company. Okay. So today itself, you cannot come and decide how much is the bonus you'll receive, because tomorrow, if your performance is not good, bonus will never be due. In this scenario, you cannot go and inform it to the employee directly itself, saying that today, boss, I'm planning to give you a bonus of 2 lakh rupees. He'll come and say, if you have already planned, why should I work more for you? Correct or not? So therefore, they came and said, boss, employer should never come and disclose what is the salary bonus to the employee. He should only be aware about it when he receives. So therefore, they came and said, boss, tax bonus only on recipients. Tax bonus only on recipients. Is clear, not clear? Yes. So understanding logic is very simple. It is taxable on due or receipt, whichever is earlier. But you should have two things in mind. One is surety. The next is amount. Next is surety. First is surety. Next is amount. You should be sure that you are going to receive the money, and you should know what the money is. If you are receiving an advance loan, you are not sure of the money. That is why you are not taxing it. You are not sure of the money. That is why you are not taxing it. When it comes to bonus, you are not sure of the amount. That is why you are not clear. This is your whole summary. This is your whole summary. Whatever you see in this page is useless. Okay. Whatever you see in this page is useless. You don't have to remember anything else. Basically, I have covered everything, but okay, just to clarify. Okay. And like I have told you, in my book, whenever we start with a chapter, we always start with a format. We always start with the format. So my format is given in the next page. My format is given in the next page. I have tried to classify the format in a better understanding model because unoda class ICI study material பொறுத்த வரைக்கும் எனக்கு புரியல. I don't know how it works out. Suddenly perquisite will come in the middle, then leave encashment will come on the last stage, and then LTA will come in the very last, then suddenly they come and say gratuity is there in the middle. Sequence up on nalla pogum. Yes, the problem is not with ICI, the problem is with income tax. The problem is with income tax. What they did is they gave exemptions like that only. 10 was leave encashment, and then 10A was gratuity, and then 10A was something else. So what happened? ICI also came and said, boss, I have to follow what income tax comes and says, so they gave it in the same sequence. But it becomes difficult for you to understand. It becomes difficult for you to understand. And at the end of the day, you don't have to remember section numbers, correct? So you sequence follow panna unukku prachana illa. Correct? So I have prepared a sequence in my material. Let's follow the same sequence for a better understanding. Yes, can we read the sequence? Starts from I'll try to cover most of them here itself. Basic pay, taxable, not taxable. Next is taxable, not taxable. Okay, DA, there are two items. In terms, not in terms. In terms and not in terms. Which one is taxable? Both are taxable. There is something called DNS allowance in terms of employment, DNS allowance not in terms of employment. In the term in Dalo, it is taxable. In the term in Dalo, taxable. Apu Rahul, why are we splitting it? For your exemptions. For your exemptions. When we go to the exemptions, we'll discuss about it. Right now, it is fully taxable. Next one. There are two types of commission. One is called as fixed commission. The other is called as turnover commission. Which one is taxable? Both are taxable. Both are taxable. Which one should you consider for exemptions? Which one you should consider for exemptions? Turnover commission. Next one, bonus. Taxable on. Is the green color visible? Number bright arco. Very color maroon. Taxable on. These are the first four basic items. First four basic items not coming in exam. Not coming in exam. Comes from next one. Comes from next one. What is your first item? Allowances. What do you mean by allowances, people? Huh? What do you mean by allowances?
In addition to the basic salary, fixed amount.
What is purpose?
It's not
Criteria for an allowance is that it is monetary. Criteria for an allowance is it is monetary. Can perk be monetary? Can perk be monetary? Yes, why not? Can perk be monetary? Yes. What is the difference? Very good. Understand, allowance means I give you an amount. I give you an amount. This amount is for you. While I will tell you what this amount is to be used for, it is still your choice. While I'll tell you what this amount is to be used for, it is still your choice. You want to use it for that, you use it for this. You don't want to use it for that, you can choose to ignore. You can choose to ignore. A simple example, you have something called as child education allowance. Child education allowance. I am giving you a child education allowance of 1,200 per month, 1,200 per year. 1,200 per year. 100 rupees per month. 100 rupees per month. I am giving you 1,200 per year. I am giving you 1,200 per year in your hand. I am telling you this is for your child education. This is for your child education. You have two choices. Either you can send your child to education and claim an exemption. Or you can come and say, no, I want my child to be illiterate. I'll keep it at home. In that case, exemption will become not applicable. But can I come and penalize you coming and saying, no, I gave you child education. You should have sent your child to education. Allowances are given in your hand. You have a choice whether to use or not. You have a choice whether to use or not. Perquisite works on the ulta model. Perquisite works on the ulta model. I will give you the perk only if you use it. I will give you the perk only if you use it. The example is child education perquisite. Child education perquisite. In this case, the perquisite only come if a child is going to school. If a child is not even going to school, no perk for you. No perk for you. Allowances are something which is given in your hand and given to you as an option. Perquisite is cases where I am giving it to you only after you utilize it. Giving it to you only after you utilize it. Clear? Not clear? Clear? Yes. Yes. Keeping that in mind, let's come to allowances. Question to you. In perk, I am only going to give it to you after you utilize it. Therefore, in that, I will only tax it or I will give an exemption. I will only tax it. In coming to allowances, I am giving you the money today and then I will give you an exemption only if you utilize it. So what should I do? I should tax the full number and give you an exemption. Yes or no? In perquisite, you will tax the full amount directly. In allowances, you will tax the amount you received and exempt whatever amount you utilized. Keep this thought in mind. Keep this thought in mind. We are going into the first one called as leave. Leave, salary or leave encashment. What is the English? Okay. For those who don't know it, what is the English meaning? Explain me the logic. What do you mean by it? If I okay leave எடுக்கிறதுக்கு salary கொடுப்பாங்க. They won't give salary. It is you are given a certain amount of leaves. You have not utilized the leaves, so I am paying you money. He is like, you take a leave, I'll pay you money. நீ போறதுக்கு நான் உனக்கு காசு கொடுத்துன்னு இருக்கேன். நல்லா இருக்கா? Nice. I'll go to my company and come and say, sir, I'm going on leave today. You pay me 5,000 rupees. Point is, company has sponsored some leaves for you. Company has sponsored some leaves for you, and they have told it is good for you to take the leave for your well-being. Good for you to take the leave for your well-being. But if you choose to not take the leave, if you choose to not take the leave and work for me, whatever days you do not take leave, I will give you cashment. I'll give you cashment. This is called as leave encashment. Leave encashment. I am encashing the unutilized leaves. I am encashing my unutilized leaves. Next one. What is the English? I'm giving you cash so that you can finance your own rent. Finance your own rent. Next one. We will discuss. Now, discuss other allowances. To discuss. Next one. We are into retirement benefits. First item is break English. For their long service. For their long service. An amount paid to the employee for their long service in the company. For their long service in the company is called as gratuity. Next item. Helping you sponsor your post-retirement. Helping you sponsor your post-retirement so that you have some finances available for your retirement. Finances available for your retirement. Next one. If you choose to voluntarily resign from the company, you can claim a compensation from the company because you are voluntarily resigning. You're voluntarily resigning. Next item. In the first scenario, you were voluntarily leaving. In the second scenario, company is voluntarily making you leave. In the first scenario, you were voluntarily leaving. The second scenario, company is voluntarily making you leave. Correct? Company is forcefully making you leave. Company is forcefully making you leave. If you are forced by the company to leave, it will be called as retrenchment. Since the company is throwing you out, you can claim compensation. Called as retrenchment compensation. From exam perspective, both are not relevant. From exam perspective, both are not relevant. Next item. What fund? One of the most important from exam perspective, PF. Then superannuation fund, national pension scheme, etc. etc. Next. Leave travel concession or leave travel allowance. Break English. Foreign is not allowed. Somewhere. Official trip with family. Official trip with family. It's not. Company is not sponsoring your official trip. It's an official trip itself, it's exempt from tax. If company is sponsoring your personal trips, it is called as leave travel concession. Okay? Company sponsoring your official trips are exempt from tax. Company sponsoring your official trips are exempt from tax. If company sponsors your family trips, then it is tax, because then it is personal for them. It's personal for them. Yes, sir. It's reminded me of a joke. I'm just taking 5 minutes of your time. There was a joke. What happened is, in finance you learn. Actually, in finance you learn this. What happened is, there was a managing director of a company. There was a managing director of a company. What happened is, this managing director, whenever he used to go for a meeting, he used to carry his dog with him. He used to carry his dog for him. Yes. And what happened is, whenever he used to carry his dog, leave travel concession he was claiming for him along with his dog. Company was also coming and saying that, boss, whenever this guy was traveling with the dog, the cost was an official cost for the company. It is not a personal expense, it is a official expense, and they were claiming the full deduction. Assessing officer came and said, how the hell is the dog cost a company cost? It is nothing but a personal expense, should be disallowed. This went to the court. Managing director went and said to the court, sir, my dog is my lucky charm. Whenever my dog is with me, all meetings go successful, and we get huge revenues for the company. If the dog is not there with me tomorrow, the business will not do good. If the business does not do, the company will not do good. If the company is not doing good, the company will take a loss. If you are okay for the company to take a loss merely for that small amount of dog fees, you let me know. Who won the case? Assessing officer or managing director? Who won the case? MD won the case. They were able to prove the fact that the dog is essential component of the company. The dog is an essential component of the company. The dog illame company would have taken a loss, and therefore whatever expenses were incurred is pertaining to the business. Was fully allowed as reduction in the hands of official trip with family. Possible. As long as you can prove tomorrow that your wife is your lucky charm, I know who will do it first of all. Maybe you will say it out the face of her. You will say it to her that you are my lucky charm, but correct. Official trips with parents are all official trip with families are also possible. But can you justify to the department? That's your choice. Okay? You should personally have your wife next to you. You should come and prove it before assessing officer. She is my lucky charm. And then you have to see her face and you'll be like, okay. And the scenario then you can make a choice. Since I'm on this example, I wanted to give you another example also. There was a lawyer. These are all final level questions. There in exam. Okay. There was a lawyer. Okay. What happened is, lawyer suddenly had a heart attack. And what happened is, he went through a bypass surgery. What he did is, whatever is the cost of the bypass surgery, it was around 7-8 lakhs. He booked it in his company. And claimed a full deduction under company, said that this is an official expense. Claimed the full thing as a deduction. Assessing officer came and said, what? This is your personal expense, should not be claimed as a deduction. You know what he said? He said, sir, for a lawyer, the heart is his asset. If there is no heart, there is no lawyer. If there is no lawyer, the company does not have anything to do with me. If something goes wrong with my asset, I need to get it replenished. That's not depreciation. So I just did a capitalization on my heart by doing a bypass surgery. I did a capitalization on my heart and increased its productivity. Increase its productivity by keeping me alive. By keeping me alive. This is a fully business expense. Please allow the deduction on this. Please allow the. Who won the case? Who won the case? In this case, assessing officer won. In this case, the assessing officer won. A simple question was asked to the lawyer. Simple question was asked to the lawyer. If this is an asset, if this is an asset, first of all, value it in your books. Did you value the asset in your books? Second, companies have a choice that the assets can be disposed of. Companies have a choice that the assets can be disposed of. Are you ready to give a heart transplant tomorrow if the company asks for it? If tomorrow the company comes and says, please transplant your heart, I want to sell your asset, will you be okay for it? Will you be okay? Then it is not an asset. Then it is not an asset. I'm sorry, no deduction allowed on it. It is a personal expense. Go and claim it in your own pocket. Go and claim it in your own pocket. I will not give you any kind of. Things work very funny when it comes to income tax. Okay, what you learn in the book is all okay. What you learn in the book is all okay. What you learn in the practical world is very different. That's last first day சொன்னல. What you're learning with me is what is required for you to pass exam. Do not go and quote this in your market coming and saying Rahul thought this is the final answer. No. Because what I'm teaching is what ICI taught me. What I'm teaching is what ICI taught me. If you want to know the realities of things, come outside the class. Come outside the class, we'll go for a coffee and we'll discuss all those realities. Okay? Things work very differently in the market. Point is very simple. It could be funny in various ways. Income tax is the most interesting of the subject because you can play around in whatever scenario you want. Okay, anything and everything is possible in Income Tax Act as long as you're able to prove it properly. And the passion to prove pannitana vechiko. Dog is my related party. It is a related party. It is just your responsibility to prove it properly. In that scenario, technically speaking, the lawyer would have also won. He could have won it. Some reason he was not passionate enough to get it claimed. Passionate somehow he lost the passion and therefore he lost it. Tomorrow someone can prove it tomorrow saying that boss, my head and toe is also depreciable. My head and toe is also depreciable because I am also growing old. Correct or not? Possible, very possible. Okay. The only problem right now is we don't value humans in our business. Real life also, that's a different story, but okay. Yes, we don't value humans in our business and therefore this and all is not being covered. The day you start valuing human in your business, everything will come as a depreciation. Everything will come as a depreciation. The day that starts, things will go very different. Okay. I think in 12th standard or something, you would have learned something called as human resource accounting. There is something called as human resource accounting where they would have come and said humans are generally not valued in financials. But if you want to value humans, you should value it like this. Mechanism. It is just not implemented even now. The day it gets implemented, things will be very different in income tax. Jolly. Okay. Income tax, marriage income tax, income tax. Okay, having said that, let's come back to the subject. We are right now into leave travel concession. We are now into leave travel concession. This basically is company sponsoring your personal defense. Company sponsoring your personal. Next is called as other perquisites. Other perquisites is the biggest junk here. You have a lot of items inside it. Some examples are medical, food card, motor vehicles, sale of assets, use of assets, education, then transport facilities, concessional loans, domestic servants, RFA, very good, RFA, gas, water, electricity, transfer of immobiles, Sultan, education, Sultan. Anything else? No. This is all that is there for your. Okay, we're going to learn all that. That will be a part of your other purpose. There will be a part of your other purposes. Once you are done with your basic amounts, along with your allowances, along with your retirement, along with your purposes, you will arrive at something called as gross salary. From that, the first item to be mandatorily deducted is called as standard deduction under section 16. Under section 16, amount is. Will this be given in exam? It will not be given in exam. It is your responsibility to take care of it. You have to be extremely clear on what the question says. If the question says that this is the salary received, that is the hand receipt. That is the hand receipt. If you want to compute the income, you need to claim 50,000. You need to claim 50,000. The question clearly comes and says this is salary computed. It means 50,000 is taken care of. If the question comes and says it is income from salaries, it means it is computed. If the question comes and says I am going to pay you salary of 20,000 per month, is not included, you need to claim because it is only monthly format. You will have to convert into yearly format. That will be a receipt. That will be a receipt on which you will claim 50,000. On which you will claim 50,000. Will you be able to remember this? The first item is called a standard deduction of 50,000 rupees. The second item is called your professional tax. Second item is called your professional tax. Whatever professional tax you pay to state government will be allowed as a deduction. Third item is called as your entertainment allowance. Only allowed for the only person who can have entertainment in India is government. Yes, the only person who can have entertainment in India is government. So government is only allowed for entertainment allowance. No one else is allowed for entertainment allowance. Clear? Not clear? 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 All good? Yes. We are right now going to go into salaries. As we go into salaries, I will also be discussing 115 BSc with you. I'll also be discussing 115 BSc for you. I think in IFOS I didn't have to discuss 115 BSc because none of them is there except for that family pension thing. Family pension alone they've come and said not allowed as deduction. Not allowed as deduction. Other than and nothing else is there for 115 BSc and family pension does not come in exam, so I'm ignoring it. What is going to come in exam is salaries. So salaries order. When I discuss the provision, I will come and tell you whether it is there for 115 BSc or not. Okay. Can we start? Yes. The first four items are already done for you, which is your basic, your DNS, your commission, your bonus. I have to start from allowances. The first allowance you discuss on your screen is leave salary. The first allowance you're discussing on your screen is called as leave salary. Income tax comes and says that boss, if you are going to encash any of your unutilized leave, I will going to give you something called as leave salary. But the rule is very simple. You should encash this only after the employment is over. You should encash this only after your employment is over, meaning it is only applicable on retirement or resignation. If you receive any kind of encashment during your employment, it becomes fully taxable. Whatever amount you receive will become fully taxable. So how do you split? First split is to check whether you are receiving it during employment or after employment. If you are receiving it during employment, it becomes taxable. If you are receiving it after employment, you will come and ask yourself, are you government employee, non-government employee? Who are you? Government employee, non-government. If you are a government employee, income tax comes and says no tax for you, fully exempt. Whatever amount you received will become the full same amount as exemption. Therefore, taxable amount is zero. If you are receiving it on your resignation and you are not a government employee, I will tell you that boss, do one thing. First, tax your leave salary. From that, allow any of the four items. Whichever is lower. Four items I'm going to give you. Whichever is lower of these items will be allowed as an exemption for you. First item will be actual itself. At no given point of time can you give an exemption beyond what you have received. Therefore, the first item is actual leave salary received. Second item they've come and said was maximum exemption of 3 lakh rupees. Question to you: 3 lakhs per employment for the lifetime. It is lifetime. You can claim this 3 lakh rupees for your lifetime. Meaning, if you are in employment one, you claimed an exemption of 2 lakhs. Next employment this amount will become 1 lakh. Which means next employment you can maximum claim 1 lakh. You utilize the 1 lakh also. Third employment you will get no deduction. 3 lakh rupees is for the lifetime. Clear? Just to clarify to you, this 3 lakh rupees is the last attempt you're reading it for. When I say last, May and November. May and November is the last attempt you're reading it for. It has been amended to another number in May 24. Do you want to know? Right? So you have two amounts. First amount is actual. Second amount is 3 lakhs. Third amount is given as average salary per month into 10 months. The moment I use the word average salary, I mean salary of the last 10 months. I mean what? Take the salary of the last 10 months, find out an average, multiply that by 10. You will come and say, Rahul, average salary by is 10 months. You multiply by 10 is also 10 months. Technically, you can say salary of 10 months, yes or no? No. The reason I'm not telling it is because I need the average salary for the next computation. I need the average salary for the next computation. I'm not stupid. Okay. So the third item is what? Average salary for the last 10 months. Average salary for the last 10 months into 10 months. Meaning whatever you have received as salary for the last 10 months, you can claim it as an leave encashed. You can claim it as a leave encashment. Question to you. What do you mean by salaries? What do you mean by salaries? Income tax comes and clarifies. Salary means basic plus DA forming part. Basic plus DA forming part. Forming part of what? Retirement benefits. DA forming part of retirement benefits, or you can say DA in terms of employment. Rendu onu da. DA forming part of retirement benefits or DA in terms of employment. Add turnover. Turnover commission. 3 items. Basic, DA forming part, turnover commission. These 3 items will be constituted as your salary. These 3 items will be considered as salary. Take the 3 items for the last 10 months, divided by 10, multiplied by 10. Divided by 10 and multiplied by 10. Done. 3 items discussed. First item is actual. Second item is 3 lakhs. Third item is average salary for the last 10 months. Average salary for the last 10 months. Fourth item they are coming and saying was whatever is the leave unutilized. Whatever is the leave unutilized, you can fully encash it using the average salary of the last 10 months. Whatever is the leave you have unutilized, you can encash it using the average salary for the last 10 months. Meaning. Let's say, for example, you worked in this company for 30 years. You worked in this company for 30 years. Every year you were permitted 30 days of leave, which means totally you are permitted how many days? If you're sitting in income tax class with no calculator on your table, I will throw you out. 900. You are there for 30 years and every year you are getting 30 days of leave, meaning total leaves you got is 900. In this 900 days, you have utilized only 500 days. Utilized only 500 days, meaning how many leaves are you going to encash? 400. Yes, you're going to encash 400 days. They're coming and saying, boss, for this 400 days, whatever is the average salary, you can take that as an exemption. You can take that as an exemption. Question to you. Average salary is in day format, month format. So the days should be in day format, month format. How will you divide it by month format? Right? So what will you do? You take 400 by 30 into average salary. 400 by 30 into average salary. Clear? Sure? Yes. This is what the provision reads, right? Whatever is the leave unutilized divided by 30 to arrive at the month into average salary for the last 10 months. Into average salary for the last 10 months. These 4 items, whichever is lower, will be allowed as a exemption. Will be allowed as an exemption. Balance will be taxed. Balance will be. Second condition here they are coming and saying was every year you can maximum have only 30 days leave. Every year you can maximum have only 30 days leave. In my example, I told you the employee was there for 30 days and got 30 days per. He was there for 30 years, got 30 days per year. Got 30 days per year, so therefore fully permitted. If I would have come and said no, boss, employee was there for 30 years and every year he got 40 days leave. Every year he got 40 days leave. You will restrict it to 30. You will restrict it to 30, meaning you will maximum claim 900 days. You will maximum claim 900 days. In that 400 you utilize, 500 you utilize, so balance 400 is what you can claim. Clear? This is what your leave encashment looks like. This is what your leave encashment looks like. What are the 4 items? Average, actual amount received. Actual amount received 3 lakh rupees. Average salary for the last 10 months. Leave unutilized divided by 30. Leave unutilized divided by 30 into average salary for the last 10 months. Average salary for the last 10 months, meaning take the basic, the DA forming part, the commission turnover for the last 10 months divided by 10. Right? Clear? Sure. Yes, let me check if I have some questions. Just check your question bank. Do you have any specific questions for leave salary alone? Do you have section-wise specific questions? No, you don't. No, you don't. No, you don't. No, you don't. No, you don't have specific questions. You don't have specific questions. We will complete the chapter and come back. We will complete the chapter and okay. Okay. The reason is very simple. I want you to forget. Okay, so we are done with the first item called as leave encashment. We are done with the first item called as leave encashment. Guys, what time do you want to break? 9:25. 9:25 we'll go for a break, for an half an hour break. You can come back at 10 o'clock. Come back at 10 o'clock. Yes, we will take good amount of breaks today. I want you to focus because next chapter is also important. Next chapter is also important. We'll take good amount of breaks. Okay, you have to keep yourself fresh. Keep yourself fresh. To the extent I am able to do it, I am doing with all the jokes which I have. Somehow you have to keep yourself alive also. No? I can bring my book and come and say that but somehow I'm trying to do something so that it is all energizing enough. Okay, so to some extent I'm doing. At some point of time, if you feel like you're getting bored, you feel like I see you yawning, we will take a break. Okay, but we'll try to complete as much as possible. First break, we will take the first break at 9:25. Okay, we'll take the first break at 9:25. Yes, starting with the second item, what are we in? HRA. We are into HRA. Provision comes and says if you receive any kind of allowance for the purpose of paying your house rent, you will get something called as HRA. You will get something called as HRA. In this, income tax comes and says, boss, no retirement, no resignation, nothing. No retirement, no resignation, nothing. HRA can only be received by you during your employment. Correct? HRA can only be received by you during your employment. So they came and said, boss, no government, non-government, also leave it off. No government, non-government, also leave it off. It is taxable for everyone. It is taxable for everyone. I am giving you an exemption of least of the three. Giving an exemption of least of the three. First item will always be actual. First item is actual. Second item, they came and said, boss, check where are you having the house. Check where are you having the house. If you are having it in the metropolitan cities of India, Chennai, Mumbai, Delhi, Kolkata. Chennai, Mumbai, Delhi, Kolkata, the connecting highways. If you have it in any of these four places, you will get a deduction of 50% of the salary. 50% of the salary. If you don't have it in any of these places, it will become 40% of the salary. Salary here means basic plus DA, farming part plus turnover commission. For the last 10 months or for the relevant month? 11 months. For the relevant month, we use the average only in cases when it is a retirement. Only in cases of retirement. When it is during your employment, you don't have to change anything. Whatever is the relevant period, you use the relevant period. Clear? Yes. So the first item we discuss is actual. Second item we discuss is 50 or 40% of salary. 50 or 40% of salary. Last item is said as rent paid minus 10% of salary. Rent paid minus 10% of salary. Whatever you pay as actual rent minus 10% of salary. Minus 10% of the salary. Salary means basic plus DA, forming part plus turnover commission. Rent paid minus 10% of salary will be allowed as an exemption. Least of the three, higher of the three. Least of the three will be allowed as an exemption. Rule here is that, boss, you will only get this HRA exemption provided you don't have an own house in the same place. In the same city where you are working, if you have a house also and you are living in rent also, something is wrong with you. You should not have a same house and a rented house in the same city. In that cases, I will not give you any kind of HRAs. Clear? Yes. Second item also done. Third item is Third item is called as your special allowances. In special allowances, too many allowances are there. From exam perspective, you need to know only two. First item is called as transport allowance. Transport or traveling. Transport allowance. First item is called as transport allowance. They came and said, boss, if you are all healthy, you can travel yourself. Government employer does not have to do anything for you. So if you receive any kind of transport allowance, it is fully taxable. If you are disabled, I will give you an exemption of 3,200 rupees per. I will give you an exemption of 3,200 rupees per month. Whatever amount you receive, other than the 3,200 rupees will be allowed as an exemption. Clear? Yes. First item is transport allowance will be given only to disabled people. 3,200 per month will be allowed as an exemption. Second one is called as child education allowance. For me to help you educate your child, I will give you a beggar number of 100 rupees per month per child. 100 rupees per month child. That also is not the criteria. It is for only two child. You have a third child, disown him. No education for him. Okay. The income tax comes and says you will only give an exemption of 100 rupees per month per child for two children, provided the education is in India. at any given point of time. If you have less than one child, only 100 rupees per month. If you have two child, 100 rupees, 200 rupees per month. You have three child, 200 rupees per month. 200 rupees per month. I don't know what will you give an education for. எங்க போயிட்டு என்ன எஜுகேஷன் தேடுறதுன்னு தெரியல. ஈவன் த ஜெயலலிதா ஸ்கூல் இஸ் தேர், நோ அங்கே போயிட்டு கூட 200 rupees வராது ஒன்று. தட் ஆல்சோ இஸ் மீல்ஸ் பர் டே. அந்த அம்மா மீல் சொல்லுவாங்கல்ல, தட் ஆல்சோ வில் காஸ்ட் 100 rupees. அங்க போயிட்டு நீ அதுக்கு எஜுகேஷன் கொடுக்கணும்னா 61 hasn't been amended since 61. Every year we go to the government and we come and say, boss, education has become so costly. They're like, okay, stop giving education. We are collecting health and education cess from you. We will take care of your education. You don't have to take burden. Okay, you tell and come and tell me that you don't have education. We will sponsor your education in Amma college and all that. Okay, so basically what it comes and says, any kind of child education, you will get an exemption of 100 rupees per month per child for 2 children, provided the education is in India. Education is in India. Third item is called as hostel allowance. If you are sending your child to an hostel, I will give an exemption of 300 rupees per month per child. Hostel போறதுக்கு 300 rupees per month per child. Yes, 300 rupees per month per child will be given as an hostel allowance along with education. Hey, if you are claiming hostel allowance, education allowance not allowed. Hey, hostel is including education. Priya Gupta, what you are sending only for staying there, is it? If you are sending someone for staying in a hostel, technically you are giving them education also, no? So technically the 300 rupees is already including the education. The 300 rupees is already including the education. Okay, so it is child hostel allowance. You will be given an exemption of 300 rupees per month per child for 2 children. For 2 children, again, education should be in India. Education should be in India. These are the only 3 things you need to remember from exam perspective. These are the only 3 things you need to remember from exam perspective. Apart from this, any other allowance you see in your exam, any other allowance you see in your exam, ask yourself a simple question: is this allowance given to you for doing office work or for personal work? Is this allowance given to you for office work or personal work? If it is given for office work, whatever you pay from that allowance will be exempted. Whatever you pay from that allowance will be fully exempted. If it's for personal, no reasons. No reasons, it will be fully taxable. Okay. Look at the examples, you'll understand. Look at the examples, you'll understand. It's called as daily allowance. It's called as daily allowance. For you to go and daily do my work, I'm giving you something called as daily allowance. How much is the exemption? Actual pay. Next, conveyance allowance. For you to travel from office to, for you to travel from here to some other state. For you to travel from here to some other state for my work. For my work, I'm giving you something called as conveyance allowance. Whatever you pay for official duties will be exempted from tax. Balance will become fully taxable. Then, helper for home, helper for work. Helper for work. So whatever helper allowance they give will become exempt to the extent it is paid for your official purposes. Next item. Research for self or research for officer. Last item. Uniform for officer, uniform for self. Yes. So you see the allowance, you understand whether it is a office allowance or a personal allowance. If you see it as an office allowance, you can exempt it. If you see it as a personal allowance, you can tax it. When you're exempting, exempt only the actual spend. Exempt only the actual spend because balance has come as a profit for you. Correct? Correct? Question to you. Medical allowance, taxable, exempt? Taxable. Medical allowance is taxable because if it is something which the company wants to give, they will give it in the form of perk. They will give it in the form of perk. If they're giving it in your hand, you will never go for medicals. You will never go for medicals. I know everyone. Okay. You are not going to spend it for medicals. And even if you're spending for medicals, how do I tell how much is it for work or how much is it for your personal life? So they said, boss, nothing doing fully. Taxable, exempt. Taxable, exempt. Taxable, fully taxable. If it was an perquisite, it is exempt. If it was a perquisite, it was exempt. If it is an allowance, it is taxable. The reason is very simple. Today, if I give you the money, I don't know whether you're using the phone for calling office or you call wife and all. You call wife, good for you. Wife also, company will be okay. Some other people only is the problem. Okay. So they are asking very simple question. Boss, I don't know whether you'll use this Geo plan for calling your office or for calling someone else or for calling someone else. I don't want to take the chance. Please tax the whole thing. Please tax the whole thing. If you want to put a restriction, do one thing. Give it as a form of perk. Give it in the form of perk, because then in that case, what will happen? It is a company sponsored. It is company sponsored. Now they will have the full bill. Now they will have the full bill. They can find out whom are you talking to, when are you talking to, how are you talking to. Okay, that and all they can fully find out from it. Okay, therefore they gave it as perk. Therefore they gave it as perk. Clear? Clear. This is your special allowances. This is your special allowances. Last item is called as other allowances. Whatever you don't know, everything is fully taxable. Whatever you don't know, everything is fully taxable. Okay. Okay. This is what is coming from allowances perspective. Let's come and understand what happens in 115 BSc. What happens in 115 BSc? Income tax had a very simple thought. They came and said, boss, I should remove all those exemptions which you will have on a recurring basis. So they came here and they came and said, boss, leave encashment, will you regularly have? Will you not regularly have? Not regularly have. Do you want to retain it in 115 BSc? Not retain. Do you want to retain? Not retain. Retain. Meaning this exemption is still allowed under 115 BSc, because you're going to get the exemption only on retirement or employment. Retirement is not going to happen every day. So they said, boss, this is allowed for 115 BSc. Clear? Next item, HRA. Will you claim regularly? Will you claim non-regularly? Regularly. Big exemption, small exemption. Big exemption. So therefore, will you be allowing under 115 BSc? Not or no? Not allowed under section 115 BSc. Not allowed under section 115 BSc. Clear? Next item. Special allowances. Will you send your child to education every year or only once in a year? Every year. Will you get an exemption? Not get an exemption. Normally, do you get an exemption? Not get an exemption. Does 115 BSc allow exemptions? Not allowed. Not allowed. Any of your education allowance and hostel allowance will not be allowed as an exemption for 115 BSc. Transport allowance allowed. Understand, people, you are giving this allowance for disabled people. Tomorrow, if you take this allowance also away, what will happen? Employer will come and say, email and no disability for you. Income tax also does not recognize you. What will I recognize? Okay, so they still kept your disability. If you are disabled, transport allowance allowed. Education and hostel removed. Balance, everything also removed. Except for daily. Daily மட்டும் வச்சிருக்காங்க. Daily allowance alone is kept for you. Balance, everything has been ignored. Minimala, if you do official purposes also, it is taxable. If you do it for official purpose also, it is taxable under. Right? Clear? Yes. Other allowances. It was anyway fully taxable. Do I have to do anything for 115 BSc? Remains the same. Wherever you were able to claim a higher exemption on a recurring basis, I have removed it for you. Yeah. Yes. So until now, what we discussed, what are the items not eligible for 115 BSc? Any of your HRA is not eligible. Any of your education allowance, hostel allowance, any of the official expenses also will not be allowed except for daily allowance. Will daily allowance come in exam? No. No, which means the only thing which will come in exam is education and hostel. You take it under 115 BSc, you don't take it under. Take it as taxable under 115 BSc, you don't take it as taxable under non-115 BSc. Clear? Done. Coming to the next part called as retirements. Under that, the first item we learned is gratuity. Income tax comes and says, boss, same provisions as leave encashment. You need to check whether you're receiving it during employment or post retirement. During employment, post retirement or resignation. If you are receiving it during employment, it is fully taxable. If you are not receiving it during employment, I will check whether you are government, non-government. If you are government, exempt from tax. If you are non-government, now is where the split happens. Under gratuity, two more splits. They will ask you a question whether your company is covered under POGA, not covered under POGA. For whoever is thinking this is a bad word, POGA meaning payment of tax. Payment of gratuity. It's called POGA. Payment of gratuity act, payment of bonus act. Payment of bonus act. Okay. It's called POGA and POGA. Not relevant and not relevant and all from exam perspective. You are covered under POGA or not is a question. You are covered under POGA or not is a question. If you are covered under POGA, POGA will give you the exemption. If you are covered under POGA, POGA will give you the exemption. What is the exemption given under POGA? They come and say, boss, least of the three. Least of the three. First item is actual. First item is actual. Second item is 20 lakh rupees. Second item is 20 lakh rupees. Third item, they're coming and saying 15 by 26. 15 by 26 into number of years you have worked. Into number of years you have worked into the last drawn salary. Into the last drawn salary. In this, first of all, what is 15 by 26, Rahul? It is technically half a month's salary. It is technically half a month's salary. Rahul, half a month na 15 by 30 then. It is half a month working day salary. Half a month working day salary. In a month, you have 4 Sundays. In a month, you have 4 Sundays. Ignore the 4 Sundays, it will become 15 by 26. It will become 15 by 26. So it is 15 by 26 into number of completed years or rounded thereof. Number of completed years or rounded thereof. Meaning if it is 30 years and 6 months, it will become 31 years. If it is 30 years and 2 months, it will become 8 years. So it is number of completed years and rounded thereof into last drawn salary. What salary? Last drawn salary. Kalambu modu enna last salary. Kalambu modu, what was your last salary? That last drawn salary for the purpose of POGA. For the purpose of POGA, salary means basic plus all DA. Basic plus all DA. Whether in terms, not in terms, it doesn't matter. Basic plus all DA. No commission. No commission. Basic plus all DA. Clear? Clear. Take the same provisions, copy paste in the right side. Take the same provisions, copy paste in the right side with small changes. Right now you are into non-POGA. You are not covered into POGA. Who will give you the exemption? Income tax will give you the exemption. So income tax will give you the exemption. Let's work on that exemption. First item was there. Actual. So here also it is. Second item there was 20 lakhs. Here also it will be. Third item there was 15 by 26. On what logic? Half a month salary. Half a month salary. There they said half a month working day salary. Income tax said boss, ivlo logical and theriyadu. I don't understand so much logic. What did you want? Half a month salary meaning 1 by 2. Meaning 1 by 2. So they came and said boss, half a month salary meaning 1 by 2. So half a month salary into there what it was? Number of completed years. Number of completed years. Here also they said okay boss, half a month salary into number of completed years. But I am not as good as gratuity. I'm not as good as gratuity. No round off and all. No round off and all. Whatever is the balance fraction will be ignored. Whatever is the fraction will be ignored. Meaning 30 years and 2 months will become 30 years and 6 months will become 30 years and 9 months will become 30 years and 12 months will become what days? 12 months full time. I will put my pass பண்றதே ஏற்கனவே கஷ்டமா இருக்கு அதுக்கு மேல இவ்வளவு 30 years and 12 months will become 31 years. 30 years and 12 months will become 31 years. 30 years and 11 months will become 30 years, 11 months, 25 days. Clear? Clear. Non-POGA cases, no round off. POGA cases, round off. So it says half a month salary into number of completed years without any round off into average. Into average salary. What do you mean by average salary? Salary for the last 10 months. Salary means basic plus DA forming part plus turnover commission. Plus turnover commission. Where have you learned this? Copy paste. Copy paste. Okay. So it becomes as what? Half a month salary into number of completed years into average salary for the last 10 months divided by 10. Divided by 10. Salary here means basic plus DA forming part plus turnover commission. Same copy paste as leave encashment. Same copy paste as leave encashment. Clear? Next one. A question to you. 20 lakhs per employment lifetime. Next. What is the next one? After gratuity, it is pension. After gratuity, it is pension. Same provisions. Question to you. Can pension be received during employment? Pension can never be received during employment. Pension can only be received post-employment. In income tax, they came and said pension can be in 2 ways. Pension can be in 2 ways. One is called as monthly pension. One is called as lump sum pension. One is called as monthly pension, one is called as lump sum pension. But since we are CAs, we need to use big words. It is called as uncommuted pension, commuted pension. Commuted is lump sum or monthly? Commuted means what's computed. You will compute monthly or lump sum? You will commute lump sum. So therefore, lump sum payment is called as commuted pension. Monthly pension is called as income tax statement said uncommuted pension looks same as your normal salary. Therefore, it will become taxable for government, non-government. For both. Uncommuted pensions are taxable for both government and non-government. If it is a commuted pension, if I'm giving you a lump sum amount today, I will come and check two things: whether you are government or non-government. If you are government, exempt. If you are non-government, I will come and ask you: are you receiving gratuity also or not? If you are receiving gratuity, should I give you more pension, less pension? Less pension. They came and said, boss, if you are also receiving gratuity, whatever is the pension you receive, 1/3 of the total pension will be exempt. Pension will be exempt. Please be extremely careful of the word. It is 1/3 of the total pension which is exempt. Okay? It is not 1/3 of the commuted pension. It is 1/3 of the total pension which is exempt. If you are not receiving gratuity, I should give you more pension, less pension. More pension. If I'm giving you more pension, it is 1/2 the total pension will be exempt from tax. What do you mean by total pension? Whatever is your commuted pension divided by the percentage. Whatever is your commuted pension divided by the percentage will give you the total. Simple example. If I come and say that I've commuted 3 lakh rupees and given to you. I have commuted 3 lakh rupees and given to you. This 3 lakh is nothing but 60% of it. 3 lakh is nothing but 60% of it. How much is my total pension? 5 lakhs. How much is my total pension? My total pension is 5 lakhs. I am the person who's receiving gratuity. Amount exempted from tax for me is 1/3 of what is 1/3 of what? 1/3 of 5 lakhs. 1/3 of 5 lakhs is how much? 1,66,667. This 1,66,000 will be reduced from 5 lakhs or 3 lakhs? 3 lakhs will be reduced from 3 lakhs. 3 lakhs is what you received in hand. You will reduce 1,66,667 from that. Balance is 2,33,000. 1,33,333. Clear? All clear? Yes. This is what happens in pension. Can we quickly revise? We have two kinds of pension. One is called as uncommuted pension. Commuted pension is lump sum. Taxability is check for government, non-government. Government employee, non-government employee. Check whether you are receiving gratuity or not receiving gratuity. If you are receiving gratuity, 1/3 total pension exempt. Not receiving gratuity, 1/2 of the total pension exempt. If you are not getting commuted pension, you are getting uncommuted pension. Uncommuted pension is clear. What is the next item? TRS not there for exam. TRS is not there for exam. Contribution to fund to the next item. Biggest discussion. So I will hold it right now. We will come back and do it after. Let's come back and do it after our break. Because this one is the toughest one. I know there is some complications here and there. Employee require 7.5 lakhs, 2.5 lakhs. 2.5 lakhs or 1.5 lakh? 2.5 lakh or 1.5 lakh? 2.5 lakh. Sorry, 2.5 lakh. Adukapra you have annual accretion. Other T plus P is equal P by 2 is equal to C1 plus T1 plus P2 by C2. Edu arambichirom. Okay, peri formula ella arambichirom. Let's try to see how we can make it simple. Without formulas, how can we understand the whole thing is what we need to do. I need a good amount of time for it. So we will do it after we are break, after we have eaten everything, and after we sleep off. You sleep off and I will discuss so that you also sleep off in exam. Yes, sir? Have a light breakfast, people. Don't go for very heavy things. Have something very light. Okay? Let's meet you after 10 now. 10. I have a meeting right now, so let's meet at 10. Starting with some of the most important topics when it comes to salaries. One is called as PF. One is called as PF. A little complicated part of the provision, so we'll try to understand it a little slow. Okay, we'll go a little slow on this and try to understand it properly. Okay, we have PFs in 4 ways. We have PF in 4 ways. When it comes to normal PF itself, there are 4 types of PF which has been defined. One is called as statutory provident fund. One is called as statutory provident fund, public provident fund, recognized provident fund, unrecognized provident. 4 are there. What is it? Statutory provident fund, public provident fund, recognized provident fund, unrecognized provident. Has been defined to you. These 4 provident funds have somewhat characteristics. To give you a simple instance, public provident fund can only be deposited by public. Meaning, in that can employer contribute? In that employer cannot contribute. The only person who can contribute is individuals. Employee na you have to be in salary, not required. Business people can also contribute into PPF. Okay, so PPF can be done for individual public. When it comes to statutory provident fund, this is a provident fund created by the government. Government is running this provident fund. Recognized provident funds are those which are created by private people, but it is recognized by income tax. Unrecognized provident fund is what? It is created by public people, but not recognized by income tax. Tell me, where will income tax be putting their head on? Unrecognized. They will come and say, boss, if you are not getting approvals from me, why should I give you benefits? Correct or not? Okay. So let's start from the last one. What is called as unrecognized provident fund? Income tax comes and says, boss, if you have an unrecognized provident fund, contributions will happen this way. One contribution will happen from employee. One contribution will happen from employer. Both are going to contribute in an FD, which is called as PF. On this FD, you will get something called as interest. So now you have contribution of employer, contribution of employee, interest coming from the employer, interest coming from the employee. Correct or not? Income taxes, all the 4 are exempted. All the 4 are. I thought we were supposed to put a stop on unrecognized. Correct? Up exempted put the how is it a stop? They said, boss, we will catch hold of you when you withdraw the full thing. Meaning, during the time of contribution, I have no problem. During the time of you earning interest also, I have no problem. The day you withdraw from this provident fund, I will catch hold of your neck. Tell me. There is one employee. There is one employer. Employee is going to contribute. Employer is going to contribute. On this contribution, you will earn interest. So there are 4 components. One is employer contribution, employee contribution, interest on employer contribution, interest on employee contribution. Every one item we need to discuss. Yes, starting from the employer contribution. Employer is contributing on your behalf to an URPF. Should be taxable under the head. Employer contributing on your behalf. Part of your CTC over and above CTC. Which means it's a cost to the company, not a cost to the company. If it's a cost to the company, it's an income for you. Yes or no? Should be taxable under the head. Low salaries. So employer contribution will be taxable under the head salary. Should be taxable under the head. Yes, done. Yes. Coming to employee contribution. Who is contributing? Employee. I am contributing in my own FD. That own FD is going to come back to me. Is there an income in this? Should you tax under salaries? Should you tax under IFOS? Where will you tax it? Question again. Where will you tax it? You will not tax it. Income tax gives you an additional benefit saying I can give you something called as a ATC deduction for your investments. But the problem is this, you have got approval from government, not got approvals. Should I give a deduction? Nothing. Neither tax nor deduction. Neither tax nor deduction. Clear? Coming to employer. Employer is contributing in an FD, is going to get interest out of it. Together, that full thing is going to come back to you. Interest on employer, taxable under the head. Same salaries. You have contributed to an FD. You have got interest out of it. Should be taxable under the head. Purida. 4 items for you. 1 item ignore. Balance 3 items. Then the 2 items go under salaries. 1 item goes under. All this will be taxed in the year of withdrawal. If this is poking your eyes, let me know. I will change. It will be taxable in the year of withdrawal. Question to you, Rahul. Why are you taxing it on withdrawal? Why can't you tax it during contribution itself? You could have might as well taxed everything during contribution itself. No, why take so much efforts and do everything in withdrawal? Why are you taxing it on withdrawal? Why are you exempting it on contribution? You could have might as well said tax it during contribution, ignore during withdrawal. Very good. Understand, boss. If you had given it as taxable during contributions, every month, for example, you would have taxed 5,000, 5,000, 5,000, 5,000. That employee could be poor, which means you would claim this 5,000 as a rebate. You would claim this 5,000 as a rebate. Add the 5,000, 12 years you work, total becomes 60,000. Tax the whole thing in the year of withdrawal. Tax the whole thing in the year of withdrawal. Gone case. Correct. 5,000 per month, 60,000 per year into 12 years. How much? 7 lakh 20,000. Poor suddenly became middle class. Poor suddenly became middle class. That is the idea. That is the idea. Income tax came and said, boss, I do not want to give you such benefits and all. You should have come to me for approval. Okay, I will tax everything on the time of withdrawal. Everything becomes taxable on withdrawal. Income will suddenly surge up here. The moment you withdraw, the huge income will come in your hands in the form of a lump sum money. Everything will become taxable in a single shot. You might also end up in surcharges case where you are actually poor. Where you are actually poor, you could also end up in surcharges case. That is the whole idea of URPF. Clear? Clear? Yes, so this is the first PF called as URPF. Any doubts? All clear? Yes. Coming to the first one called as SPF. Coming as SPF. SPF on the sunscreen cream. This is the sunscreen cream on the SPF 50. What is SPF? Statutory Provident Fund. Income tax comes and says, boss, when it is a statutory Provident Fund, who has created it? Government has created. For the benefit of public, for the benefit of government. Ideally for the benefit of public. Ideally for the benefit of public, they said, boss, if employer contributes to SPF, exempt. If employer earns interest on that contribution, exempt. If employee contributes, you will get ATC. If employee contributes, now you are making an investment. Question to you: PF investment can be withdrawn within 1 year. True or false? False. PF withdrawal happens for a very long time. Bare minimum 15 years. Bare minimum 15 years. You're locking your money somewhere else. So government came and said, gosh, if you're locking your money for 15 years, let me give you something called as deduction. SPF, they came and said, employer contribute exempt. Interest on employer exempt. Employee contribute ATC. Maximum amount 1,50,000. Maximum amount 1,50,000 is what you can contribute. Beyond 1,50,000, it's anyway wasted. Contribute money, you're only blocking your money, you're not getting any deduction. Okay, so maximum contribution 1,50,000. Last left is interest on employee. Comes the amendment of last to last year. Income tax comes and says, boss, please ensure you don't contribute more than 2.5 lakhs. Please ensure you don't contribute more than. If you contribute more than 2.5 lakhs, I cannot stop you. But what I will do is, whatever is the interest on this component will become fully taxable. What component? Above 2.5 lakhs. So, for example, if the scenario is that you have contributed 3 lakh rupees. And this provident fund is going to give you an interest of 10%. How much interest would have you got? 30,000. Assuming it was there for the whole year, you would have got 30,000 rupees. Income tax comes and says, boss, for the first 2.5 lakhs, no problem. For the balance 50,000, how much is the rate of interest? 10%. How much is the number? 50,000. 5,000 will become taxable under the head. IFOS. It's an employee contribution, so it will be taxable under the head IFOS. Clear? Yes, this is what SPF comes and says. This is what SPF comes and says. Withdrawal ko no tax. Withdrawal ko no tax. Meaning contribution no tax. Interest varamodu employer no tax. Employee taxable after 2.5 lakhs. Withdrawal no tax. Withdrawal no tax. Clear? Clear? Yes. Coming to the next one called as PPF. Coming to the next one called as PPF. PPF, who can contribute? Only public can contribute. Meaning employer contribution not applicable. Interest on employer contribution not applicable. PPF created by government, approved by government. Yes or no?
Yes.
So if you contribute to PPF, you will get what? ATC. You will get ATC. So if an employee or an individual contributes to PPF, you will get something called as ATC. Interest on employee exempt. Withdrawal also exempt. Withdrawal also exempt. PPF is called as E model. What is it called as? E model. Exempt model. Meaning contribution panamodu exempt. During interest also exempt. Withdraw panamodu kuda. Okay. Okay. So you have done 3 now. What have we done? We have done URPF, SPF, PPF. URPF during contribution exempt. On withdrawal taxable what? Employer contribution, salaries, employee contribution, employee contribution, nothing to be done. Nothing to be done. Interest on employer, salaries. Hey, first. Interest on employer, salaries. Interest on employee, PPF, employee contribution. மக்க பண்ணி வச்சிருக்கீங்களா? வார்த்தையை மாத்தினாலே பேரே மாற போகுது. எம்ப்ளாயி கான்ட்ரிபியூஷன் PPF, ATC, interest on employee. இப்போதான் சொன்ன மாடல். Interest on employee. கேளுங்க. Give it 2 minutes. Give it 2 minutes here and then give the response. Okay. Start again. SPF employer. SPF employer. SPF interest on employer. SPF withdrawal. Exempt. SPF employee. SPF interest on employee. Above 2.5 IFOS interest, below 2.5 exempt. Correct? URPF employee. URPF employee. No implication. URPF employee. No implication. URPF interest on employee. Am I during the time of withdrawal or during contribution? என்ன சொன்னேன்? Interest on employee, URPF. Am I talking during the time of earning or during the time of withdrawal? I am talking during the time of earning. URPF employer during contribution. Exempt. URPF withdrawal employee. URPF withdrawal employee contribution. URPF withdrawal interest on employer contribution. URPF withdrawal employee interest contribution. இப்போ வருதா statutory provident fund employee contribution. The more you keep mistakes, the more I'll ask. Okay, I need unanimous answers. Yosinga, it's okay. Think about it 2 minutes. There is no hurry. Fast track na fast step hota hai. Okay. URPF and Mr. URPF. PPF employee. Come on. PPF employee contribution, ITC. PPF interest on withdrawal during interest on employee contribution during withdrawal. Exempt. PPF interest on employee contribution. SPF employee contribution. ATC. SPF withdrawal. Shall we start again? ஏய் இந்த மூணே தெரியலன்னா RPF போகவே முடியாது. RPF இன்னும் கேவலமா இருக்கும். Can we start again? Yes. I will jumble, ma. Be careful. Okay, think about it. Take a minute. Think about it. Properly answer. Don't jump. Okay. We are in SPF employee contribution. ATC. URPF interest on employee during contribution. Exempt. URPF withdrawal employer contribution. URPF withdrawal interest on employee contribution. PPF interest on employee contribution. என்ன சொன்ன இப்போ? Look at the question, read the question, then tell me. Interest தானே சொன்னேன். Interest on employee contribution. எவ்வளவு வாட்டிடா பண்ணோம்? நான் கன்ஃபியூஸ் பண்ணேன். ஏய் நான் கரெக்டா தானே பேசினேன். என்ன கரெக்ட் சீக்வன்ஸா சொல்லணுமா? சரி சீக்வன்ஸா போலாம். சீக்வன்ஸா கரெக்டா வந்துருமா? ட்ரை பண்ணோம். சீக்வன்ஸா போவோம். ஓகே. URPF contribution employer. சீக்வன்ஸா போயிட்டு இருக்கலாம். What is the answer? URPF employee contribution. Exempt. No implications. URPF interest on employer contribution. எப்படி பண்ணாலும் தப்பதான் வர போகுது. URPF interest on employee during contribution. Exempt. During withdrawal, URPF employer contribution. Employee contribution. லாஜிக்கல் சொல்லி தந்துட்டேன், மக்கப்ப பண்ணி வச்சுட்டேன். அதுக்கப்புறம் என்ன பண்றது சொல்லு? நாளைக்கு நான் கூட வந்துட்டோமா எக்ஸாமுக்கு? I will come sit along with you in exam. Just for the sake of convenience, if I come in your exam, you're definitely failing. நான் பேப்பர் செட் பண்ணா காலி போச்சு. Yes sir. Do you want to try again? Shall we go to the next one? ஜம்பிள் பண்ணுமா சீக்வன்ஸா பண்ணுமா? ஜம்பிளா பண்ணலாமா? சரி. PPF interest on employee contribution. PPF withdrawal. Exempt. Statutory provident fund interest on employer contribution. Prapatiya. Exempt. SPF withdrawal. SPF interest on employee contribution. Interest worth vandale you have to check for 2.5 lakhs. 2.5 lakhs மேல it becomes taxable under 2.5 lakhs key latest. URPF contribution interest on employee. Exempt. URPF withdrawal interest on employee. Clear? Now feeling confident? திருப்பி படிச்சாதான் வரும். Okay. Coming to the biggest leg called as RPF. Yes. We have 4 items, correct? We have 4 items. What are the 4 items? Employer, employee, interest on employer, interest on employee. Correct? Yes, we have 4 items. Easiest of the tackle bat. employee contribution ATC அவ்வளவுதான். You are contributing in FD, it becomes reduction under ATC. Reduction under ATC. Done. 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 Coming to employer. They come and say, boss, up to 7.5 lakhs. To 7.5 lakhs. If the total contribution is up to 7.5 lakhs, it is exempt up to 12% of your salary. Up to 7.5 lakhs, it is exempt up to 12% of your salary. If it goes beyond 7.5 lakhs, it is fully taxable. What is fully taxable? Excess amount. The excess contribution. The excess contribution. For your contribution up to 7.5 lakhs, it is exempt up to 12% of salary. For your contribution above 7.5 lakhs, it is taxable fully. Taxable fully. Till you are clear? Yes. Question to you. What is salary? Basic plus DA forming part plus turnover commission. For which month? Respective month. Why respective months? It is during the month. It is during the period, so therefore it is respective months. Clear till here? Yes. Up to 7.5 lakhs, no tax. After up to 7.5 lakhs, exempt up to 12% of salary. Above 7.5 lakhs, fully taxable. Fully taxable. Clear? Yes. Coming to the next one. Interest on employer. They came and said, boss, this component, whatever interest comes will become exempt up to 9.5%. Very good. Per annum. 9.5% per annum. Understand, it is not 9.5% of salary. It is 9.5% of the contribution. It is 9.5% of the contribution. Contribution 9.5% is exempt. Balance becomes taxable. Balance becomes. Understand it very clearly. It is not 9.5% of salary. Clear? Clear? Yes. For 9. Yes. Exempt up to சொல்லிருக்கேன்ல. Exempt up to 9.5 na. Employee contribution right clear. வரும். We'll come to that. Okay. What is the provision? If you are having an employer contribution up to 7.5 lakhs, angalindu varada interest will only be exempt up to 9.5% on the contribution. Balance will become taxable. If you have a contribution more than 7.5 lakhs, angalindu varada interest is also fully taxable. So the contribution is also taxable. The interest is also taxable. Contribution is also taxable. Interest is also taxable. Contribution is not taxable up to 12%. Interest is not taxable up to 9.5. Clear? Coming to the right side. Whatever contributions you make will be allowed as reduction under up to a maximum of 1.5 lakhs. Up to a maximum of 1.5 lakhs. Income tax comes and says, boss, if you are contributing up to 2.5 lakhs, where did we learn this number? SPF. Where did we learn this number? SPF. So they're coming and saying, boss, if you have contributed up to 2.5 lakhs, whatever interest comes will become exempt up to 9.5%. If the contribution is up to 2.5 lakhs, whatever is the interest coming out of it will be exempt up to 9.5%. If you are contributing more than 2.5 lakhs, this becomes fully taxable. What becomes fully taxable? Interest becomes fully taxable. Interest becomes fully clear. Yes, this is what the provisions read like. The provision says, if you are an employer, you can contribute up to 7.5 lakhs. You can contribute up to 7.5 lakhs. If you contribute up to 7.5 lakhs, then only 12% of salary will become exempt. Balance will become taxable. But if you contribute anything beyond 7.5 lakhs, everything will become taxable. If you are contributing anything up to 7.5 lakhs, interest will be exempt up to 9.5%. If you are contributing anything beyond 7.5 lakhs, interest on that will become fully taxable. If you are an employee side, whatever you contribute is exempt. only, sorry, is allowed as a deduction only up to a maximum of 1.5 lakhs. But if you choose to contribute more than 2.5 lakhs, whatever is the interest will become fully taxable. If you choose to contribute less than 2.5 lakhs, interest on that will be exempt up to 9.5%. Clear? Yes. Yes. Till now clear. Seems okay. Because I need to start the next thing. Clear? Yes. In this, income tax also comes and says, boss, it is not just that the employer contribution is taxable and the interest on that is taxable. Any interest on these also will become taxable. Any interest on interest or interest on the contribution is also taxable. It's called as accretion. Called as accretion. Suppose year one you contributed 10 lakhs. You contributed 10 lakhs. How much is exempt? 7.5 lakhs is exempt. Balance 2.5 lakhs is taxable. And the 2.5 lakhs kamala you want an interest of 10%. Number becomes 25,000. Question to you. Next time when you are investing, your investment amount will be 2.5 lakhs or it will be 2.5 plus that 25. It will be plus the 25. So year 3 when you get interest, you will get interest on 2,50,000 and 25,000. Yes or no? Income tax comes and says interest on both are taxable. Interest on both are taxable. Contribution also taxable. Interest also taxable. But the problem what happens is when you contributed 10 lakhs fully. You contributed 10 lakhs fully. And the interest which is coming to you is coming only for this quantum or for that 7.5 lakhs also. It's coming for the 7.5 lakhs also, which means you need to now understand how much of the interest pertains to this above 7.5 lakhs and how much of the interest pertains to less than 7.5 lakhs. Because the less than 7.5 lakhs is exempt. Only above 7.5 lakhs is taxable. Correct or not? Correct or not? Income tax comes and gives a rule. It says called I here. I don't remember properly. I'm just making a guess. It is called I is equal to PC by 2 into R plus PC1 plus PC1 into R. PC by 2 into R plus PC1 plus PC1 by R. Some C is there, some C is there, some P is there. Okay, I don't know what P is, I don't know what C is. I have no idea. Okay, some logic is there. Okay, your faculties might have taught you, I don't know. I'm way too much poor in all these items. Okay, and algebra right? I have a better way, or at least not better way. I have a way to understand for my little brain. And I have a logic. Okay, the logic is very simple. What is happening? You are going to make an FD, correct or not? You're going to make an FD. Let's assume you are the employer. You are the employer going to make an FD. Going to make an FD. Instead of the employer directly contributing to PF, he actually gave it in your hand. He gave it in your hand. Okay. So what happened is employer decided employer will give 7.5 lakhs in your hand. Employer decided he will give 7.5 lakhs in your hand. If you would have deposited this in FD, would you have got interest? Yes. Would it be taxable? No. But what happened is when you went inside, when you were going to the bank, suddenly your wife was there behind you. She came and said, Rahul, don't just contribute 7.5 lakhs. I will also give some money. I will also give some money. For the first time, I was shocked. Why is she giving me her money? For the first time, I was shocked. Why is she giving me her money? But I said, okay, money coming to my hand. Why should I say no? Solta, I took the money. So totally, we went into the bank and we deposited 10 lakhs. We deposited 10 lakhs is what? My 7.5 lakhs, her 2.5 lakhs. My 7.5 lakhs and her 2.5 lakhs. This money was there in bank. This money was there in. Yes or no? Yes or no? Yes. Now what happened is year over. Bank came and said, sir, you have earned an interest of 11,111. You have earned an interest of 11,111. Question to you. This 11,111 is from your contribution, your wife's contribution, both contribution. Both contribution. Yes or no? So you had your account. If you close your account is right now showing 10 lakhs, 11,111. Yes or no? No? You happily kept the money. You kept it there only. You kept it there only. Suddenly came your wife. She came and said, I want my money back. She came and said, I want my money back. You said, okay, you want 2.5 lakhs, take it off. He said, no. I gave you my money. You did what with that money? You deposited in FD. You got interest out of it. How come you are not giving me that interest? I lost money for 1 year. No, I am also a CA. I also know what is opportunity cost. Economics. Costing. Yes, you learned it in costing. Opportunity cost. You did not use it for that much time, so it is lost. Relevant costing. So she came and said, Boss Rahul, I don't just want 2.5 lakhs, I also want the interest on that. Now I have a problem because I don't know how much of that 11,000 has gone to her contribution, how much of the 11,000 has gone to my contribution, because I did not deposit the 10 lakhs on the start of the year. Correct. Now I do not want to give her more also. I have my own ethics. Yes. So I do not want to give her more, which means I need to come to a consensus. I need to come to a consensus. So I went and I said, dear, 11,111 is pertaining to the full PF. Pertaining to the full PF. I don't know when I contributed. I don't know when the interest changed. I don't know what the mechanism is. Let's do one thing. Let's average. Okay. So I went and I told her, in the start of the year, in the PF, how much was there? Zero. In the end of the year, how much is there? How much is it? 10,11,111. This PF is what has earned the interest of 11,111. Yes or no? Yes or no? So I went to her and I said, dear, this total PF has earned an interest of 11,111. Let's find out the average interest. How will you find out? You will divide this by 2. 11,111 divided by this will give you the average interest rate, correct or not? Let's not do that. Let's hold. I went and I told the fund is giving me an interest of 11,111. I want to know how much did your interest on. I will ask her the same question. See, dear, on the top I did average. In the bottom, if I again put directly 2.5 lakhs, I am making an assumption that you gave me this 2.5 lakhs at the start of the year. Did you give me the start of the year? No, which means I don't know when you gave. I don't know when I deposited. So what I will do again? Average. So from the bigger PF, I'm going to make your own PF. What is a bigger PF? Bigger PF is you and me. Smaller PF is only you. So I'm going to make a smaller PF. What is a smaller PF? Opening balance of her PF plus closing balance of her PF divided by 2. What was the opening balance? 0. What is the closing balance? 2.5 lakhs divided by. How do you do? You cross multiply. This number will be the interest which she earned. For those who are thinking, Rahul, இது அந்த லாஜிக்ல வருதா எப்படி வருது சொல்லு பாப்போம். This is your I. Correct? This is your PC. PC by 2. Correct? So this is nothing but your PC by 2. I is given on the right side. The 111, what is it? Interest. What is this? This is called as interest. So let's say A. A divided by the average fund is nothing but your R. Cross multiply. What is happening? I into average fund is equal to A by PC by 2. Correct? Okay, sorry, no, not divided by into PC by 2. Which number do I not have? I is what I don't have. So I'll push everything to the right side. So I is equal to A into PC by 2 divided by average fund. A by average fund is nothing but R. I is equal to R into PC by 2. Yes, sir. On the chart. Hey Rahul, what is this TC1? TC1 we'll do now. Here, get me the number. Sorry, da. 747. He's not that hungry for decimals. Yes, 2747. So tomorrow, if I have to give my wife, how much will I give? I will give her 2,50,000 plus 2747. Okay. I went to her and I said, okay, dear, this is your interest, 27. But she said, no. If the interest is going so good, do one thing, keep it with yourself. Keep it with yourself. I now have a doubt. But I said, okay, she's telling me, so let's keep. What happened? Next year, I thought, okay, boss, more money. Let's deposit one more FD. Next year, I'm again going to deposit 7.5 lakhs. Again comes wife. This time again she comes and says, no, dear, I will also give you an additional 2.5 lakhs. This year again I deposited 10 lakhs. Question to you. My interest in the current year will come on what components? It will come on the original 10 lakhs. It will come on the 11,111. It will also come on the current year 10 lakhs. Yes or no? Let's say I earned an interest of 50,000 in the current year. Again comes who? Wife. Now she says, Rahul, big money has come. 50,000 has come. This time, pakka big money for me. Now I definitely want my share. So I will tell her, what? Okay, dear, hold. Let's figure out how much is your share. What will I say? This 50,000 has been earned on everything. It's earned on everything. So I need to first figure out what is the interest I have earned. Which means I will do an average of the fund. What is the average of the fund? Opening plus closing by 2. What is my opening? 10 lakhs, 11,111. What is my closing? It is 10 lakh, 11,000 already there. You added 10 lakhs. You also added the 50,000. 20 lakh. 100. 1111. Correct or not? This is what is your closing. Any doubts? How did you get this 20 lakhs? It is the 10 lakhs of opening plus 10 lakhs of current year contribution plus 50,000 of the interest which you want. Correct? So the average of this fund is going to earn me 50,000 rupees. Yes or no? I will go to her and say, okay, dear, this is what your fund has earned. Now I will try to understand how much has your fund earned. Now I know last year she contributed 2,50,000. Last year she earned an interest of 2.7. Has she withdrawn this money? No. Will this money go on and be throughout the year? Yes. Current year she contributed 2,50,000. So will that 2,50,000 also be added for the closing balance? So my opening balance is what? My opening balance is 2,52,747. In this I will add an additional 2,50,000. What is my number? 5 lakh. 747. Yes or no? Divided by 2. Yes. Now can we derive the old formula? How to derive? This will be called as I. Mala is called as A. This is nothing but your average fund. Yes, sir. This is nothing but your average fund. How do you break this into? This 5,02,000 has current year contribution, which is nothing but PC. So what you are going to do? You are going to split that PC. What is left in that number? Opening contribution and opening interest. Yes or no? That opening interest is nothing but PC1. Opening contribution of interest is nothing but TC1. Yes or no? Now it is what? It is PC1 plus TC1. This also has one PC1 plus TC1 plus PC, correct? This whole thing was divided by 2, no? Yes or no? Technically, this means what? It is 2 PC1 plus 2 TC1 plus PC by 2. This whole thing also by 2, which technically means this is PC1 plus TC1 plus PC by 2. Yes or no? In this, I will take the I is equal to F average, which means I multiply this whole thing by R. Yes or no? Break it up. TC1 plus TC1 into R plus TC by 2 into R. This is nothing but your I. This is what we got on the top. Yes, sir. Do you want to follow the formula? Do you want to follow the formula? What do you want to do? Follow the box. Follow the box. Box is very simple. You need to do the average of the full fund, average of her fund. Average of the full fund, average of her fund. Here, her fund is nothing but the taxable component. Her fund is nothing but the taxable component. 7.5 lakhs, I was exempt. 2.5 lakhs is where she put a burden on me. She put a burden on me. That is what I'm going to tax it. How does the box look like? The box is like this. The box is like this. This will be called as opening balance of fund plus closing balance of fund divided by 2. Divided by 2. Right side will be what? Total interest. Right side will be what? Total interest. Here it will be opening balance of taxable fund plus closing balance of taxable fund divided by 2. This will give you the answer. What will you do? What will you do? Cross multiply. Frida. Yes. I leave it to your choice. What you seem enough for exam. If you feel like your faculty has made you mug it up, go mug it up and write it. If you feel this logic makes more sense, go with the logic. Okay? Okay? Okay. Since this one is a little complicated, we'll do one sum on this. We'll do one sum on this. My formula, your formula. The class look on the very. Let's see the question. See the question. Mr. X is appointed as the CFO of ABC Limited in Mumbai from 1st May 2021. 1st May 2021, he is appointed as the CFO of a company. His basic salary has been given as 5,50,000 per month. Per month. He is going to be paid 10% as DA. Okay. He contributes 11% of his pay and DA towards the recognized provident fund. 11% of the pay and DA towards the recognized provident fund. Tell me, no? When did he join? 1st May. In 21-22. Your previous year? Previous year. Previous year. He was there in the company for how many months? 11 months. He was there in the company for 11 months. For this 11 months, he got 5,50,000 into 11. 60 lakhs. 60 lakhs. 60 lakhs. 50,000. He got a basic of 60 lakh 50,000. He was also given a 10% as DA, meaning he got 6 lakh 5,000. This is what his DA is. This is what his salary is. He got 11% of this as a contribution. 11% of this. Total of this is 66 lakh 55,000 into 11%. Number is 7 lakh 32,000. 50. 50. He has contributed 7 lakh 32,050 towards the PF. Towards the PF. Company has also contributed the same amount. Company has also contributed the same amount. The accumulated balance is given to you. Let's read that. Compute the perquisite is given. Question to you. First of all, you need to check if it is less than 7.5 or more than 7.5. It is less than 7.5. If it is less than 7.5, you have to check for exempt up to 12% of salary. Is this less than 12% of salary? Yes, because question itself says it is 11% of basic plus DA. You can contribute 12% of basic plus DA. You have contributed only 11% of basic and DA. Meaning, in that 21-22, do you have a tax? Do you have a tax? No, you don't have a tax. You are safe. You are safe. Come to the next year. Come to the next year. They come and say, boss, the accumulated balance in the recognized provident fund as on 1st April, your previous year, previous year. Our previous year. On your previous year, opening balance is given as 15,35,000. 15,35,000. Closing balance is given as 33,55,000. Question to you: can you compute current year contributions? How do you compute the current year contribution? How do you contribute current year's contribution? Question there. It is there on the first line itself. The salary is how much? 5,50,000 per month. 12 months will become total salary. Add that 10% D on that. Multiplied by 11%, you will get current year's contribution. Yes or no? Yes or no? This number which you have is for 11 months. This number which you have is for 11 months. Now you need the number for 12 months. What will you do? Into 12 by 11. Seven lakh 98,600. Current year you contributed to PF 7,98,600. Employer contributed to PF 7,98,600. You have the opening balance of PF as 15,35,000. You have the closing balance of PF as 33,55,000. What is the movement which happened in the current year? What is the movement which happened in the current year? You have contributed. Employer also contributed. Then, have you withdrawn anything? No, which means the only thing left off is interest. So, what will you do? Add employer contribution of 7,98,600. Add employee contribution of 7,98,600. Add interest. What is this interest? Question mark. Get the number. 2,22,800. Hey, எப்படி வந்துச்சு புரிஞ்சுதா? Yes. Which means current year you have contributed 7,98,600. Employer has contributed 7,98,600. And current year full PF fund has got an interest of 2,22,800. Where is the problem? The problem is in employer's PF, because employer has contributed 7,98,600. He should have only contributed 7,50,000, meaning 48,800 rupees is extra paid by him. Will earn extra tax in the form of interest. How do? You prepare the table. What does the table say? First, average of the full fund. For the average of the full fund, you need opening balance of the fund and closing balance of the fund. What is the opening balance of the fund? 15,35,000. 35,000. What is the closing balance of the fund? 33,55,000 divided by 2. This is the average of the fund. This average of the fund has earned an interest of. Average fund has earned an interest of 2,22,800. Yes or no? Yes. This full fund has earned an interest of 2,22,800. Now I want to understand how much is my wife's share. Last year, did she put a share? No. Why? Because last year you only contributed 7,38,000 something. You contributed some 7,32,000 only. You should have contributed more than 7,50,000 to get wife. Wife did not even contribute, which means opening interest is 0. Opening contribution is 0. Opening interest is also 0. What is current year contribution from wife? 7,98,000 minus 7,50,000. Yes, sir. Yes, sir. Yes, sir. 7,50,000 is what you will contribute. Anything over and above, your wife will contribute. Wife is contributing 48,600 divided by 2. This will arrive at the number. I'm assuming the number is some 1,211 something. I don't know. Something like that. 2214 or 2217 will come. This is the answer. This is the answer. Question is asking you for what is the taxable contribution and taxable interest. Taxable contribution is 48,600. Taxable interest is 2214. Clear? Clear? Yes. The table will happen in a single shot. The table will happen in a single shot. You just plot the numbers, you put it on calculator, answer will automatically throw out. Answer will automatically throw out. If you want to use the formula, I don't know. What is the formula, by the way? PC by 2 into R plus PC1 plus TC1 divided by 2 into R. Now PC1 plus TC1 is 0. So this becomes 0. This becomes 0. PC by 2 is nothing but 48,600 by 2 into R is nothing but interest by F average. So interest is what? 22,800 divided by the same number above, the 1535 plus 3355. Basically, you're doing the same thing, you'll get the same answer. It will be 2216, I think. Some decimal difference will come. Some decimal differences will come. It will be pretty much the same number. Pretty much the same. Okay? Okay? Your choice. You want to remember the formula? You want to remember the table? Anyway works. Either way, works for anyone. Okay, as long as you pass, that is enough for me. Done? Done? This marks the end of your PF. This marks the end of your PF. From exam perspective, Rahul, what is relevant? Only this is relevant. What is this relevant? RPF is only relevant. SPF is not coming. URPF is not coming. PPF is also not coming. The only thing which is coming is RPF. So RPF has 4 kind of contributions: employer, employee, interest on employer, interest on employee, employer contribution. Exempt up to 7.5 for 12% of salary. Beyond 7.5, it becomes fully taxable. Employee contribution, full ATC, full ATC. Interest on employer contribution up to 7.5 exempt is 9.5%. Above 7.5, it is fully taxable. If it is employee contribution, up to 2.5 lakhs exempt for 9.5, beyond 2.5 lakhs, fully taxable. What we have left out is withdrawal. What we have left out is withdrawal. Income tax comes and says, boss, if you have been into the company for 5 years, no tax. If you have been into the company for 5 years, no tax. If you have been in the company for less than 5 years, tax is same as URPF. Tax is same as URPF. Abdina? Withdrawal. What is that? Employer salaries, interest on employer salaries, employee, no implications, interest on employee. Of course, that is the same provision. But yes, they do give certain exceptions to you. Exception number 1, they have come and said, boss, if you have been thrown out of the company, if you have been thrown out of the company, why will I ask you tax? You were thrown out of the company. Not your mistake. Not your mistake. Meaning resignation happening beyond your control. Resignation happening beyond your control. Exception number 2. Company moved. If the company itself shut down, where will you have a employment? Correct or not? Yes. So they said exception number 2. Shutdown of the business itself. Shutdown of the business itself. Exception number 3. You quit the company. You quit the company, but made sure that when you quit the company, you took this PF and put it into another PF. You took this PF, put it into another PF. Put it into another PF. Meaning, on the company or a PF, put it up. If you put it in the new company's PF, then no tax. Then tax. Point number 4, if you have withdrawn for illness. If you have withdrawn for illness, you are completely unwell. You are completely unwell. Surgery withdraw. In that case, also, they will not tax it from you. They will not. Companies layoff, shutdown of company, transfer PF from one employment to other employment, any kind of illness activities. In all these scenarios, even if you are there for less than 5 years, they will exempt it. They will exempt it. Elena, they will come and tax the full thing. Clear? Yes, 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 yes. With this, we are done with what is called as PF. With this, we are done with what is called as PF. Apart from this, you have something called as superannuation fund, NPS, and all. Ignore. Ignore. Not relevant from exam perspective. Not relevant from exam perspective. With this, we are done with what is called as allowances and retirement benefits. We are done with what is called as allowances and retirement benefits. In retirement benefits, do you foresee any kind of changes in 115 BSc? Do you foresee any kind of change in 115 BSc? Nothing. Because gratuity is paid on retirement. Pension is paid on retirement. VRS nanga padikave illa. Retrenchment nanga padikave illa. PF no. So therefore 115 BSc no impact. 115 BSc no impact. Whatever you learned is the final answer. Done. Entering the next leg is called perk. Entering the next leg called as perk. First perk we discussed is leave, travel, concession. What is the breakup? What is the understanding? What is the understanding? What is the English? Okay, for those who want to have a summary of RPF, it is there in the book. Okay, ஒரே ஷார்ட்ல எல்லா summary இருக்கும் bookல. What is the English, ma'am? Office giving leave for travel. Office is sponsoring your travel. Whether you do it on leave or not, it doesn't matter. Okay, office is sponsoring your travel. Personal, official. Office is sponsoring your personal trip. Office is sponsoring your personal trip during your holidays. During your holidays, income tax comes and says, first of all, boss, who can go for the trip is the first question. Who can go for the trip is the first question. It is the employee along with the family. Employee along with the family, which means what is family? What is family? It is spouse, children. Children restricted to 2. Children restricted to 2. If you are going for a personal trip and all, keep one child at home and go. Keep one child at home and go. No more than 2 child. No more than 2 child. You cannot balance 2 child. Wife balance panna mudiyala, 2 child na porum. Yes, you can balance one wife along with 2 child. Adukku mele you won't be able to balance. Keep one child at home and come. Keep one child at home and come. But yes, if you are obligated for it, அப்படின்னா என்ன அர்த்தம்? Bus, you did not plan your third child. You did not plan your third child. In that case, you are eligible for 3. In that case, you are eligible for 3. What do you mean you have not planned now? Second one should be twins. Otherwise, it is planned only. Otherwise, it is planned only. If the second birth was a twin, the second birth was a twin, you are permitted for 3. You are permitted for 3. If the second birth was not a twin, you are permitted for only 2. You are permitted for only 2. Rahul, first birth was twin. Second one, I did not make a choice. You are permitted for 2. Permitted for 2 only. First one, aanadhukku appuram you should have not made the mistake. Yes. Yes. Point is very simple. If the second birth was a twin, you are permitted for all the 3. You are permitted for all the 3. If the second birth was not a twin, you are permitted for only 2. Permitted for only 2. Male, female. That's not a problem. That is not a problem. Everyone is okay. Everyone is okay. So you should have spouse, 2 children, 2 children, or 3 children. 2 children or 3 children. Dependent parent, dependent siblings. Dependent parent, dependent siblings. If they are dependent on you, you can take them for trip. They're dependent on you, you can take them for trip. If they're not dependent on you, they will go for their own honeymoons. You go for your own honeymoons. Okay, don't disturb their honeymoons. They will not disturb your honeymoons. Okay, so it is spouse, 2 children or 3 children, and dependent parent, dependent siblings. Hey, spouse dependent irukno thevaya? Huh? Not important. Not important. Spouse is dependent on you only. You are only the better soul half. No, appadina pesunga. You are only the better half, second half, paadi half, saaptudha half, ellarum neenam. Okay, so spouse and all, no dependency required. Spouse and all, no dependency required. Children's also no dependency required. The dependency is required only on parents and grandparents. Grandparents vechita enna trip popora nee. The only thing you will be doing is Tirth Yatra. Go take them to some temple and all. Maybe leave them and come, that's all. Yes. No trips and all with grandparents. No trips and all with grandparents, only with their parents. Only with your parents. Yes. Yes. What was the provision? So first question, whom should you take for a trip? First question, whom should you take for a trip? Second question, where should you take for a trip? You can take them for only Indian trips. You can take them for any Indian trips. Foreign trips not allowed. Foreign trips not allowed. Flower are India, no one else. Okay, flourish are India, no one else. Only Indian trips are permitted. Foreign trips are not permitted. Third question, how many trips can you go for? You can go for only 2 trips per 4 years. You can only go for 2 trips per 4 years. Per 4 years. 4 வருஷத்துக்கு 2 ட்ரிப். That's all. அதுக்கு மேல உங்களுக்கு travel allowed இல்ல. அதுக்கு மேல உங்களுக்கு travel allowed இல்ல. 4 yearsல 2 trips is what you can do. Rahul, there is one blog going on. I forgot to take 2 trips. I forgot to take 2 trips. I took only 1 trip or I took no trips. I took only 1 trip or I took no trips. You can carry forward 1 trip and go to the next block. You can carry forward 1 trip and take it to the next block, provided you use in the first year itself. Provided you use it in the first year itself. Right now, the block going on is 18 to 22. Right now, the block going on is 18 to 22. Example, if 18 to 22, you do not go for 2 or 1 trip. You do not go for 2 or 1 trip. In the block going on right now, which is 23 to 25, you can carry forward 1 trip and put it in 23. Put it in 23. If you utilize it in 23, you will get an exemption. You don't utilize it in 23, lost. Clear? If you utilize 1 trip in 23, you can claim the balance 2 in 23, 24, 25, 26. 23, 24, 25, 26. 21 varikuma, 22 varikuma. 22. 22, 23, 24, 25. Okay. So in this 22, 23, 24, 25, if you utilize the 2 trips, then okay. If you don't utilize the 2 trips from the earlier block, you can carry forward 1 block and put it in 22. Put it in 22. But if you're putting it in 22, you can claim the balance 2 in the next 4 years. In the next 4 years, if you don't utilize that 1 trip, gone, you will only be able for 2 trips. You will only be able for 2 trips. Clear? Yes. So first condition we check whom to carry. Whom to carry. Second condition we check where to carry. Third trip we check how many to carry. Fourth trip to check how much of exemption. How much of exemption. Income tax comes and says, boss, if you're traveling by flight, economy class. If you're traveling by flight, economy class. If you're traveling by train, first class. No sleeper, no nothing, first class. First class I will give you as a permission, but if you're traveling by flight, only economy class. Okay. Flight travel பண்ணும்போது economy class, train travel பண்ணும்போது first class, bus travel பண்ணும்போது first class. Bus also travel பண்ணும்போது first class. Anything other than a bus, whatever is the recognized mode. Whatever is the recognized mode. Sir, there is no recognized mode. What to do? Check for what is the nearest bus. Check for what is the nearest bus cost, and the bus cost let it update put. Okay, check for what is the nearest bus cost. You can take that and you can put it there. So what happens if you are going by flight? If you are going by train, going by bus, others, same bus, first class, similar distance. Same bus, first class, similar distance. Clear? This is your provisions when it comes to leave travel allowance or leave travel concession. First class trip. If you go by ship, first class ship is allowed. Okay. Okay. Question to you: is this an exemption you will generally avail or not avail? You will generally avail. 115 BSc should allow, not allow. Not allowed. Not allowed. 115 BSc does not permit LTA, LTC. One trip. You either don't take both the trips or you don't take 1 trip also. 1 trip alone you can carry forward to the next block. Okay? 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 You're done with leave travel allowance or leave travel concession. This leave travel allowance or concession is not allowed under 115 BSc. 115 BSc பொறுத்த வரைக்கும் trip தேவையில்லை, பண்ணோ தேவையில்லை. உட்கார்ந்து வேலை பண்ண அவ்வளவுதான். Okay, just sit and do your work, no other shit. Done? Yes, next. What is the next? Other allowances. What is the next? Other allowances. In that, I think the first allowance in my book should be medical. The first allowance in my book is medical allowance. They're coming and saying, boss, you have 2 kinds of medical expenditures. You have 2 kinds of medical expenditures. One is in India, one is in foreign. One is in India, one is in foreign. If you are doing any kind of medical expenditure in India, do it for 4 reasons. I will give you exemption. Do it for 4 reasons. I will give you exemption. Balance everything else. taxable. Balance everything else taxable. 4 reasons should be you should do it in employer's hospital. You do it in employer's hospital. You should do it in government hospital. Okay, these are all conditions. Either one is okay. Either one is okay. You should either do it in employer's hospital. You should either do it in government hospital. You should either be getting treated for COVID. You should either be treating for COVID, or you should get treated for a specified disease. Or you should get treated for a specified disease. Rahul, what is specified disease? I don't know. I don't know. It doesn't matter. Doesn't matter. In exam, they will come and tell you this is a specified disease. In exam, they will tell you it's a specified disease. If they tell you it's a specified disease, exempt, illana. Done. Yes, 4 items. Employer's hospital, government hospital, COVID disease, specified disease. For any of the 4 reasons you get a treatment, it will be exempt. It will be exempt. Rahul, I wanted to get a cosmetic surgery. I went and I got treated in a private clinic. I gone and got treated for my grandfather in private clinic. Got my grandfather treated in government hospital. Taxable. Taxable. Dependent grandfather not covered. You can only have dependency up to parents. You can only have dependency up to parents. You cannot have dependency for grandfather. Grandfather is dependent on your parent. Not every clinic will treat COVID. Done? Done? Yes. So first thing is, if you are in India, 4 cases I am exempting, balance cases I am taxable. But in this 4 cases also, whom can get treated? Only family can get treated. Only family can get treated. Family here means self, spouse, children. Children up to 2. Special cases. No restrictions. No restrictions. First, understand you're getting treated for medicals. You're getting treated for medicals. Today itself, you cannot go and tell your employer, sir, I like these 2 children. My exemption, let this child die. Okay. And at any given point of time, all the children will not get ill together also, unless it's COVID. Unless it is COVID, all the children will not get ill together also. So they said, boss, any number of children, okay. Any number of children, okay. Hey, leave Puerto Rico, everyone will travel together. Medical Puerto Rico, not everyone will fall sick together. They will not come and say, my brother is sick, so I will also get sick. Okay. Okay. So they said, boss, it is spouse, children, dependent parent, dependent siblings. Dependent parent, dependent siblings. Understand people. Grandfathers, elderly people never come as in the family. Never come under family except for IFOS. Except for IFOS, they will never come into family. They will never come into family. They will always be treated taxable. They will always be treated taxable because for them, dependency is your parent. For them, dependency is your parent. They are not dependent on you. They are not dependent on you. If they have to scold, they will scold your parents. Then your parents will scold you. Correct? Yes, that is how the logic works. Clear? Clear? Yes. This was the scenario if it's in India. This is the scenario if it's in India. If it's a foreign thing, they came and said, boss, if it is foreign, then you need to go for a foreign travel. You need to go for a foreign travel. So they said, boss, 2 kinds of expenses. One is your treatment and stay. One is your treatment and stay. The other is travel. The other is travel. If you are going to treat and stay, meaning angapoi treatment angapoi tangardu. Both the things, it will be exempt up to what RBI decides. Exempt up to what RBI decides. If you are going for a travel, I will check how rich you are. I will check how rich you are. Your gross total income. What? Your gross total income should be less than 2 lakhs. Should be less than 2 lakhs. Not even 2 lakh 50. Basic income limit 2 lakhs. You should be very poor. Very, very poor. If you are very, very poor, it will be exempted for you. If you are not very poor, it will be fully taxable. Be fully taxable is what the rule is. Has never been tested in exam, so don't worry about it so much also. Okay. The only thing which is relevant in exam is India. But coming to this foreign travel, question to you: will you travel alone? Will you travel for someone else? You can carry one attendant with you. Question to you: the travel which is happening, the treatment which is happening, should it only happen for you or can it happen for family also? Happen for family also. So it is not required for you to travel with them. It is not required for you to travel with them. If your spouse is unwell, your spouse can go with someone else also. Your spouse can go with someone else also. It is okay. Hey, someone else now. Spouse, someone else could be attendant. Someone else could be attendant only. At the end of the day, she's going for medical treatment. She will not go for enjoyment and all. Treat she'll be like, let's go for honeymoon also. What? Obviously, ma. Okay, she's going for a medical treatment. Na, it's okay. It's okay. Yes. So she can go with one attendant. She can go with one attendant. That attendant does not have to be you. Does not have to be you. But if more than one attendant are going, then it's a trump. It's a problem because now you're going for trip. Now you're going for trip, then it's a different story. Then it's a different story. That time exemption will not allow for the second attendant. Not allow for second. Here. Yes, this is what the provisions are. Any doubts? No doubts. With this medical treatment is also done. Next one. Hey, maybe just take a note of this. Personal accident insurance policy is also exempted from tax. If the question comes and says that someone who has taken, employer has taken a personal accident insurance policy, it is exempt from taxes. Any kind of medical insurance taken on you is exempt. Any kind of medical insurance taken on you is exempt. Any kind of medical allowance given to you is taxable. Is taxable. Any perquisite of medical is exempt. Any allowance given is taxable. Any kind of personal accident insurance policy taxable. Company is paying your LIC. Taxable. Company is paying your LIC. Taxable. Here, yes, company has an obligation to you to the extent you work in their company and you're not unwell. You're not unwell. They are not obligated for you for your death. Okay, so any kind of LIC premiums and all they pay for you is a perquisite fully. Clear? Yes, medical done. Next one. Next one is break the English. RFA is a case where the employer is giving you a free or a concessional house. Free or a concessional house. In cases of RFA, split into two. In cases of RFA, split into two. One is the house, one is the furniture. One is the house, one is the furniture. Let's tackle the easy bit. Furniture, they come and say, boss, check whether the furniture is owned by the employer or hired by the employer. If it is hired by the employer, higher charges will become taxable. Higher charges will become taxable. If it is owned by the employer, 10% of the cost will be taxable. 10% of the cost of what? Asset. 10% of the cost of the asset will become taxable. Yes. Yes. If it is higher, then it is actual higher charges. If it is owned, then it is 10% of the cost. 10% of the cost. If you are into house, they are coming and saying, boss, first come and tell me whether it is a government employee. Employee. If it is a government employer, other employee. In cases of government employee, they came and said, Rahul, whatever is the license fee will become taxable. Whatever is the license fee of the house, that will become taxable. This is probably the only one place where government employees are being taxed. Probably the only one place where governments are being taxed. Actual license fee will become taxable. If you are a private employee, check whether it is owned or hired. Check whether it is owned or hired by the employer. In cases of owned, they are coming and saying, check the city population. Check the city population. They have given some slabs. From exam perspective, it is enough if you remember the last one. From exam perspective, it is enough if you remember the last one. Generally speaking, they will come and say that the RFA is in Bangalore, Chennai, Mumbai, Kolkata, and all those places. Population is definitely going to be more than 25 lakhs. So therefore, it will be 15%. Therefore, it will be 15% of the salary. 15% of the salary. If the employer owns the property, you will take actual higher charges. No, sorry. If the employer hires the property, you will take the actual higher charges or 15% of salary, whichever is lower. Here, salary means basic plus DA, forming part plus commission, all plus bonus plus all taxable allowance. What? It is basic plus DA, forming part plus all commission plus bonus plus all taxable allowance. The biggest definition. Therefore, perquisites always supposed to be done last. If you already have what your allowances and perquisites are, it will become easier. Clear? That yes, this is what your RFA looks like. It is basic plus DA, forming part plus all commission plus bonus plus all taxable allowances. Relevant period or last drawn salary. Relevant period. It is for your relevant period. Clear? Yes, this is what the provisions are from RFA perspective. Coming to hotel accommodation, they came and said, was provision same as RFA. For the exception that hotel will not be government and hotel will not be owned. Meaning, it will only be hired. So that's the provisions are actual higher charges or 24% of salary. Actual higher charges or 24% of salary. Salary means same as RFA. Salary means same as RFA. Clear? Yes. After hotel accommodation comes concessional loan. After hotel accommodation comes concessional loans. Provisions come and say, boss, if at all the employer gives a loan to the employee, if at all the employer gives a loan to the employee, please ensure that the loan is given at least at the SBI rate. If you are giving anything lesser than the SBI rate, this will be called as a perk. This will be called as a perk. What is the perk? It is the SBI rate minus the actual interest rate. SBI rate minus the actual interest rate. Question to you: SBI rate on what date? 1st April of the previous year. 1st April of the previous year, not on the date of now. It is the 1st April of the previous year. On the 1st April of the previous year, whatever is the SBI rate minus the actual interest rate will become your perkable taxable interest perk. But I don't want the percentage, I want the number. So I'll multiply this number with the loan amount. I'll multiply this amount with the loan amount. I will take the loan outstanding as on the last day of each month. I have to compute this monthly. So it is last day of the each month. It is the last day of the each month. Each month or the last day, whatever is the closing balance, that will be multiplied with the concessional interest rate. That will be multiplied with the concessional interest rate. But yes, they have come and said if the loan has been taken for any kind of illness or disease, no tax. And if the total loan amount itself is less than 20,000 rupees, no tax. Total loan itself is less than 20,000 rupees, no tax. Clear? Until now, from the first, which is your LTC, we told not liable for 115 BST. Yes. Balance amount was what? Balance was, first one we learned is RFA. Medical. First we learned is medical. Medical, is there any exemption given? No, there is no exemption given. So 115 BST will remain the same. Next, RFA, is there any exemption given? No. So therefore that will also remain same. Hotel accommodation, any benefit given? No benefit given. So therefore it will be remain the same. Last one is concessional loan. Is there any benefit given? No. All these are being taxed. What is the benefit? There are no benefits being given. So therefore this will all will be just like that, same under 115 BST also. Coming to the next one called as put. Income tax is coming and saying, boss, if the employer is giving you any food items, you are exempt up to 50 rupees per meal. You are exempt up to rupees 50 per meal. If the employer is giving you any kind of food coupon, you are exempt up to 50 rupees per meal. But yes, what do you mean by food items? Alcohol not covered. I am giving you something for you to work in the company, not for you to dance in the company. Okay, so alcohol will become fully taxable. Second item, tea, coffee. Fully exempt. Tea, coffee, unlimited tea, coffee is permitted to you. You will have full exemption. Other than soru kudutha 50 rupees per meal exempted. 50 rupees per meal exempted is what the provisions are. Yes, under 115 BAC, they have come and clarified. If they give you food in office, no problem. But if they give you a food coupon, taxable. 115 BAC food coupons are fully taxable. Any kind of food in office is exempt. Okay? Clear? Either they are coming and saying, boss, if the employee is traveling to some other place, and because of that you're sponsoring him food, exempt. Then also exempt, because then he's traveling for official duty. Apo kurtalo exempt. Clear? Done. Any kind of lunch allowance given to you. What I can exempt is only perk. What I cannot exempt is allowances. I cannot exempt you allowances. Basically, lunch allowance is nothing but your basic salary only. உனக்கு கொடுக்கறத காசு சாப்பிடுறதுதான். இதுல நான் தனியா lunch allowance போட்டு கொடுத்தா what is the difference? I don't see. Okay, so lunch allowance கொடுத்தா it is fully taxable. Lunch perk கொடுத்தா check whether it is an office or it is a food coupon. If it is an office, then it is 50 per meal. If it is in food coupon, it is also 50 per meal, but 115 BSC will restrict it. 115 BSC will clear. Next item. Gift. This gift is different from your IFOS gift. This is the gift received from Employer. This is a gift received from employer. Income tax comes and says, boss, if they give you cash, this is nothing but your basic salary. This is nothing but your basic salary. உனக்கு கொடுத்தது basic salary or gift தான். வேலை பண்ணாதானே வேலை. கரெக்டா? வேலை பண்ணாம காசு கொடுத்தா அது gift தானே. Yes, so it is nothing but your basic salary. Therefore, it is fully taxable. If they are giving you any kind of kind, kind na? What gifts have you got in kind? Company பொறுத்த வரைக்கும் depend ஆகும். Some companies give iPad, some companies give sweet, some company will give thermocol. என்னோட கம்பெனி எனக்கு thermocol எல்லாம் கொடுத்துருக்காங்க gift. thermocol எல்லாம் கொடுத்துருக்காங்க. நானும் அப்படிதான் யோசிச்சேன். அதனால எனக்கு மூஞ்சி அப்படிதான் இருந்தது. Even my face was like that only that day. ஏன்னா thermocol எல்லாம் கொடுத்துருக்காங்க நான் சிங்கம். thermocol, it was not like thermocol அப்படியே கொடுத்தாங்க. Basically what they did is they had a brand. அந்த பிராண்டுக்கு they had to promote, so அந்த ப்ரோமோட் பண்றதுக்கு ஒரு சைக்கிள் வந்துட்டு thermocol இம்ப்ரிண்ட் பண்ணி கொடுத்தாங்க. அதுக்கு நீ பேசாம சைக்கிளே கொடுத்துருக்கலாம். Waste of money. And that too, this came from Netherlands. thermocol இம்போர்ட் பண்ணிட்டு நெதர்லாண்ட்ஸ்ல இருந்து கஸ்டம்ஸ் டியூட்டி பே பண்ணி கொடுத்தாங்க. இங்கே பண்ணிருக்கலாம். நாங்களே வீட்டுல போயிட்டு அந்த காட்டன் கிராஃப்ட்ல நாங்களே பண்ணிருக்கோம். அசிங்கமா இருந்தது எனக்கு. Anyway, all that comedy aside, if they give you some kind of kind like this, இதுக்கு நான் என்ன வேல்யூ பண்றது தெரியல, but okay. If they give you kind like this, they have said was up to 5,000 exempt. If the kind goes beyond 5,000, you have two choices. You can either exempt up to 5,000 or you can tax the whole thing. What do you prefer? I prefer tax the whole thing. The reason is very simple. IFOS asks you to tax the whole thing. IFOS is asking you to tax the whole thing. You follow a different provision here. There, if it goes wrong, it's a problem. There, the rule is very clear. You have to tax the whole thing. There, it is very clear. You have to tax the whole thing. Here, you can make a choice. But there, if you make a choice, paper will go for a choice. Okay? So don't make that risk. Don't make the risk. Already too much to learn about. So therefore, keep it consistent. Whatever you have received here will become fully taxable. If it is beyond 5,000. If it is beyond 5,000. Clear? Yes. Understand, it is 5,000 here, it is 50,000 there. It's 5,000 here, it is 50,000 there. Here they have not defined the asset. இங்க உனக்கு கார் gift கொடுத்தாலும் taxable தான். If they give you a car also, it is taxable. There, if they give you a car, be extremely careful. That is why I'm telling you, step number 4 is very important. நீ எந்த ஹெட்டுக்கு கிளாசிஃபை பண்ற ஆன்சரை மாறும். Okay, if you classify into wrong head, the answer will change. Okay, so be extremely careful under which head you have to classify this. Any doubts? Next. ESOP. Next is ESOP. Simply they're coming and saying, boss, whatever is your ESOP which is given to you, market value of the share will be taxable. That's all. Market value of the share will be taxable. Nothing for me to discuss. Next one. Transfer of movable assets. They're coming and saying, boss, split it into three. First item is called as computers and electronics. Second item is called as motor cars. Third item is others. Understand, I'm discussing about transfer of movable property. I'm not discussing transfer of immovable property because transfer of immovable property comes under CG. This is transfer of movable property. In transfer of movable property, they came and said, boss, if you're transferring a computer to them, whatever is the cost of the computer minus 50% depreciation, WDV method for every year, you kept it with you. Who's you? Employer. For every year, employer kept it with you. So cost minus 50% depreciation, WDV, for how many ever years employer kept it with himself will become the WDV. This WDV will be checked with whatever money you are recovering from the employee. If you are recovering lesser from the employee, difference will become tax. If you are recovering more from the employee, no perk for you, zero. Clear? So if the computer was worth 10,000 rupees and you used it for 2 years, first year you will give a depreciation of 50%, number will become 5,000. Next year you will give a depreciation of 50%, number will become it's WDV method, so it is 2,500. So if you give an employee a computer worth 2,500 rupees and he gives you back 3,000 rupees, perk will be zero. He gives you nothing, perk will be 2,500. Clear? Not clear? In this, every completed year is what is counted, fractions are ignored. Second provision is your motor cars, 50% becomes 20%. 50% becomes 20%. It is now cost minus 20% depreciation WDV method. 20% depreciation WDV. Last item is your others. Others item, they are coming and saying, boss, it is cost minus 10% depreciation SLM method. 10% depreciation SLM method. SLM method, you will do a depreciation at the rate of 10% for them, and then you will arrive at the WDV. Compare this with the money you get from them, the difference will become taxable. Clear? This is for transfer. Transfer. You are now coming to use. Now you are coming to use. Same three items. What are the three items? Computers, motor cars, others. We are coming and saying, boss, if you are giving an employee computer for using, exempt. Why? Computer value ஆக முடியாது. Computer இல்லாம வேலை ஆக முடியாது. So they said, boss, if you are giving an employee a computer to work, then it is exempt from taxes. It is exempt from taxes. அதெல்லாம் போய் Netflix பார்த்தாலும் it is exempt தான். ஒன்னும் பிரச்சனை. Next most important thing from exam perspective, they are coming and saying, I understand whether the car is fully official, fully personal, partly official, partly personal. Fully official, fully personal, partly official, partly personal. If the car is fully used only for official purpose, it is fully exempt. It is fully exempt. In this case, you will have to keep a log. You'll have to keep a log. You'll have to prove it to the assessing officer. How is it official? From where did you travel to where? When did you travel? How much did you travel? Everything has to be properly prepared. How much has to be properly prepared? If it is fully personal, it is fully personal. Everything is taxable. Everything is taxable, meaning driver kurta taxable, insurance kurta taxable, maintenance kurta taxable, car kurta, hire la kurta taxable. What is the amount? Ona kurta 10%. Ona kurta 10%. That is what the provisions are. Both of these are not coming for exam. Both of these are not coming for exam. What is coming for exam is part official, part personal. What is coming for exam is part official, part personal. In my book, it is in a table format. It is in a table format. You need to understand what is happening. You need to understand what is happening. Let's say employer gives the car, and employer itself is taking care of the repairs and maintenance. What is the employer doing? He is still giving the car. He is still doing the repairs and maintenance. I will check for the car CC. I will check for the car CC. If the car CC is anywhere less than or equal to 1,600 rupees, I will tax 1,800 per month. 1,800 per month. If the car CC is more than 1,600, I will tax 2,400 per month. I will tax 2,400 per month. If the employer only gives you the car, if the employer only gives you the car, does not take care of the repairs and maintenance, 1,800 will become 600, 2,400 will become 900. 2,400 will become 900. This is what the provisions are. Okay. In both the scenarios, if the employer gives you a driver, 900 per month will be additionally taxable. 900 per month will be additionally taxable. Clear? Yes. Coming to the next scenario. It is not employer owning the car. It is not employer owning the car. It is employee owning the car. If the employee is owning the car, and employee itself is taking care of the repairs and maintenance, perk for US. By correct. So in this case, everything is zero. Everything is zero. The scenario will come where an employee owns the car. Repairs and maintenance is handled by the employer. Repairs and maintenance are handled by the employer. Income tax comes and says, boss, fully repairs and maintenance taxable. Full repairs and maintenance taxable. But since it is also used for official purposes, you can claim as a deduction 1,800 per month or 2,400 per month. Or 2,400 per month, depending on the CC of the car. Please understand, when the employer owned the car, you were taxable for 1,800 and 2,400. Since the employee owns the car, you are claiming 1,800 and 2,400. Clear? Not clear? Yes. Same logic. If the employer gives a driver, full driver salary taxable, 900 per month will be exempt. Full driver salary taxable, 900 per month alone will be exempt from taxes. Clear? Yes. And the last item is your other assets. Other assets, they are coming and saying, boss, if it is higher, then it is higher charges. If it is owned, then it is 10% of the cost. Question to you. I have given you a motorbike. Part official, part personal. Employer has given the bike. Employer itself is taking care of R&M. CC of the bike is 900 per 900. CC of the bike is 900. Amount taxable is very good. It is 10% of the bike. It is 10% of the bike. Please understand, motor car is what is covered. Motor bike is not covered. Motor bike jumps into other assets. Motor bike jumps into other assets. Actual cost of the car into 10. Actual cost of the bike into 10% will become taxable. If it is higher, then it is higher service. If it is higher, then it is higher. It's clear? Yes. Yes. Last leg of the provisions. I don't think these are coming for exam, but just to understand. Just to understand, you have something called as education facilities. You have something called as education facilities. Provision comes and says, if the education is for you, who are you? Employee. If the education is for the employee, it is exempt from tax. If the education is for the child of the employee, I will give you an exemption provided you take the education in my school. Who am I? Employer. Provided you take the education in my school, and my school cost of the education should be less than 1,000 rupees. My school cost of the education should be less than 1,000 rupees. I should be giving education to students at the rate of 1,000 rupees per month. If I give an education to students at the rate of 1,000 per month, then it is exempt for employee's child. If not, it is fully taxable for employee. Fully taxable for employee. I don't know which school will give you 1,000 per month. Okay. Last item, if you are giving anyone other than child or self, if you are giving anyone other than child or self, whatever is the cost of education, fully taxable. Cost of education is fully taxable. Transport facilities is not coming for exam. Servant and all you can ignore. Servant and all you can ignore. Question apathy, you just have to come and tell boss whatever is the cost of servant, fully taxable. Cost of servant is fully taxable. That's all. What is exempt from taxes? Telephone reimbursement exempt from taxes. Telephone allowance fully taxable. Telephone reimbursement is fully exempt. Telephone allowance is fully taxable. Balance and all you can ignore. Balance and all you can ignore. Specified and all you can ignore. Just remember, if the money is come in your hand, meaning you pay the servant and collect from the employer, fully taxable. You pay the money to the servant and then collect from the employer, it is fully taxable. Employer directly gives the servant, you will be exempt only if you are poor. You will be exempt only if you are poor. What do you mean by poor? Your salary should be less than 50,000. Your salary should be less than 50,000 per. Who are you? Employee with a salary less than 50,000 per annum. உனக்கு ஒரு servant. நீயே யாருக்கு ஒரு servant இருப்ப? You are itself someone's servant. உனக்கு ஒரு servant. If you are having a salary less than 50,000 per annum, you will be exempted for any kind of servant, water charges, gas charges, all these charges. I don't know which servant will get all these charges. At least. Okay, but as such, not coming from exam perspective. Not coming from exam perspective. With this, you're done with salaries. With this, you're done with salaries, except for the last leg called as deductions. Last leg called as deductions. We already discussed. First deduction is your standard deduction. Amount is. Will you give this in 115 BSc? No. Not eligible under 115 BSc. Not eligible under 115 BSc. Second item is PT. Second item is PT. Exam comes and says, boss, PT can be paid by two people. Either you can pay it or employer can pay it. If you are paying it, directly claim it. If you are paying it, directly. If employer is paying it, he will first add it, then he will claim it. If employer is paying it, he will first add it, then he will claim it. If you are directly paying, you directly claim it. That's all. Done. Last item is entertainment allowance. Only applicable to government employees. Only applicable to government employees. Provision comes and says that was 3 of the items can be claimed as a reduction. Least of the 3 items can be claimed as a reduction. First item will be actual. Second item is 1/5 of the basic. 1/5 of the basic. 20% of your basic salary can be claimed as reduction. Third item is 5,000 rupees. Entertainment to kuda 5,000 rupees da kudukum. Coming to that. Your entertainment allowance has 3 items. One is actual, 1/5 of basic. 1/5 of basic. Last item is 5,000 per year or per month. Per annum 5,000 rupees. Per annum 5,000 rupees. From 115 BSc perspective, all the 3 not allowed. All the 3 not allowed. Only for this attempt. Only for this attempt. May 24 provisions have changed. May 24 provisions have changed. Okay. Yes. Last thing. not something from exam perspective, but just for you to know, there is something called as salary representation. There is something called as salary representation. In exam, if you see the salary something like this, you see the salary something like this, understand how it works. Understand how it works. What the provision comes and says is, if a salary looks like this, it means you're going to start from rupees 20,000. You're going to start from rupees 20,000 per month or per annum. Per month, you're going to start from a salary of rupees 20,000 per month. After 12 months get over, your salary will be incremented by 2,500. Salary will be incremented by 2,500, meaning year one later it will become 22,500. For the next full year, you'll get 22,500. Adhikapra it become 25,000. Where will you stop? You'll stop on 30,000. You'll stop on 30,000. This is called pay scale. This is called pay scale. You start from 20,000 salary, increment it 2,500 rupees every year until the time you reach 30,000. Till the time you reach, this is what is called as pay scale. Clear? Yes. All your salary definitions in a summary format is given in the last page of the book. Okay. Can we quickly understand? Leave encashment. What is the salary definition? Basic plus DA forming part plus turnover commission. Average illa last donor. Average of 10 months. Average of 10 months. Gratuity, POGA cases. Basic plus DA all. Last donor average. Last. Gratuity non-POGA. Basic plus DA forming part plus turnover commission. Average last 10 months. Provident fund. Basic plus DA forming part plus turnover commission. Relevant medium. HRA. Same. HRA. Same. RFA. Basic plus DA forming part plus all commissions plus bonus plus all taxable allowance. All taxable allowance. Entertainment allowance. Yes. Entertainment allowance. Yes. Clear. Done. Done. This marks the end of your salary. This marks the end of your salary. Should you do some sums? Do some sums? Let's do. And it's a lunch break. It's your lunch break. When you get tired of the question, I am not tired. We'll go after salaries is over. We'll go after salaries is over. Okay. We'll come back and do what chapter? I'm planning PGBP. I'm planning PGBP. We have till 4, no? You don't want to take CG till 4 and all. PGBP. We'll do PGBP. We'll come back 3 hours. We have no 3 hours solid. We'll do PGBP, and then next Saturday we'll do CG. Next Saturday we'll do CG. We'll come back and we'll do CG on Saturday. CG along with maybe clubbing or set off. Along with clubbing or set off. By Sunday you should be done with chapter 6A and AMT 115 and the 10 AA, 10 AA. All these things will be done. Next Saturday, if you are in the mood, we will do TDS. If you are in the mood, we will do TDS along with that amendment chapter of updated return. Along with the updated chapter of updated return next to next Saturday. Next to next Saturday. Yes, if you are able to do it faster next Saturday itself, we will do it next Saturday. Okay, we'll see how we go. Okay, right now we'll complete salaries and then go to PG. Yes, let's do. ஆரம்பிக்கலாமா? பின்னாடி பேக்ரவுண்ட் மியூசிக் மட்டும் வரலாம். Tell me? Yes. Look at the question. Compute the taxable value of the perquisite in respect of medical facilities which is received by Mr. G. From his employer during the previous year 22-23. I will just read the question. You tell me which is taxable, not taxable. Okay. First one. Medical premium paid for ensuring the health of Mr. G. Taxable exempt. 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 Treatment of Mr. G by his family doctor. Treatment of Mrs. G in a government hospital. Treatment of Mr. G's grandfather. Treatment of Mr. G's mother, 68 years and dependent by family doctor. Okay, 1 second. This is taxable. A tick is taxable, cross is exempt. whatever works for you. Okay. Treatment of Mr. G's sister dependent in a nursing home. Why, ma? Nursing home. Treatment of Mr. G's brother independent. Treatment of Mr. G's father 75 years and dependent abroad 50,000. Hold. Expense of staying abroad of the patient 30,000. Add both, it becomes RBI limit specified 75. Exempt amount is 75. Taxable amount. Medical allowance. Perquisites are exempt. Allowances are taxable. ABC Company Limited has allotted 1,000 sweat equity shares. To Sri Chand in June 2022. Okay. The shares were allotted at 200 rupees per share, as the fair market value of the share was only 300 rupees. 300 rupees is fair market value. I gave it for you for 200. My perk is 100. The fair market value was computed in accordance with the method prescribed. What is the perquisite value of the equity shares allotted to Mr. Chand? 100 rupees per share. Number of shares are 1,000. Number is. What will be the cost of acquisition for Sri Chand on subsequent sale? 3 lakhs. You paid from your pocket 2 lakhs. You have extra tax 1 lakh. So amount of cost becomes. Next one. Yes. Sri Bala is employed in ABC Co Limited as a finance manager and has given you the list of the following perquisites, which is provided by him to the company. Domestic servant was provided at the residence of Sri Bala. Salary of the domestic servant is 1,500 rupees per month. The servant was engaged by him and the salary is reimbursed by the company. He have given it and then got it back. Fully taxable. Free education was provided to his 2 children, Aarti and Ashok, in a school maintained and owned by the company. The cost of such education for Aarti is computed as 900 and for Ashok it is given as 1,200. No amount was recovered by the company on such education. For Aarti it becomes exempt. For Ashok it becomes fully taxable. For Ashok it becomes fully taxable. For those who are thinking my faculty taught me reduce 1,000, you have both the choices. In my class it works on fully taxable because I don't want you to confuse. Okay, don't make any new assumptions on things and all. Let's work with what little knowledge we have. Okay, so this becomes fully taxable. Next one. The employer has provided movable assets such as television, refrigerator, and air conditioner at the residence of Bala. The actual cost of the assets provided to the employee is 1,10,000. This is transfer a use. In a use, it is cost at the rate of 10%. Number becomes. A gift voucher worth 10,000 was given on the occasion of his marriage anniversary. It is given by the company to all employees above certain pay grade. First of all, tell me, taxable under salaries, IFOS. How did you decide? The answer is there in the last line. It is given to all employees at a certain pay grade, meaning it's a part of the policy. In which case it becomes taxable under salaries. If it was taxable under IFOS, the amount would have been zero. This is taxable under salaries fully because it is more than. Classification is extremely important. Careful. Telephone provided at the residence of Sri Bala and the bill aggregating to 25,000 is paid by the employer. Question to you: allowance perquisita? It's a perk. Who is paying it? Employer is paying it. It's a perk. Telephone perk are exempt from tax. Telephone perk are exempted from taxes. Housing loan is 6% per annum. Amount outstanding is 6 lakh rupees. Sri Bala pays 12,000 per month towards principal on the 5th of each month. He is discharging on the 5th of each month. SBI interest rate is given as what? Hey. The question. SBI interest rate is given as what? Where is it given? Check the last line. Check the last line. SBI interest rate is 10%. You are giving to employee at 6%. Provisional concession is 4%, which means 4% is a benefit. 4% is a benefit. You have to do 4% into 4% into no 6 lakhs is your loan. On every 50 is repaying 12,000 rupees. On every 50 is repaying 12,000 rupees. You are starting on April. Will you take April or will you take 30th April? You will take 30th April. Amount of loan outstanding as on the last day of each month. So you will take 30th April. On 5th of April, he has paid 12,000. Correct? On 5th of April, he repaid 12,000, which means on 30th April, it will be 5,88,000 for April into 1 by 12. Correct? 1 month, no? 1 month. It is 4% per annum. It is 4% per annum. So into 1 by 12. May will become 5,76,000. June will become 5,64,000. July is 5,52,000. August is 5,40,000. August ka September. September is 5,28,000. October is 5,16,000. November is 5,04,000. December is 4,98,000. 12,000 Canada. 92,000. Then 4,80,000. January. February is 4,68,000. March is 4,56,000. How many total? 12 over? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 is over. Okay. All these will be multiplied by 4%, multiplied into 1 by 12. Will you sit and multiply 1 by 1 items? What will you do? Add all the 12 line items. Add all the 12 line items multiplied by 4% directly, divided by 12 directly. Add all the 12 items. $588 plus 576 plus 564 plus 552 plus 540 plus 528 plus 516 plus 54 plus 492 plus 480 plus 486 plus 456. Harima? Study material question this is. 20,000? Done. A company-owned accommodation is provided to him in Delhi. What is this? What perk is this? What perk is this? RFA. A company-owned accommodation is provided to him in Delhi. Furniture costing 2,40,000 was provided to him on 1st August 2022. Monthly salary of Bala is given as 25,000 per month. They've given you the monthly salary also. They've given you the monthly salary also. So it is 25,000 per month into how many months? How? August, September, October, November, December, January, February, March. Correct? Correct? I don't know. This is where you have to make an assumption. See, there are two school of thoughts. One school of thought is he got the house right from 1st April and he got the furniture from 1st August. Second school of thought is, how the hell did he live in a house without a furniture? From April to August. So you can make your own assumptions. The problem is there is a full stop in the middle. Had this full stop not been there, you would have made an assumption what? Both are come on 1st August. Everything makes a difference, right? So you can make your own assumptions. I personally feel I cannot live in a house without a furniture. So I need furniture also, which means the house was also given to me on 1st August. So both the house and the furniture are from 1st August. Start from August, it is 8 months. Company owned accommodation, you have to do what? Check for the salary. Check for the population. Population of Delhi is more than 25 lakhs. Salary will become 15%. 25,000 into 15% will give you 3,750 per month. You are there for 8 months. Number is 30,000. That is pertaining to your house. Apart from that, you have got your furniture. Furniture costing 2,40,000 is given, meaning the furniture is owned. If the furniture is owned, the cost is 10%. 10% of the cost will give you 24,000. 24,000 is for the full year or from August? It's for full year. So you need to proportion it to 8 months. So 24,000 into 8 by 12. Done. Shall we? Next one. His son is allowed to use a motorcycle belonging to the company. Son has been given a motorcycle. The company has purchased this motorcycle for 60,000 on 1st May 2019. The motorcycle was finally sold to him on 1st August 2022 for 30,000. In this case, what is happening? There are two transactions. First, from April to August, he was using the cycle. Then from August, he got a sale. Which means there are two perks in this. One perk is transfer of mobile asset. Second perk is use of. Let's first understand the use. Use is what? It's a motorcycle. Therefore, it is 10% of the cost. Cost is what? 60. Use, not transfer. For use, it is directly on the cost. 60,000 into 10% will give you 6,000. 6,000 is for the whole year or for part of the year? For whole year. It's for the whole year. So you need to proportion it for the part of the year. This is from April to July. 1st August, you got the car, cycle. 1st August, you got the cycle. April, May, June, July, which means 1 by 3. So it becomes 2,000. So for the purpose of use, tax amount is it's on. Now come to transfer. This is a motorcycle. So therefore, it is cost minus 10% depreciation. SLM method. 10% depreciation. SLM method. You need to start from 1st May 2019. Start from 1st May 2019 to 30th April 2020 is year number 1, correct? It's year number 1. Then 1st May 2020 to 30th April 2021. Then 1st May 21 to 30th April 22. Will you check for 1st April 22? Will you do 1st April 22 to 1st August 22? Will you do this? No. I told you it is for every completed year. This is a fraction, so I will ignore. Total number of years are 3 years. I'm going to follow SLM or WDV. I'm going to follow SLM. I directly have to do what? I can take the cost is what? 60,000. Cost is 60,000 into 30%. What is this 30%? 10% for every year. 10% for every year. Therefore, it becomes 18,000. 18,000 is the depreciation. WDV becomes 42,000. I should have given this car cycle to him for 42,000. I gave him the cycle for 30,000. Therefore, I gained out of him. Perk for him will be am I fast? Understandable? Yes. What is left? Harira?
Company has purchased it on 1/5/2020.
Okay.
So we achieved it.
I'm not checking on a financial year terms. I'm checking from the date to the date.
The depreciation for 11 months.
I'm not giving. It's 1st April, 1st May 2019 to 30th April. 12 months. For every completed year. Completed year starts from the date on which you purchase. It's not financial year. Okay? Done? Clear with the question? Mr. Goyal received the following emoluments during the previous year ended 31st March 2023. Basic pay is given as 40,000 rupees. Dearness allowance is given as 15,000 rupees. Commission is given as 10,000 rupees. This is fixed commission or turnover commission? Fixed commission. Entertainment allowance is given as 4,000. Check whether he is government or not. Medical expenses reimbursed is given as 25,000. Taxable, fully exempt. Taxable or exempt? Taxable, fully taxable. Fully taxable, it is not given any condition. You have not satisfied the 4 conditions, becomes fully taxable. Professional tax paid, 2,000 is the number, 1,000 is paid by you, 1,000 is paid by the employer. Mr. Goyal is contributing 5,000 towards PF. Self-contribution, employer contribution. Self-contribution. He has no other income. He has no other income. You are required to determine the salary of Goyal, provided he is a state government employee. Tell me, basic salary allowed, not allowed? Taxable. DNS allowance. Taxable. Commission. Entertainment allowance. It is first taxable under allowances, then claimed as a deduction. Medical reimbursement. Taxable. Professional tax. How much will be taxable? 1,000 will be taxable. So tax 1,000. Add all the numbers. 40 plus 55. 65, 69, 74, 84, 85. 95. Gross salary is 95,000. First item you will allow as deduction is number is. Then you will allow professional tax amount is full 2,000. 5,000. You paid 1,000, so allowed as deduction. Employer paid 1,000, you added as perk. Now you are going to claim as a deduction. So therefore, full 2,000. Clear? Last item is first item in that is actual. Actual is 4,000. Then 1/5 of basic. Basic is 40,000. 1/5 of that is 8,000. Then 5,000. Lowest of the 3 is 4,000. So 95 minus 50 will be 45. 45 minus 2 is 43, and then 39,000. Hey, Mr. Goyal contributes 5,000 towards RPF. Useless information. Step number 1, identify the question. Question is only asking for income from salary. Unnecessary information given to you. You just will put a note saying that this is allowed as a reduction under 80C. Since the question is asking for income from salary, this information is ignored. Irrelevant. Done. That is why I told after this only lunch. I know how much time it will take. Mr. X retired from the services of MSY Limited on 31st January 2023 after completing 30 years and 6 months, 1 month, 30 years and 1 month. He had joined the company on 1st January 1993 at the age of 30 years. What are they trying to say? He is senior citizen. Important one. He is senior citizen. He joined at the age of 30. Now he has completed 30 years. Technically means he is 60 years and 1 month. He's 60 years and 1 month, which technically means he's a senior citizen. Relevant information we need to check. We need to check if the question asks for tax liability, it is relevant. If it is not asking for tax liability, not relevant. Look at the last line. It says what? Which means information is irrelevant. Information is irrelevant. First item, they have received a gratuity of 6 lakh rupees. He was covered under the Payment of Gratuity Act. You are receiving gratuity of 6 lakhs. You are covered under the payment of gratuity. Next item, leave encashment is 3,30,000 for 330 days leave balance in his account. He had 330 days of leave balance in his account for which he received 3,30,000. He was credited 30 days leave every year. 30 days leave every year. As per the scheme of the company, he was offered a car which was purchased on 30th January 2020 by the company for 5 lakh rupees. Company has recovered 2 lakhs from him for the car. Company depreciates the car at 15% SLM basis. Relevant, not relevant? Company depreciating at 15% SLM. Relevant, not relevant? Not relevant. An amount of 3 lakh rupees is given as commutation of pension for 2/3 of his pension computation. For 2/3 of his pension computation. Company presented with him a gift voucher of 6,000 rupees on retirement. Taxable exempt. Colleagues gifted him an LCD TV worth 50,000 from their own contribution. IFOS, amount taxable. Yeah. LCD ma. Step number 1 to gift, identify the asset. இதுதான் பண்ணோம். கொஞ்சம் பிரேக்குக்கு முன்னாடி பண்ண மறந்துட்டோம். அடுத்து லஞ்சுக்கு முன்னாடி என்னடா சாலரின்னு கேட்பீங்க. கரெக்டா? லஞ்சுக்கு அப்புறம் என்னடா சாலரின்னு கேட்பீங்களா? Step number 1 when it comes to gifts, identify the asset. Identify the asset. This is an LCD TV. LCD TV is not a specified mobile asset, therefore directly becomes exempt from tax. The following are the other particulars given to him, that he had drawn a basic salary of 20,000 and 15% DNS allowance per month for the period of April 22 to 31st January 2023. Why have they given this information? Last drawn salary for 10 months. Received pension of 5,000 per month for the period 1st February 2023 to 31st March 2023 after commutation of pension. After commutation of pension, you are required to compute the gross total income. Can we do it together? Let's do it together. I think I have 2 more questions on it. Oh shit. Hariharan. Question number 6, page number 5. Question number 6, page number 5. Question number 6, page number 5. Can we start? Can we start? Always follow the format. Always follow the format, because if you miss the format, you jumble it up, answer will not come right. Okay, so let's follow the format. The first thing in our format is basic. Look at the question. Where is the basic? Second last information. Second last information. Put the basic number. First of all, put a heading. Ma. What is the heading? Computation of income from salaries. Computation of income of salary. Income from salaries for. For Mr. X. For the assessment year. No doubt. Assessment year. Computation of income from salaries of Mr. X for the assessment year 23-24. For the assessment year 23-24. As a practice, if the question is only asking you for one head of income, the question is only asking you for one head of income, 2 amount columns are enough. 2 amount columns are enough. If the question is asking you for multiple heads of income, 3 amount columns. In this, only one head of income is there, so it is particulars with 2 amount columns. Inner amount column will be for the purpose of checking exemptions and all. Outer amount column will be only for adding. Will be only for adding. Done? Yes, particulars and 2 amount column. First item in your format is basic. Check the number, put the number. Number is 20,000 into 10 months. 20,000 into 10 months. Why 10 months? He retired on 31st January. Adukapra avanukku salary. So 10 months, 20,000 into 10 months. Outer column direct number is 2 lakhs. Outer number direct column 2 lakhs. After the format, DA. Number is DA. What is the number? 50% directly 1 lakh on the outer column. Directly 1 lakh in the outer column. Here is where you need to make an assumption. Here is where you need to make an assumption whether the DA is forming part or not forming part, because the question does not specify anything. The question does not specify anything. What do you want? Forming part. So DA in brackets assumed forming part. DA within brackets assuming forming part. Assuming forming part. In the format, next item. Do you have a commission in the question? No. Next one. Do you have a bonus in the question? No. Next item. Do you have HRA? No. You have leave encashment. First item, leave encashment. First item, leave encashment. In the inner column, put the number received. In the inner column, put the number received. 3,30,000. Inner column, 3,30,000. Inner column, 3,30,000. Next line. Less exempt. Less exempt hyphen. Less exempt hyphen. Least of the following four. Less exempt hyphen. Least of the following four. Least of the following four. Point number 8. Actual. Point number 8. Actual. In the particulars column itself, what is the number? The particulars column itself, 3,30,000. The particulars column itself, 3,30,000. Point number B. Notified limit of 3 lakhs. Point number B, 3 lakhs. Same particulars column. Same particulars column. Point number C. Average salary for the last 10 months. Here is where you need to first find out the salary. What is the salary? Basic plus DA forming part. Do you have a turnover commission? No. So basic plus DA forming part. How much is the number given? 20,000 plus 50% is 10,000. So therefore 30,000. 30,000 per month is your average. For the last 10 months, no salary change. Correct? No salary change. So 30,000 into 10 will give you same number. Point number C. Average salary for 10 months. Point number C. Average salary for 10 months. Hyphen 30,000 into 10. Hyphen 30,000 into 10. Particulars column itself 3 lakhs. Particulars column itself 3 lakhs. Point number D. Average salary into leave credit unutilized. Average salary into leave credit unutilized. What is the average salary? 30,000. What is the leave credit unutilized? 7 months. Okay. Okay, fine. 330 by 30. 330 by 30. So it is 30,000 into 330 by 30. Number is 3,30,000. Least of the four mark. Least of the four is 3 lakhs. This number goes into your inner column in negative. This number goes into your inner column in brackets. Inner column in brackets. Outer column number is 30,000. Done. After leave encashment, next number is leave encashment done. Then HRA done. Voluntary not there. Retrenchment not there. PF irka. Sorry, special allowances not there. Other allowances not there. Come into retirement benefits. First item is next one, gratuity. Gratuity number is inner column 6 lakhs. Inner column 6 lakhs. Under that, less exempt hyphen least of 3 hyphen least of 3. Point number A. Actual. Point number A. Actual. What is actual? 6 lakhs. A in the format follow panla exam la mark varadu. Follow the format. Point number A. Actual, which is 6 lakhs. Point number B. 20 lakhs. Point number B. 20 lakhs. You call it ceiling limit, notified limit. Directly put 20 lakhs. Doesn't matter. Number one up. Point number B. 20 lakhs. Point number C. Point number C. Why are you doing 15 by 26? 15 by 26 into 15 by 26 into number of completed years or rounded thereof. Number of completed years or rounded thereof. Number is 30. Number is 30 into last drawn salary. Last drawn salary. In this question, the last drawn salary is 30. Whatever number is 519,231. 519,231. 519,231. Least of the three. 519,231. It will come in the inner column as brackets. Will come in the inner column as brackets. Brackets meaning negative. Brackets meaning negative. Total number of gratuity received is 6 lakh rupees. 5 lakh, whatever that number is to be reduced. Outer column, final number 80, 8769. எனக்கு தெரியலமா, நீங்க தான் கால்குலேட்டர் வச்சிருக்கீங்க. 8769 80,769. 80,769. After gratuity, next item was pension. Next item was pension. Under that pension, first item is uncommuted pension. Under that first item is uncommuted pension. Number is directly given where? Where? Last line. Check the last line. Received in the last line. Number is number is 10,000. Number is 10,000. Directly in the outer column. Directly in the outer column. Uncommuted pension done. Next item is commuted pension. Inner column amount is. Hey, amount is 3 lakhs. Amount is 3 lakhs. Inner column. Less. How much? Less how much? 1 by less 1/3 of total pension. Less 1/3 of total pension. Hey, complete the answer first. 1/3 of total pension since he is receiving gratuity. The numbers are not important, the provisions are important. Less 1/3 of total pension since he is receiving gratuity. Since he is receiving gratuity. Next line you put it as 1/3 into 1/3 into 3 lakhs into 3/2. 1/3 into 3 lakhs into 3/2. What is 3 lakhs into 3/2? Total pension. Yes, 1/3 into 3 lakhs into 3/2. So 1/3 into 4,50,000 will give you 1,50,000. 1,50,000 is your exemption amount. You received how much pension? 3 lakhs as pension. 1,50,000 is an exemption. So balance will become 1,50,000. Clear? Clear? Pension done. Next item is PF, I think. Next item is PF. We don't have PF, so ignore it. Coming to the next part called as perquisites. Coming to the next part called as perquisites. First item was leave travel concession. Kuduthirukangala. Leave travel concession kuduthirukangala. No. Next item was medicals. No. Next item. Now you can start from wherever it's given. Start from the top. Gratuity done. Leave encashment done. Next item was use of car. Use of car or transfer of car. Use of car, transfer of car. Transfer of car. Next item, transfer of car. Next item, transfer of car. Inner column. How much is the amount? How much is the amount, ma? It's not 5 lakhs. 5 lakhs is the cost. 5 lakhs is the cost. So you need to first figure out transfer of car. Next line. Next line, WDV. Next line, WDV is equal to 5 lakhs minus a car na WDV method. Car na WDV method. How many years over? How many over? 3 years over. 3 years over. So what will you do? You'll do 5 lakhs into 20% is depreciation. So which means 80%. Correct? So 5 lakhs into 80% into 80% into 80% means the same only, no? 5 lakhs into 80% will give you a number. On that 80% again, on that 80% again, number is 2 lakh 56,000. Inner column number will become 2 lakh 56,000. Hey, Purunjada. You want to do the long method, you can prepare a working note on the next page. You can prepare a working note on the next page. You will put it as 5 lakhs minus 10% depreciation for year 1, minus 20% for year 1, minus 20% for year 2. Your choice. Okay, so it is 5 lakhs into 20 into 80 into 80 into 80. Number is 2 lakh 50. Next line, less. Amount recovered. Less amount recovered. Amount is 2 lakhs, inner column. Lakhs, inner column. On the outer column, number is 56,000. Number is 56,000. Done. Done. Next item. Everything is done. Huh? Gift item. Next item, gift voucher. Next item, gift voucher. Amount taxable is full 6,000. Hey, your choice. You want to make it 1,000? Your choice. Amount taxable full 6,000. Anything else left? Anything else left? Total it up. 6,32,769. 6,32,769. Do you have any IFOS income? Do you have any IFOS income? What? Do you have any IFOS income? No. Which means this number is nothing but your gross total income. No. 5 lakhs. What is the number? 6,32,769 will be called as gross salary. Will be called as gross salary. Mandatory item. Standard deduction. Less standard deduction. Number is 50,000. Will you get PT? Will you get PT? No. Will you get any entertainment allowance? No. Get me the number. Gross salary is equal to 5 lakh. 5 lakh 82,769 is your income from salaries or otherwise gross total income also. Five lakh 82,769 is your income from salaries as well as your gross total income. Done with the answer? Double underline, close it. Double underline and close it. Clear up? Clear up? Clear up? For whatever you did, 8-mark question, you will get only 4 in this. For whatever you did till now, if you write this much, you will get only 4 marks. You will get only 4 marks. What and all have you missed? What and all have you missed? Everything which you thought in your head but is not there in the book. What and all did you miss? Start from the first. That you have already written in the particulars itself. Next. Nope. 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 No. No. That is also there but not there. What is the first and the most important item? What is there in the book but you have not done it? Did you compute salary for some exemptions? Did you compute salary for some exemptions? Leave encashment salary definition is different. Gratuity exemption is different. Did you quote it somewhere? Right. Notes. The rule is very simple. Everything in your head should be on your book. Everything in your head should be on your book. Examiner is as stupid as he can be. Okay, he needs to know that you know everything and you have not copied from the right person. Yes? Show it to him. Note, point number 1. Point number 1. Salary for the purpose of exemptions are as follows. Point number 1. Salary for the purpose of exemptions are as follows. Where and all have you changed the salary definition? First one, leave encashment. Point number A. Point number A, LE. LE, leave encashment, whatever. LE, leave encashment, whatever. Hyphen. What is salary definition? Basic plus DA forming part. Basic plus DA forming part. Turnover commission is not there in the question. Basic plus DA forming part. Done. Next. Point number B. Gratuity. Point number B. Gratuity. Number is what is it? Again, basic plus DA full. Basic plus DA full. While the answers are the same, it doesn't matter. You still need to clarify. Done. Now check the book again. You started from basic DA. You already gave the assumption there itself. Then you did what? LE. Then you did LE. LE we are done next. Gratuity we are done next. Did you mention somewhere that you're receiving gratuity? It is 1/3 since you're receiving gratuity. Done next. Hey, somewhere you had transfer of car, no? Transfer of car, note number 2. WDV for the purpose of transfer of car. WDV for the purpose of transfer of car will be depreciated using 20%. Will be depreciated using 20%. Company following 15% is not relevant. Everything on the mind should be on the book. Company following 15% is not relevant. Next.
If this fully that's
Done. Next. That and also. Next. That's all. Third one. Gift of LCD. By friends. By colleagues. Gift of LCD by colleagues shall be exempt from tax. Since LCD is not a specified movable property. Under what head? Write that. Under IFOS. Done. This is only when you get your full 8 marks. One small assumption missed out, half a mark gone there. Okay. If you are having very little knowledge itself, that little knowledge at least portray properly. Okay. I'm not expecting you to read for all 60 and go, but if you're reading for 55, deliver 50 at least and come. If you're reading for 55, deliver 50 and come. Don't miss on because of these items. Okay. These are small things in your paper. These small things can make a toss for you. Okay. Don't make these kind of mistakes. These are something which you knew, but you forgot. Let's not forget all this. Okay. Everything you know on your head should be on your paper. That's the standard rule. The person who's correcting your paper is as stupid as he can be. Unke income tax okay, so you need to teach him income tax by your paper. So the paper should tell you what income tax you know and what he knows. Clear? Maybe this is the mistake which is keeping you hold for this many attempts. Maybe this could be a mistake which is keeping on hold for these many attempts. Let's crack it this time.
these notes are incorporated in particular.
If you have space, go ahead. Whatever notes are very relevant to that particular is what I put there. Whatever is the subsidiary things is what I put here. So if you can feel like you can put it in particulars, please do go. Just don't scribble on the particulars. It should look legible enough. Clear? Done? Next question. We're only discussing this question. Mr. Balaji is employed as a production manager in Beta Limited. Furnishes you the following information for the year ended 31st March 2023. The basic salary up to 31st October is given to you as 50,000. After October, from November, it became 60,000. For the last 10 months, it will change. Correct? October, November, December, January, February, March. 6 months you will have 60,000. 4 months you will have 50,000. Check on. Salary is due and paid on the last day of every month. Good for you. No problem. DNS allowance is 40% of basic salary. 50,000, 40%, 60,000, 40%. Take care of it. Bonus equal to 1 month salary. Which month salary? Read the question. It is paid in October, so which means October salary is what is given. Basic salary and the DNS allowance. Which means 50,000 plus 40%. 50,000 plus 40% is 20,000. 70,000 is the bonus you would have got. 70,000 is the bonus you would have got on October. So it will be taxable in the month of October. Will be taxable in the month of October. Contribution of employee to recognized provident fund on the employee 16% of basic salary. Huh? 12% of what?
So we have to contribute.
That is what the problem is. That is interest. This is 6. It is 16% of basic salary which is given as a contribution. Exemption is 12% of salary. Salary means basic plus DA forming part, which means now you need to make an assumption whether DA is forming part or not forming part. Let's check the question if it is given anywhere. If it is given anywhere, then you will do basic plus DA forming part. In which case, what will you do? Contribution will be 16% of salary. Exemption, kudukumode, you will give 12% of basic plus DA. Be careful, people. Okay. Suppose if you make an assumption that DA is not forming part, then directly 4% is taxable. Check. Professional tax paid is 2,500, out of which 2,000 is paid by the employer. 2,000. Reduce 2,500. Reduce 2,500.
So 500 only we will have.
2,000 is paid by the employer, meaning 5,000 is paid by employee. What employer pays is a perk. So 2,000 will be added, and then keel 2,000 plus 2,000 plus 500 will become subtracted. Facility of laptop and computer was provided to Balaji for both official and personal use. Cost of laptop is 45,000, computer is 35,000, were acquired by the company on 1st December 2022. Exempt. Use. Facility is told, so therefore it is a use. Motor car is owned by the employer, cubic capacity exceeds 1.6 liters. Provided to the employee from 1st November 2022, meant to both for personal and official. Repairs and maintenance of 45,000 is also met by the employer. Car is self-driven by employee. What will happen? Ignoring all the numbers, directly tax 2,400 per month. How many months? From November, December, January, February, March. 5 months, 5 months, 5 months, 5 months. Okay? Okay, next. Leave travel concession is given to the employee, his wife, and his 3 children. One daughter aged 7 years and twins aged 3. You are eligible for exemption for all the 3. Second one was unplanned. Cost of air tickets is reimbursed by the employer. 30,000 is for adults, 45 is for 3 children. All are economy class. Allowed, not allowed? Allowed. Balaji is available for availing the exemption to the extent it is permissible in the law. What is eligible? Full 45 is eligible. Amount to be taxed is 0. Conveyance allowance of 1,000 rupees is given by the company towards actual reimbursement of conveyance spent on official duty. Amount taxable is 0. They are very clearly saying it is for official duty. They are very clearly saying it is official duty, meaning everything is spent. Meaning everything is spent. When everything is spent, everything becomes exempt. Everything becomes exempt. He is provided personal accident policy for which premium of 5,000 is paid by the company. Then personal accident is exempt. He is getting telephone allowance of 500 per month. Fully taxable. Fully taxable because it is allowance. You are required to compute the income taxable in the hands of Balaji for the assessment year 23-24, assuming he is not opting for the provisions of 115 BSc. Fortunately, none of the questions I see average salary computation. I don't see 10 months coming in because there is no retirement happening. Correct? There is no retirement happening. Question is ended. Now you need to make an assumption whether DA is forming part, not forming part. If you say DA is forming part, then what will happen? It is 50,000 into how many months? April, May, June, July, August, September, October. 7 months. This is into 5 months. Number is 3,50,000. 3 lakhs. Total is 6,50,000. DA is how much? Number is 40% of 6,50,000 is 2,60,000. Total is 9,10,000. Assumption number 1. If you come and say the DA does not form part, 4% of 6,50,000 directly taxable. 4% of 6,50,000 directly taxable. Option number 2. You come and say, no, Rahul, it is forming part. What will you do? 16% of basic salary is how much? 16% of basic is how much? 4,000. 12% of 9,10,000 is how much? 1 lakh 9,000. Question to you. How much is the amount taxable? 0. It is not negative, it is 0. Exemption amount is lower of the two. Exemption amount is lower of the two. You need to make an assumption. If you make an assumption DA does not form part, then in that case 4% of that number will become directly taxable. If you say DA is forming part, nothing will be taxable. Nothing will be taxable. Your choice. Your choice. You can make an assumption. You can make your own assumptions. But please ensure that you always mention your assumptions. Clear?
Yes.
Yes. Any doubts in this question? No. Mr. Khanna, an employee of IOL. IOL is Indian Oil. Mr. Khanna is an employee of IOL, New Delhi, a private sector company, has received the following for the financial year 22-23. What has he received? He's received a basic salary of 1,20,000 rupees, an HRA of 1 lakh rupees, a special allowance of 30,000 rupees. Special allowance taxable exempt. Mr. Khanna was residing in New Delhi and was paying a rent of 10,000 rupees per month. Compute the eligible exemption under 1039 in respect of the HRA received. Please stop the following. Actual 50% of salary. Salary is in this question 50% of what? 1,20,000. Point number C. 10,000 is into 12,000, 1,20,000. Minus 10% of 1,20,000 is 12,000. Number is 1,08,000. List of the following is 60,000. Amount exempted is amount taxable is correct. If Mr. Khanna opts for RFA, whereby IOL would be paying the rent of 10,000 per month to the landlord and recover a sum of 2,000 per month from Khanna, which was in excess of his entitlement, what will be the perquisite value in the hands of? What will be the perquisite value? Basically, they're saying was ignore HRA. Ignore HRA. Now I will give you RFA. I'll give you RFA. In this RFA, I will pay the 10,000 rupees. I will pay the 10,000 rupees and recover from you. What is the perk value? What is the perk value? It is actual higher charges or 15% of salary, whichever is lower. Actual higher charges is 10,000 into 12. So 1,20,000. 15% of what? 15% of what? 1 lakh? 15% of what? What is the salary definition for RFA? Basic, DA, forming part, bonus, all commission, all taxable allowances. You have a special allowance, taxable or not taxable. Should be included for RFA, not included. Put it in a different color. Put it in a different color. 15% of 1,50,000 will give you 22,500. 22,500. What is the amount taxable? 1,20,000 or 22,500, whichever is lower.
2,500.
Sorry, no? That is after. It is before this. So it is 22,500 into 12 months, correct? 1,50,000 per month, no? For full year. Full year, sorry. Okay. So it is 22,500, 1,20,000 or 22,500, whichever is lower, number is 22,500, 22,500 minus 2,500 into 12, number is 30,000. So 22,500 minus 30,000 will become minus, which means perk value is 0. Perks can never be negative. Perks can never be negative. It will be done. Yes. So for HRA, your taxable amount will be 40,000. For RFA, your taxable amount will be 0. Which of the above would be beneficial to Mr. Khanna? Would it be RFA or would it be HRA? You are required to assume that Mr. Khanna wishes to opt the exemptions provided under the law and hence would not opt for the provisions of 115 BST. Which one is more beneficial? No. Why is RFA beneficial? Because there is no tax or income. Why is RFA beneficial? Huh? Taxes. Taxes zero for RFA, which means there is tax for HRA. Work na tax panna maatiya. Why did we choose RFA? Abdiya. Okay, let's try. What is your HRA income? 1,20,000 plus 40 plus 30. Number is 1,90,000. You will allow standard deduction of 50. Total income is tax on that is zero. Tax on that is zero. Come to RFA. Come to RFA. What is your basic salary? 1,20,000. What is your RFA? Zero. What is the special allowance? 30. Total salary is 1,50,000 minus standard deduction is 1,00,000. Tax on that is huh? Basically, we had instead of 1,00,000, if you get 1,00,000. You studied with me only, no? That is the problem with you. You get more income. Having more income is beneficial, is it? The implications of tax you have to pay. My question is very simple. Is having more income beneficial or having more cash beneficial? That is the problem with you people. The moment we get in tax, everything is tax related for you. You also did another subject called as FM, where you had something called as cash flow statements, cash budgeting. You were doing something called as tax in that also. You were doing something called as tax in that also. What were you doing there? Were you finding the cash flow or were you finding the tax on that? You're finding the cash flow. When you had to make a decision, were you making decision basis cash or basis income? Were you making a decision basis cash or basis tax? Understand people, in an RFA scenario, கையில எவ்வளவு வருது? கையில எவ்வளவு வருது? You're getting in your hand 1,20,000 as basic, 30,000 as special. How much? 1,50,000. கையில இருந்து எவ்வளவு போறது? 2,500 is going from your pocket. 2,500 is going from your pocket. You are receiving 1,50,000. You are paying 2,500 into 12. 30,000. Number is கையில எவ்வளவு காசு இருக்கு இப்போ? 1,20,000 இருக்கா? Come to HRA. How much are you receiving? 1,20,000 plus 100, 1,00,000 plus 30. How much are you receiving? 2,50,000. In this 2,50,000, you are going to pay from your pocket what? You are going to pay from your pocket what? 10,000 rent? No. That's going from your pocket only. No. How much is the number? கையில எவ்வளோட காசு இருக்கு? You want to have more cash? You want to have more tax? What is a better option? This is what I told in my class. If you remember, it is not about you paying more taxes. It is all about you having more income. It is not like you will go to a big four and come and say, I will not join a big four and earn 10,000 salary because I will have to pay more tax. Will you go to your mid-firm and come and say, sir, I always want to be poor so that I have to pay no tax? Or will you say, I'm okay to pay tax of surcharge of 5 crores also as long as I have more income? Do you want to become rich in life or poor in life? If you are rich, automatically tax will flow, correct or not? Will you start making decisions saying tax kudukaduknala I will be poor in life? Hey, tax is a part of the life. It is not your life itself. Correct? You don't make decisions basis what is your higher tax. You make decisions basis what is your higher cash. It's or no. It's or no. It's or no. Imagine a scenario, you go to a big four, salary stipend per month is 10,000 rupees. How much is total stipend? 10,000 rupees is your stipend. For the year, how much is your stipend? 1,20,000. Standard deduction, how much is your stipend? 70,000. Tax you paid is 0. You go to a mid-firm, minimum stipend is 2,500 rupees. How much is the total stipend? 30,000. Standard deduction is 30,000. Salary becomes 0. Tax on that is. Will you go to a mid-firm and come and say, no, Rahul, there is a possibility that it will be 70,000, so I will not go to a big four? Or you will come and say, Kaila 70 worth nala dana. Hello. It is like you getting an opportunity to become a chef in Taj and you getting an opportunity to become a chef in local tea kada. And you're saying what? Rahul, Taj ku pona income adhikama irukku, tax adhikama irukku, adana tax pay panama na tea kada poi ukandran. Anuma? People, tax is a part of life. It is not your life. Just because you are doing tax subject does not mean every answer will revolve around the fact that income should be lower. It revolves around the decision making of you. Decision making happens in tax or financial management. Financial management recognizes tax or cash. Is what the answer. Today, let's say for example, this HRA would have had tax. HRA would have had tax. You would have had an income more than 5 lakhs. You would have had tax. Will you come and say, no, RFA is still a better option? No, you will still check for cash flow. You will check for cash flow. The only difference is there now what you'll do. Cash flow, you will reduce the tax of 10,000. For example, if it is cash flow, you will reduce the option of 10,000 and then you will come and say, boss, now I will compare. So just because you pay tax does not change your decision. What is your net to cash is what makes your Clear? Do I have to repeat? One of your practice manual questions. Practice manual questions. It's not there in a study material. It's not there in a study material. I picked it up from a practice manual, which is 1985. Some very old question this is. Okay, it has come, I think, back in 2012, 13 and all, it used to come in exams. And everyone like you were doing that only. What? RFA is better, everyone got 0. And some point of time, I realized, first, if I keep giving this question, everyone will fail. So they removed it from a study material itself. In my class, I will keep you ready for everything. Okay? Exam okay? Be extremely careful, people. The question is not asking you what is your tax. The question is asking you what is your decision. You do make decisions based on your cash flows. Please make your decision based on your cash flows and not your. You will come and ask me, Rahul, yesterday we did an HP question and the 2 SOPs and 1 LOP. And the question we did not check for cash flows. And the question we income dana paatnom. Different. Very good. And the question cash flow illa. And the question never even has the cash flow. All the 3 houses were having 0 income. And all 3 houses having 0 income, you were just trying to avoid where it would be more tax. Had those 3 houses had a cash flow, I would have done it differently. The decisions always revolve around here. Clear. Last question in the book, then we'll go further. Shall we? Yes. Last question in your book. Just to clarify, this is the kind of question you leave an exam and come. Telling you, this is the kind of question you leave an exam and come. I think this came in May 19 or May 18, I think. This question came in May 19 or May 18. One of the toughest questions ever prepared in exam. toughest questions ever prepared in exam. The examiner had a different mindset itself that day. Okay, where a mindset like that question itself, this is not the question to answer. I tell you why, because every time we answer one of the answers, everything will be wrong. I can guarantee you, right? Okay, these are the kind of questions which you have to look at and you need to realize, boss, don't touch it. Okay, this is where your smartness comes into it, because you still have an optional question. This is the kind of question where 8-mark question you can hardly score 1. Hardly. On the level of question. Okay. In these scenarios, if you go to another question where you're able to score 3 also, it's good enough. Still good enough. Okay. Questions like this is where you have to realize and you have to use your head. That is why the options are given to you. Okay. Let's read the question and understand where we make mistakes. Yeah. Let's read it. It says Mr. Honey is working with a domestic company having a production unit in USA. Having a production unit in USA for the last 15 years. Where is he? USA. He is in USA. He has been regularly visiting India for export promotion of the company's product and stays in India for at least 184 days in every year. With this, thing you should write in your book is that he is a he is a he is an ROR. He is staying for 184 days every year. Yes, sir.
Yes, sir.
He is staying for 184 days every year. With him staying for 184 days every year, that becomes an ROR. It is not RNOR. Definitely not a resident. Definitely not a resident. Resident now what I don't know. Okay. We have prepared a chart not to understand whether it is R. We prepared the chart to understand ROR and RNOR. Please be clear on what you're writing. Okay. So this is an he sums the following information to you. Salary received outside India for 6 months is 50,000 rupees. The reason why I'm telling you it is ROR is because this is now taxable. Had you written it as R or RNOR, you don't know what to do with this. Correct? So first to be clear on that. So this is ROR. Within ROR, this income becomes taxable. Salary received in India, definitely taxable. So 50,000 into 6 months is taxable for 50,000 into 6 months is taxable for India and 3 lakhs is taxable outside India. Both are your basic salary. Okay. He has been given an RFA in USA for which company pays 15,000 rent as 15,000 per month as rent. But when he comes to India, he stays in the guest house of the company. 6 months when he is there in that USA, it is for RFA. 6 months when he is here, it is a guest house. He stays in a guest house in India. He stays on a guest house in India. During the period, he is given the free lunch facility. The time he is staying in India, he is given a free lunch facility. For the previous year, company incurred an expenditure of 48,000 on this facility. This is what
Guest house
facility food for your food company is giving you 48,000 as the expense cost. You need to understand how much is exempt. For your exams, we discussed that it is exempt for 50 per meal. 50 per problem is it is 50 per meal. In a day, how many meals do you have? I don't know. Question number 1. In a day, how many meals do you have? Will you call breakfast as meal also? Or will you call dinner as meal also? Question number 1. Question number 2. He was there for 6 months. Therefore, 6 months. In a month, how many meals did you give him? 30 days are 22 working days are 24 working days are 15 working days are. I don't know. Okay. Question number 3. Which 6 months did he come here? Because if he came in April, then it was 30, 31, 30, 31, 30, 31. If he came in Feb, it was 28, 31. So,
Yes, sir.
how do I compute? What assumption? What assumption?
Because it is would be given actually.
See, at any given point of time, let's assume. Okay, let's assume. You're telling boss, let's assume the highest of the scenarios. Let's assume the highest of the scenarios. He's getting 3 meals every day. Okay, 3 meals every day. 30 days approximately. 30 days approximately. 6 months number is 540 days. 540 meals. 540 meals per meal I'm getting. Number is 27,000. Exemption would have come to you if the meal was 27,000. Circular comes and says, boss, up to 50 per meal exempt. Balance only is taxable. I have given 48,000. Given 48,000. Now I don't know whether I should reduce 27,000 or there should be change, because 30 can become 31, 32 also. Yes, sir. So is 27,000 the right figure? 27,000 is not the right figure. Can you reduce 27,000 from 48? No. You cannot reduce 27,000 from 48 because that is the wrong figure. So what to reduce? You don't know. You know what I stated? I came and said, circular is requesting me to reduce 27,000 or some number according to it. But I am not in a position to understand how much is the actual cost. I am not in a position to understand how much is the actual cost. Therefore, the amount taxable is full 48,000. Amount taxable is full 48,000. I asked the simple question. Where are you staying? USA. Have you come to India for special official purpose? Which means you have come to India for offshore activities. If you have come to India for offshore activities and we are giving you food during your offshore activities, amount taxable should be 0. Where did this provision come from? Hey, you have come to India on my request. I am giving you food on my request. If I am giving you food on my request, I should ask you what? You should not tax anything because I am requesting on your behalf only and coming here. Upon offshore activities, food should be 0 for me. You did not even give me the benefit of 27,000. You asked me to tax everything. First mistake. Wait, it's coming. First mistake. Second, you have been given what? Guest facility. You have been given amount taxable is. Amount taxable is. Where is the amount? Where is the amount? What to tax? What to tax? Hey, hotel accommodation then. Not hotel accommodation. RFA no chigo. RFA, if it is owned by the employer, you are not supposed to give 15% of salary or actual higher charges. Where is higher charges? What to tax? You know what comedy happened? Here alone they will come and say, boss, you came to official purpose, no, therefore exempt from tax. Now, you came for official purpose, therefore it is exempt for tax. But in official purpose, the source of the tax for one. What is the understanding? You should come to India. You should work in India, but not in anything. Saab naam mein vaale pannu. The saab naam mein vaale pannu is the tax. Mistake number 2. Next one. He has been provided a car of 2000 cc in USA, which is used by him both for official and private purpose. The actual cost of the car is 8 lakh rupees. But when he is in India, the car is used by him and the members of his family only for personal purpose. For 6 months, the car is part personal, part official. For 6 months, the car is fully personal. 6 months, the car is fully personal. Wait. Cost of the car is 8 lakhs. This is owned or hired up? This is owned, which means employer will bear the cost. This is employer bear the cost. The monthly expenditure of the car is 5,000 full stop. Monthly expenditure of the car is 5,000 full stop. Who paid? Employer, employer. Where is the 10% purpose? It's partly official, partly personal. Who paid? Paid, ma? Make an assumption. If employer paid, it becomes 2,400 per month for 6 months. Then for the balance 6 months, it is 10% of the cost of the car into 6 by 12 plus 500 per month. 5,000 per month plus 5,000 per month. Option number 2, you come and say, no, boss, it is paid by employee. In that case, it will be 900 per month. For 6 months. Then next 6 months, it will be 10% of the cost of the car into 6 by 12 into 5,000. to 5,000. Correct? Correct? Yes, this is also one assumption I have to make. This is also one assumption I have to make. This is the only place if you have made a right assumption, you'll get the right marks. You'll get the right marks. Next one. His elder son is studying in India, for which employer spends 12,000 per year. For which employer spends 12,000 per year. Amount taxable is I. Very good. Where is it given that the employers offer? This is the employer's school. Where is it given that it is employer's school? What is that? Employer is spending 12,000 on this. Where is it given it is employer's school? There are two conditions. Condition number one, employer school. In that school, it should be less than 1,000 per month. Where is it given it's employer's school? Not given. It said employer is repaying, which means it is someone else's school, which means amount taxable is full 12,000. Mistake number 3. Getting better. Come. Whereas the younger son is studying in USA and stays in a hostel for which Mr. Honey gets 3,000 per month as combined allowance. Amount taxable is fully taxable. Why? This outside India. This outside India. You know what is the comedy? This outside India which you don't know, it's only there in my book. It's not there in study material. Check. Study material will come and say child hostel allowance 300 per month per child for 2 child. That's all, full stop. Where is it given? It's India. Who made that assumption? I made that assumption. This was the first time I changed my book. The books which I printed before that will never have the word that it is to be India. In the question part of the book because I itself did not know of the provision. Mistake number 4. The company has taken an accident insurance policy and life insurance policy. During the previous year, the company paid a premium of 5,000 on the accident insurance policy and 10,000 on the life insurance policy. Which amount is taxable? Life is taxable, accident is not taxable. Before this exam, this was also not there in the study material. Even now, it is not there in the study material, which means most of them don't know. Mistake number 5. Wait, come. You're required to compute the Honey's taxable income for the assessment year 23-24. Somewhere on the top, it says he has been given an RFA in USA for which company pays 15,000 as rent. 15,000 is question to you. 15,000 is being paid as RFA. This 15,000 for RFA should be taken for how many months? Yeah. Why?
Because 15% based on the population.
What?
The population of the city is
Nothing is given. Population is higher. That's all. Hey, actually, why do you care about population? It's rented. It's actual higher charges or 15% of the salary. Yes or no? Question to you. 15% of salary is okay. Actual higher charges. How many months should I take? My question is, for how many periods is this RFA for? 6 months. Because in 6 months he was in India. For 12 months. Read the question. Somewhere it says he is staying in that house along with his family. He's staying along with his family. If you tell 6 months, the assumption here is what? Every time he comes to India, the family is thrown out of the house. Every time he comes to India, the family is thrown out of the house. Is the family thrown out of the house? No, which means even if he is not there, the family is using the house. Which means RFA is for 12 months. Yes or no? Question to you. 15% of what all components do you include in salary? Basic, which is there on the top. Next. DA, not there. Next. Commission, not there. Next. Bonus irka. Bonus to illa. Next. Tell me the allowances. Tell me the allowances. The food coupon out. It's a perquisite. Next. Car also out. Perquisite. Next. He got a education 12,000 for Employee of the elder son. Perquisite allowance. Perquisite. Ignore. Next. 3,000. Perquisite allowance. Allowance to be included. That's all. That's all. That's all. That's all. Accidental is perquisite. Accidental is perquisite. LIC is perquisite. Meaning somewhere hidden adjustment, you have to also consider the combined allowance. Hidden adjustment 15% போடும்போது combined allowance correct போடல RFA gone. Mistake number 6. Mistake number 8 mark question. The only one thing you got right is what? Basic salary. That also some people said R. That also if someone people said R, half the people would do what? Was only the salary in India is taxable, balance is not taxable. Ange pochu. How much marks did you score here? Nothing. Worst of the questions. Worst. Is the exam question, ma? I don't know. I have to check my question bank. Question bank. I think it's May 19, not this question bank. My full course. My full course. I think it's May 19. I think May 19, May 20. Or either it's May 19, May 20, or Jan 21. One of these three. One of these three. It came in that. Either it is all. Either of the three. I think it is Jan 21. My vague memory, it is Jan 21. My vague memory, it is Jan 21. Okay. Questions like this. பார்த்தாலே தெரியுது கரெக்டா பார்த்தாலே தெரியுது ஒன்னும் புரியல stop hold don't answer it's okay leaving 8 marks is okay rather than wasting 2.5 hours in this question. Okay. The mistake which most people will do at this point of time is they will take up this question, and since they don't know the answer, every adjustment they will sit and waste 10 minutes just to figure out whether they should tax it, not tax it. You are not even giving the final answer, not even completing the answer. 8 mark question, you should maximum spend 1.5 minutes. 12 minutes. You can maximum spend 12 minutes. 12 minutes ka mela pochuna, balance paper will go for a toss. Okay. Challenge in the exam, it's not just to clear the paper. It's also to understand how much to write and what not to write. Okay. That is also one skill. Questions like these, you see, you want to take a chance, you take a chance. But please ensure that you put a stopwatch and you clarify yourself. 12 minutes, I will try. If I don't get the answer, I will skip. Never sit with this question and make your life miserable for the balance 60 marks because gone. And the reason I'm saying balance 60 marks and not 52 marks is because you had an option to choose the other question. You had an option to choose the other question, but you choose to stick to this. You're choosing to stick to this. Make that kind of assumption properly. 8 marks, 12 minutes, full stop. Beyond that, no. Get the wrong answer, it doesn't matter. It's okay. Even if you would have attempted this, I could have max to max given you 4 marks for the provision at least. Had you written the provisions properly. And that 4 marks is only worth 6 minutes. That's all. Adukku mela, if you're wasting time, it's a waste of your attempt. That's all. It's complete waste of your attempt. It's not just for tax. It's for any subject for that matter. Any subject. See the question. That is why they give you the 15 minutes. The problem with people is they take the 15 minutes, they waste it for unnecessary things. They're trying to understand the first question, second question. No. The 15 minutes is for you to understand what question to leave. And that is why the biggest mistake you do is to open up the compulsory question on the 15 minutes and try to understand what this compulsory question is saying. The point it's a compulsory question is that it is going to be tough only. That is why it is a compulsory question. If they give you if they give you tough questions and optional, will you solve? That is the reason they put it in compulsory. No. If you sit and waste time the 15 minutes trying to understand what the compulsory question is going to tell you, what is the use of it? You solve panna poriya. What is the point? Use that 15 minutes, start from question number 2, go to the last question and figure out which question looks tough for you in the first instance. Ignore the question, start with the balance, complete the questions. If you get stuck in some question where you thought you wanted to do the question but you're not able to do, hold. Understand how much that question will fetch you. If it's the 12 mark question, if it's able to fetch you 8-9 marks, take the chance, leave the 3 marks, it's okay. If it is something where it is a 12 mark question, you're not able to answer more than 2 also, cut it out, try the next one. But again, you have already wasted on that 2 marks, which means 4 minutes over, which means next question you only have a balance of 8 minutes. In that 8 minutes, you are able to solve it. Good, solve, close, go ahead. No, stop the question, it's okay. You have an IDT to solve. Still have an IDT to solve. DT is not the only paper. You have an IDT to solve, and this rules apply for IDT also. IDT, you find a question, it is tough. Don't sit on that question. Come back to DT, complete the question. You still have MCQs to answer. You have to play around. You have to play around. You need to juggle yourself. You need to juggle yourself. At the end of the day, once you complete the paper, the regret should not be there in the head that what you knew is missed out. That is the only regret never carry in your life. That stone in the heart is very difficult. Okay? It is okay to fail after saying that I did not know. It is not okay to fail after knowing everything. That's a sin. That's a sin. That regret which you will carry with yourself after you exit the exam hall saying that, boss, I knew 90 marks of that paper, but I only wrote for 40 marks. Whose mistake? Our mistake. You could have written the balance 50 marks had you not wasted time on this nonsense. Yes or no? It's very simple. You have only 2 seconds in the exam. You look at an adjustment, in the 2 minutes you'll get an answer. What your head says is the final answer. If not, it was anyway wrong. Just because you think that you will wait for another 2 minutes and you will get the answer, you will never get the answer. You try. I have never seen a person who has ever come in back in life and come and said, Rahul, I start on one question, I did not get the answer, I spent another half an hour, I got the answer. Never has that happened. Because after half an hour also, you'll still have the doubt. You'll still have the doubt whether you had it right or not. Do you want to take a chance? Don't take the chance. Okay? Every question carries 1.5 minutes and that's the standard rule. You see the adjustment, what comes in your head is the final answer. Because idhukku mela nee yosikave mudiyadu. Chance illa. You write that in your paper, you come. Outside you come, you will have that kind of satisfaction that, yes, boss, I knew something and I wrote. After that also, if you fail, you will still be okay. You will still be okay. You will still come and blame only ICI. No matter what happens, you will only blame ICI coming and saying, "Dey, nee dana tappa correct pannirke, unukku dhaan prachanada." That is still okay. That is still okay. Never come out of the exam hall, feel that kind of regret, fail, and then come and say, I am miserable, I am useless, I am not worth the life. That's where you lose the battle. Clear? The reason I'm giving so much lecture is because questions like this is where people made a miss. That was the worst attempt where people group 1 failed miserably. I'm assuming it is Jan 21. I'm assuming it is Jan 21. The pass percentage was pathetic, it could be. Because most of the people made this mistake. Everyone thinks salary is easy, salary is easy. Push to Estanga, gali pota. One. Everyone looks at what was salary na correct maga pani vachirke. Let's answer first salary. Eduthu vecha gali pochu avladha. They sat on 2 hours just on this question. I did thodave illa. Worst of the percentages in group 1 that year. Worst. Never make this mistake. Never make this mistake. It's a battle you're running, not just with yourself, but with the other crowd also. If there is someone who can pass in that attempt despite you, that means he was smarter than you. Not because he knew the answer. Because no one knew the answer. No one knew the answer. He was smart enough to understand when to leave it. Are you that smart enough? This will only come by practice. This will only come by practice and not by practicing my book, not by practicing my question bank, but by practicing exam papers. Okay? Make that choice. Make that choice. Look at an exam paper. Understand which question to leave, which question to attempt, which one to first attempt. That is also a challenge. That is also a challenge. 6 questions you have. Which question should you attempt first is also a challenge. Because the first question makes your impression. Open up a question answer sheet. You see that the first page itself is broken out. You have scribbled the whole first page. His mood is already out. With that bad mood, no matter how much grade you would have written, you would have been a scholar in tax like me. Irindalo you will fail only. Irindalo you will fail only because the first paper is scribbled. It's a challenge to also understand which question to impress with him first. Okay, that 15 minutes is for that only. It's for you to understand where can you impress him and where will you definitely go wrong. Because there are some places I can never assure that there is one person like who will come and say, Rahul, na paper thodna, I knew everything in the paper and I scored great. No, even that Agarwal who would have scored highest in the mark would have never done it. No. He would only open the paper and first try to figure out which question will impress the examiner. Let's start with that. Let's start with that. Let's crack it there. I can still, I do remember Atul Agarwal has posted his answer sheet in the portal. And I have his answer sheet. And I myself vouched the answer sheet. Half it is wrong. Half of it is wrong. Okay? But where he scored the marks is where he impressed the examiner. Paper Torandone, first question, beautifully written. Beautifully written. He opened up the question. The first question was so beautifully written. Examiner there itself was flat. And he was like, "Dey, idhukku mela I don't have to check itself. Idhukku mela avena pandradha correct na pogum." The comedy part is his handwriting is the worst of it. He's a faculty now. You can go and check. You can go and check. He's on YouTube. He's a faculty now. Worst of the handwritings. அந்த ஹேண்ட் ரைட்டிங் புரியாது அந்த லெவலுக்கு மோசமாயிடுது. பட் ஸ்டில் இஸ் AR1. இமேஜின் பண்ணி பாரு. Because it is not about your handwriting. Sometimes it is about what you write also. Sometimes it's about what you write also, but at the end of the day, it's about how you present. And the presentation is much. Yes. After this classes gets over, I will try. The mock test paper will be issued and I will put it on the broadcast. I expect you people to write it yourself, correct it yourself, message me back saying how much you've got. And I want you to have that guts to message me back saying I've failed. It's okay. Have that guts. First run with that guts. Run with that guts that you can message me and say, Rahul, I've failed in this attempt. I'll be like, okay, it's okay. I will wait for the next paper from you. I will mark you people and I'll wait for the next paper from you, and I will wait for that answer saying, Rahul, this time I passed. That is when you achieve life. Yes. Can we promise that to ourselves? Let's work with that and let's go for a break accordingly. Okay, it's 1:15. Shall we meet at 2? Yes, let's meet at 2. Starting with the chapter called as PGBP. Look at the heading first. And first realize what the heading says. It says profits and gains of business. Please appreciate the and not. Where does the and stand and where does the or stand? What it basically means is, boss, when it comes to your business, profits and gains are taxable. When it comes to your profession, profits and gains are taxable. Okay. It means when it comes to business, both are taxable, whether it is capital or revenue. And when it comes to profession also, whether it is capital or revenue, both are taxable. It is not or, it is and. Profits and gains. The point what I'm trying to make is that it is not always mandatory that the capital receipt will only be taxable under capital gains. It can also be taxable under PGBP. We need to understand those limbs also. Therefore, they have come and said, boss, it is profits and gains. The logic is very simple. If it is then receipt pertaining to business, it will be taxable under PGBP also. It will be taxable under PGBP also. So where does it get taxed under PGBP? Where does it get taxed under CG is what we need to properly understand, because classification of it is extremely important. Yes. Having that note, let's start with the subject. Let's start with this chapter. We are into the chapter called as PGBP. Every chapter starts with a. This chapter has no charging section. The chapter itself is like saying, boss, whatever you feel is business is taxable. That's all. Whatever you feel is business is taxable. Over and above it, whatever I feel is business is also taxable. Okay. Whatever you feel is business is also taxable. What I feel is business is also. So they're given n number of items. Some examples are like business income. Some examples are like termination of an business contract. Some examples are you getting a gift under a business. You converting a capital asset into stock and trade into capital asset. All these examples. Some examples like, indirect tax day, you might have something called as export duty. You might have trade receipts. You might have any kind of passbook. DEP solvanga. Duty entitlement passbook. Yes, DEPB na solvanga. And the mari cases alla. You give anyone a car rent credit transfer. Government gives you something called as subsidy. All these items, everything are taxable under the head PGBP. Exam Puerto Rico, if you see the heading, if you're not able to classify into any other head, it is taxable under IFOS. Summa. நடுவில் ஒரு வார்த்தை பேசினாலே தப்பா போயிடும். If it is not taxable under any other head, it is taxable under IFOS. What is taxable under PGBP is only business income. You need to make a classification whether it is business related or personal related. If it is business related, it will go under business income. If it is personal related, you will have to understand whether it is covered under IFOS. If not, it is fully exempt. Clear? Yes. Having that in mind, you need to first understand what are the terms under business. We use 4 terms. One is called as allowance. One is called as disallowance. One is called as addition. One is called as reduction. There is a word called as allowance, disallowance, addition, and reduction. You first need to figure out the difference between the 4 items. Can someone help me? Sorry, expenses that are allowed. Okay. See, if it is anyway there and you're not going to do anything with it, then I don't care. If it is anyway there in your net profit and you're going to do something or nothing do about it, then I don't care about it. These are all those items which will impact your net profit. Keep that in mind and tell me. No? Can you tell me which of the two items are plus and which of the two items are minus? Disallowance and these two are plus, these two are minus. But what is the difference, Rahul? The point is very simple. If something is already there as a part of your net profit, if it is already there as a part of your net profit and you don't want it to be there, it will become disallowance. It will become disallowance. If something is already there as a part of your net profit and you don't want it to be there, it will be called as disallowance. If it is not a part of your P&L and you are extra bringing it inside, it will be called as a addition. Be called as an addition. Rahul, impact enna agum onnu agadu. Both the places it is positive only. It is about how you write in your exam. It is about how you write in your exam and how you understand it from an exam perspective. Please understand, people. Disallowance meaning something should first be allowed. It should first be allowed, then only it can be disallowed. Then only it can be disallowed. For a simple example, if I come and say, boss, cash payment more than 10,000 should be disallowed. Cash payment more than 10,000 should be disallowed. I bought a fixed assets. I bought a fixed asset. The fixed asset purchase price is 2 crores. Full 2 crores I paid in cash. Full 2 crores I paid in cash. Can I disallow this under 40A3? Can I disallow it under 40A3? A question of Purinda. What is the question? You have purchased the fixed assets. You have purchased it for a price of 2 crores. Full 2 crores paid in cash. Full 2 crores paid in cash. Can I disallow this under PGBP? No. That's easy. Can I disallow it under PGBP? No. Why? Understand, people. 40A3 comes and says expenditure which is claimed as a deduction and the payment is made more than 10,000 can be disallowed. Is this an expenditure? What is it? It's a capital purchase. It's a capital purchase. Can you disallow it? No. You cannot disallow it because you never claimed it itself. In this case, what do you do, Rahul? Income tax will come and say, boss, do not take depreciation on it. What they will come and say, for the purpose of the cost of the asset, ignore the 2 crores and depreciation will and therefore become 0. But under 40A3, can you make a disallowance? No. Purida Purilia. Is disallowance means that something has to be claimed for you to disallow first. Something has to be claimed for you to disallow. Purida. Yes. Second question. This 2 crores was, for example, a payment. Let's say agency payment. Now can I disallow? Yes. Now I can disallow because it is claimed as an expense. I am disallowing it now. Yes. But what happened is I came and said, boss, Rahul, this year I will not pay. I have made this expenditure on an accrual basis. On what basis? Accrual basis. Payment I will do next year. Next year when I made the payment, I made in cash. Next year when I made the payment, I made it in cash. Question to you. Next year, can I disallow? No. Why? Because you claimed that expense when? This year. Next year, do you have an expense? Expense in the disallow. Where is the expense? Puranjada. Next year, is there an expense? No. If there is no expense, what will you disallow? Yes. That is why 40A3A does not use the word disallowance. It uses the word deemed as income. Addition. Read 40A3, you will realize 40A3 comes and says any expenditure paid in excess of 10,000 should be disallowed. 40A3A will come and say any expenditure which is claimed as deduction earlier and the payment is happening in the current year, please deem it as an income. 40A3 talks about disallowance, 40A3A talks about addition. Rahul, what is the difference? English is the difference. Exam 40A3 disallowance போட்டீங்கன்னா examiner வந்து கேட்பான், எங்கடா உனக்கு claim கொடுத்தேன் நான் first? உனக்கு claim கொடுத்தாதானே addition வரும். Yes or no? That is the difference between the term disallowance and addition. What is the difference between allowance and deduction? This is already there in net profit. This is not there in net profit. அப்படின்னா என்ன அர்த்தம்? அப்படின்னா என்ன அர்த்தம்? If your net profit has something called dividend income, it is taxable under the head IFOS. What will you do? You will reduce it. You will reduce it. Actually, na ulta solta. I think this is there in net profit. This is not there in net profit. Okay. So what will happen in that case? You will reduce it from your net profit. You will reduce it from your net profit. Alternatively, I come and say, boss, depreciation should be claimed 100 rupees, but income tax permits you additional depreciation. Did you claim it earlier? Did you claim it earlier? That will be allowed. That will be allowed. Purida. Yes, the choice of words can make a difference. The choice of words can make a difference in a practical world also. In a practical world also, assessing officers have this problem. Assessing officers have this problem. In the 2 crores, he will disallow it off. Saying that, boss, you have purchased fixed assets, you paid it in cash, please disallow it and add it as income. Where did you claim first? Yes or no? That is what the problem is. That is what the problem is. Disallowance only happens when there is a claim already. When there is a claim already. When no claim itself is made, then you cannot disallow anything. Only you can do is addition. And addition will come as a power under the act. If the act gives a power to addition, you will add. Varna, you cannot add. The use of words is important. Every section going forward when we read, please understand what word we use. Please understand what word we are using. If we use the word disallowance, it means it should be claimed for you to disallow. If it is the addition, it means it should be extra added. Be extra added. The reason I'm telling this is because tomorrow in your exam, you can get 2 types of items. You can get 2 types of items. One item is called as net profit schedule. The other item is called as receipts and payment schedule. The other item is called as receipts and payment schedule. Net profit kudukumodu, you have to start from indirect method. Yes or no? Abdina enna pannvinga? You will start from net profit and then you will disallow or add. But when it comes to receipts and payments account, unakku profit theriyala inno. In which case, what will you do? You'll start from revenue. Yes, sir. There it is direct method. Here it is indirect method. Anga vera mari irukkum, inga vera mari irukkum. In that scenario, you need to be extra careful. What are you disallowing and what are you claiming? If you are starting from the direct approach, you will only claim whatever is allowed. If it is anyway disallowed, you will ignore because profit ka adu use agadu. Correct? But when it comes to net profit, you have everything in your P&L already. You will allow or disallow what is not there in income tax. So, understand the difference, people. The difference can make an impact. Okay. When is that you need to do PGBP? When should you not do PGBP? Is what you need to use your head on properly. Okay. Adu mattum neenga purinju vechikonga chapter mudinjichu avladhaan. This is the only problem which people have. Most of the people, what they do, they know TDS na disallow pannom. Adu first paarra adu claim panniya illaya. Correct? Claim paname, where can you go and disallow? Yes. The reason I'm telling this is because when it comes to PGBP questions, it is not just the P&L. They also give you something called as additional information. They also give you something called as additional information. This is where they play with you. This is where they will extremely play with you. Some places they will come and say the expense is already a part of net profit. Some places they'll come and say it was not considered for the purpose of net profit. So, if it is already a part of net profit, you will disallow. You will disallow. If it is not even a part of net profit, you will make a choice. Should you disallow? If it was to be disallowed, it was already in your claim, so you will ignore. If it was not to be disallowed, you will now claim, meaning allow. Sorry.
Yes, sir.
Be careful. Be careful. Your full-fledged questions work on those model only. Okay. Additional information, wrong. Some places they will come and say net profit. Some places they will come and say net profit. Some places they will not even clarify. In that scenario, you should be smart enough to understand which one is already a part of net profit, which one is not a part of net profit by looking at the P&L and then making a decision. Are you doing direct method or indirect method? And the indirect method in that you will have to disallow what is not allowed. Disallow what is not allowed. Add what is not even there. Add what is not even there. But if it is already there and you want to claim, you will reduce. If not, you will allow. Not you will allow. Choice of words are important. Careful on those lines. Clear? Not clear? Clear? Yes, as we do the steps, one question alone, I'll prepare a format for you. One question, I'll prepare a format for you. In that, I will tell you how to use the right words. I'll tell you how to use the right words. But without this logic, we cannot go forward. Are you clear with the logic first? Clear? Yes, with this, can we start the chapter? Yes. Yes. Keeping this logic. Keeping this logic in mind, let's first understand the chapter. I told you charging section is something which I'm not going to discuss. So we are going into the chapter itself. The first thing which is there in the chapter itself, they have come and said, boss, you need to first try to split your business. You need to first try to split your business. Business will be split into two. One is called as speculative business, non-speculative business. What business? Speculative business, non-speculative business. Income tax comes and says, boss, if it is a highly volatile item, if it is a highly volatile item where the chances of risk of losses are very high, it will be called as speculative items. What are those items? You are doing transactions where there is no delivery. You're doing transactions with no delivery. It is not shares, people. It is not shares. Please understand. Shares are not speculative. Shares are not speculative. It is doing shares in the model of long or short. It is doing shares in the form of long or short. You know what is long or short? Going long on a share or going short on a share. You don't even have a share in hand, but you're making transactions on those legs. That is called as speculative. That is called as speculative. You're going long or going short. If you don't understand, it doesn't matter. Doesn't matter. If someone who does not understand that Harshad Mehta scam and all is there, no, that same logic. Okay, you might have learned it in Harshad Mehta scam and all. If you have not understood, it is okay. Exam Puerto Rico, it is not important. Exam la mottiya kutruvaanga. They will get on your head itself saying this is speculative, this is non-speculative. All of that. You need to check whether it's a loss or a profit. That's all. Yes, exam Puerto Rico, speculative are those cases where there is a transaction happening without actual delivery. Without actual delivery. Tell me, in these cases, the chances of losses are higher or smaller? Higher. The chances of losses are higher. Income tax comes and says, since the chances of losses in that is higher, please don't disturb the other business. Please don't disturb the other business. Speculative losses can only be set off against speculative income. Speculative losses can only be set off against speculative income. If you cannot utilize it against speculative income, carry forward. Carry forward for a period of 4 years. Carry forward for a period of 4 years. Return filing mandatory, not mandatory. Return filing mandatory, not mandatory. Mandatory. Definitely mandatory. Return filing is mandatory. When I say return filing is mandatory, return filing on due date is mandatory. Return filing on due date is mandatory. That is what the provisions of speculative transaction come and clarify. Clear? Yes. This is the first business. You have split the business. You have split the business loss into two. First loss is speculative loss, non-speculative. As we go forward, we'll split it into four more. We'll split it into four more. As of now, we split it into two. One is called as speculative loss. One is called as non-speculative loss. Clear till now? Yes. Now we are going to get into the format. We're going to get into the format. The format is very simple. There is no format. Format is very simple. There is no format. Provisions come and say start from the net profit. Allow whatever is not claimed. Allow whatever is not claimed. Disallow what is not allowed. Disallow what is not allowed. Reduce what is to be gone to another head. And add back what you should have disallowed. Add back what you should have not, which is against. Okay, that is the format. That's all is the format. Now we need to understand what to allow, what to disallow, what to claim, what to reduce. Yes, starting from the first, they are coming and saying, boss, you have a plant and machinery or a building. What do you have? Ignore income tax, go to accounts. Ignore income tax, go to accounts. What expenses will you have for a building? First and the most important thing, rent. First and the most important thing, rent. Under accounts, rent is P&L item, capital item. Business expense, personal expense. Should be allowed, should not be allowed. Income tax allowed. Next expense. Okay, electricity charges. Electricity charges. Business expense, personal expense. Allowed, not allowed. Next. Repairs and maintenance. Two kinds of repairs you have. One is called as current repairs, one is called as capital repairs. Accounts to Puerto Rico, current repairs, P&L item, capital item. P&L item. Income tax allowed. Accounts, capital item. Added to cost of the asset. Income tax is added to the cost of the asset. Rahul, if your ICI question comes and says capital repairs is debited to P&L, you will come and say accounts se thappa irukku, accounts first correct pannu. Accounts se thappa irukku, first accounts correct panna. What will you do? What will you do? Disallow. What will you do? You will disallow it from your net profit, add it to the cost of the asset for the purpose of depreciation. Use your words carefully. Use your words carefully. You will disallow. You will disallow. The only one place where this happens is in ICI exams. Okay, capital repairs, accounts Puerto Rico will always have to be capitalized. There is only one place which ICI will go wrong, which is in ICI exams. Okay, if ICI exams comes and say capital repairs is debited to P&L, you will. What else? What else? What else? Repairs done, electricity done, repairs done. Next. Wages. For For building up. What else? What else? Will you have taxes? Will you have taxes? Building a property tax. Building a property tax. Plant and machinery. Some other taxes you will have. Do you have taxes? Hello?
Yes, sir.
Hello? Do you have taxes? Yes. If you have taxes, what will you do? What will you do? What will you do? Huh?
Reduce.
Hey, in accounts, what do you do? Mark tax. P&L. Claim and go. That's all. It's a P&L item. Therefore, you will claim and go. The only one exception here is it's a tax to be paid to government. Income tax comes and says, boss, my payments and all don't hold with you. My payments don't hold with you. Meaning, income tax comes and says, if it is a tax to be paid, please pay it before the due date of filing of return of income. Section number M. AB. Don't know? Double A. You're confident as well. Tappadadu. You don't know? You don't know? Good. Good. That's all. You don't know, you don't know. That's all the answers. Never try to understand. Never try to understand. If you don't know, you don't know. That's what I told you just now, no? You have exactly 2 minutes. 2 seconds. You either get the answer or you ignore and go. Did you get the answer in your head? Ignore and go. I will tell you it is 43B. I will tell you it is 43B. Section comes and says if there is any kind of tax payment to be made to government, please make it before the due date of filing of return of income. If you make the payment, I will allow that as an expense. If not, I will. If not, I will. What is it? Very good. If not, I will disallow. If not, I will disallow today. I will claim it in the year in which I am making the payment. With this, we are done with section 30 and 31. We are also done with 43B one item. That is how we'll read. That is how we'll read. 30, 31 done. 43B one item also done. Can we go forward? Second item is the most important thing in your exam called as depreciation. Most important item in your exam called as depreciation. Question to you. Go to accounts. Go to accounts. Depreciation is given to owner or tenant of owner of the asset. Depreciation will be given to owner of the asset. In accounts, depreciation is given when the asset is ready to use. In income tax, it is put to use. The income tax, it is put to use. It is first put to use. It is first put to use. Meaning, today you put to use, tomorrow you forgot the asset. It's okay. Depreciation will continue. Today, if you put to use, tomorrow you forgot the asset, it is okay. That asset will be depreciable starting today. The asset will be depreciable starting today. You will not change it. You will not change it. So it is depreciation is allowed on the date on which the asset is first put to use. Asset is first put to use. There is only one exception called as passive use items. One example called as passive use items. Rahul, what the hell is this passive use item? Assets which are there for the benefit of the main assets. Assets which are there for the benefit of the main assets. One example is fire extinguishers. One example is fire extinguishers. If you are keeping a fire extinguisher ready for the purpose of any kind of contingency, you can claim depreciation on the fire extinguisher starting today itself. Do not wait for the house to get on fire. Do not wait for the house to get on fire for claiming depreciation. It is okay. You can claim depreciation starting today also. Okay. Because these are passive use assets. These are passive use. Second item, spare machinery. What machinery? You have kept on machinery ready. In case this machinery stops, next machinery is ready. In that also, you can claim that asset on the date on which the asset is ready to use because the asset is anyway ready. You could have put it to use provided this asset would have gone bad. Adhikaga, don't come and break this machinery so that you can start using that machinery. Okay. So these kind of assets, you can claim depreciation on the date on which the asset is ready to use. Ready to use. Third item. Can you claim depreciation on land in accounts? Income tax also does not allow. Income tax also does not allow. Land is an appreciating asset, never a depreciating asset. Land is depreciating asset, not a depreciating asset. So therefore, land depreciation not allowed. Second item for which depreciation not allowed, goodwill. What will? Goodwill. Some will. Okay, some will if you see in the exam, not allowed. Some will if you see in the exam, not allowed. Depreciations are not permitted on your goodwills. Depreciations are not permitted on your goodwills. Clear? Yes. In accounts, what type of depreciations do you have? SLM and WDV. Same works in income tax. Same works in income tax. Income tax only allows WDV. Income tax only allows WDV. Rahul, there is an SLM in accounts. Income tax. There is for power sector. For power sector, not coming for example. Not coming for exam. What is coming in exam is WDV only. Depreciation in income tax only is allowed on WDV model. WDV model. In this, they come and say, boss, you need to first understand how the mechanism works. How the mechanism works. They have prepared a schedule for you. They have prepared a schedule for you. Before we get into the schedule, income tax comes and says, boss, I am going to start giving you depreciation on the date on which it is first put to use. On the date on which it is first put to use. Income tax has this useless logic of computing the number of days. Computing the number of days, meaning if you have taken the asset in the month of April, you will get full depreciation. In the May, it will be half depreciation, 11 months depreciation. If it is middle of the May, you will get half of June, May, and then balance full year. Too much complications for me. Too much complications for me. I am a simple human being. I will split the year into two. I will split the year into two. One half, one half. If you purchase it in the first half, full depreciation. Purchase it in the second half, half depreciation. What is this one half, one half? The date is 180 days. It is not 182 days. It is 180 days. 6 months of tappadam. 6 months of tappadam. It is 180 days. Where have we learned this 182 days? Ignore. I don't ignore the days. You will take 180 days. You will take 180 days. If you reverse calculate, you will realize 180 days stands on 3rd October. Stands on 3rd October, basically the day after Gandhi Jayanti morning. The day after Gandhi Jayanti. In my classes, we simply say, boss, Gandhi Jayanti ka appuram vanducha, paadi depreciation, adukku munnadi vanducha, full depreciation. If you get the asset after Gandhi Jayanti, it is depreciation. Get it before Gandhi Jayanti, it is okay, because this 182 days, enge 182 podno, enge 180 podno, talavali. Okay, PGBP portha varaikum Gandhi Jayanti ka approve vanda paadi, Gandhi Jayanti ku munnadi vanda full. Nee use panla. You did not even use the asset itself. No depreciation. You did not even use the asset, no depreciation. Directly added to the block of the asset. Next year you claim. That is what the rules. Clear? Yes. So starting from it, we have said, boss, anything before Gandhi Jayanti, full depreciation. Anything after Gandhi Jayanti, half depreciation. Now we need to understand what the format looks like. The format looks something like this. You will start from opening WDV. Add additions. Add what? Additions. Additions have 3, correct? One is more than 180 days. More than or equal to 180 days. Next one, less than 180 days. Hey, what am I talking about? 180 days now what? What is it 180 days? What 180 days? For how many days has the asset been put to use in the first year? For how many days has the asset been put to use in the first year? If I have put to use it for more than 180 days, or put to use it for less than 180 days, or I have not put to use, Done now. Yes. Reduce your sale value of asset. Reduce your sale value. This is where we deviate from accounts. In accounts, we reduce the WDV of the asset. In income tax, we reduce the sale value of the asset, because I don't know what WDV means. In income tax, the moment one asset enters the block, it loses its identity. Identity ponadukku appuram, when did I purchase the asset? What is the current WDV of that asset? I don't know. When I don't even know, why will it take so much complication? Sale value reduce pannittu. Okay, so what I will reduce? The sale value of the asset. This will arrive at my gross block. Now I need to do depreciation. On the opening WDV, I will depreciate at what percent? Rate. On more than 180, I will depreciate. On addition more than 180, I will depreciate at what rate? Full rate. Box vera puttam. On less than 180, I will depreciate at half rate. On not put to use, I will depreciate at no rate. What to do of this closing number? Sale value. Huh? What to do of the sale value? You will reduce it from the opening WDV before you compute the full rate. Reduce it from the opening WDV before you compute the full rate. Before you complete the full rate. Clear? Yes. This will give you your depreciations. After you get the depreciation, the final answer will be called as closing WDV. The final answer will be called as closing WDV. Clear? Not clear? Clear? Let's first understand all the items one by one. Let's understand all the items one by one. What do you mean by opening WDV? Closing WDV of last year. What do you mean by opening WDV? Closing WDV of last year. That's all. Okay. What is additions? All purchases you made in the current year, which means you now need to understand what do you mean by a cost of the asset. You need to understand what do you mean by cost of the asset. Let's go to accounts. Let's go to accounts. How do you value an asset? All the cost which you incurred on the asset until the date on the asset is ready to use there. Here it becomes put to use. Until the date on which you put to use the asset, what are the kind of expenses you incur? First of all, purchase price. Then installation charges. Very good. Transportation charges. Then give me examples.
Setting up of
Other installation charge. Next.
is the right is not
Comes in the part of installation.
any tax
Any tax or direct tax? Very good. Any kind of indirect taxes on which you cannot claim ITC. Which you cannot claim ITC. Next. Next. Any trial run expenses. Any kind of trial run expenses. If you are having trial run expenses and you sell the prototype, income, that income should be reduced. That income should be reduced. Next. For you to purchase this asset, government gave you subsidies directly related to the asset. Anything else you remember? Anything else you remember? No. Do you have an AS on foreign exchange? Do you have an AS on foreign exchange? Does that AS come and say any kind of foreign exchange loss incurred on the asset should be capitalized? What are the kind of costs? Basic price, indirect taxes on which you cannot claim ITC, installation charges, transport charges, trial run expenses, subsidy should be reduced, profit from the trial run should be reduced, foreign exchange loss to be added. So, this will arrive at your additions. Here is where income tax comes and says, boss, if any of these expenses you paid other than by permissible modes, and this payment is more than 10,000 rupees to one person in one day, expense will be did you claim the expense? Where is the disallowance coming from? The example expense will be ignored. Expense will be ignored for the purpose of cost of the asset. Consequently, your depreciation will come down. Any kind of expense which you incur on these assets, and you have made the payment by non-permissible modes to one person in one day, which is exceeding 10,000 rupees, ignore the expense for the purpose of the cost of the asset. Yes, sir. Logic clear. We have completed additions. Next item is sale value. I don't have to clarify to you. Any kind of sale value of the asset will be reduced from the block. Question to you. My opening WDV was 100. My additions is 200. I sold some assets. I sold some assets for price of 350. For the price of 350. My total block itself was 300. I have sold for 350. What should I do? What should I do? What should I do, people? The block will be ignored and this will directly go into CG. When the block itself is not there, PGBP cannot work out. If PGBP cannot work out, CG will come for rescue. CG will come for rescue. If you have an asset worth 100, you have an addition worth 200, your sale value itself is 350, block itself becomes negative. If the block becomes negative, directly go and ask CG. Yes, sir. Yes, sir. Yes, sir. Next option. Next option. You have 100 of additions. You have 200 of, you have 100 of opening WDV. You have 200 of additions. Total block itself had 3 assets only. Total block had 3 assets only. All the 3 assets sold for 150. All the 3 assets sold for 150. Do you have the block with you? No. What should you do? Can you continue claiming depreciation? No. What will you do? What will you do? Go to capital gains and come and say, sir, block itself is not there. Depreciation cannot be claimed. Directly claim everything as short-term capital loss. Directly claim everything as short-term capital loss. Yes or no? Yes or no? Yes or no? I have 100 worth of asset, 200 worth of additions, total assets in the block 3. I sold 2 assets. I sold 2 assets for the price of 350. For the price of 350. What should do? I sold 2 assets for the price of 350. What to do? Adnan typo discuss panno. Take it to CG because the block itself is here. இப்போ என்னடா discuss பண்ணோம் அதானே discuss பண்ணோம். What will you do? Block itself has become negative. Take it to CG. To clear. Clear. I have 2 assets. Assets were sold for a price of 150. Assets were sold for a price of 150. What to do? Gross block is still alive. Gross block is still alive because in the gross block you still have 1 asset. You still have 1 asset and the price of the asset will become 150. On this, what will you do? Claim depreciation. How will you claim? 150 and the 100 will go from here. Balance 50 will go from here. Meaning you will claim depreciation on the addition at the price of 150 at full rate, half rate, depending on where the asset was put to use. Clear? Not clear? In summary, if you have a block, it will go to CG in 3 scenarios. It will go to CG in 3 scenarios. Scenario number 1, all the assets are sold. All the assets are sold at a profit. Scenario number 2, all the assets are sold at a loss. Scenario number 3, some of the assets are sold at a profit. Some of the assets are sold at a profit. In the moon scenario, you'll jump to CG. You'll jump to CG. Only the 4th scenario, what is it? You still have some assets alive and the block is still alive. You have some assets in the block and the value still remains. You will continue with depreciation. Clear? Yes. Yes. We have done what is called as sale value also. You now arrive at something called as gross block. On this gross block, now you are going to apply depreciation. You have 2 ways. Full rate, half rate, no rate. Which means now you need to know the rate. Now you need to know the rate. Can someone tell me what is the rate for plant and machinery? 15%. What is the rate for buildings? 10%. What is the rate for intangibles? 25%. What is the rate for books? 30%. What is the rate for computers? 30%. What is the rate for motor vehicles? 15%. What is the rate for furnitures? Very good. when it comes to buildings. Only the red ones are important for exam. Only the red ones are important for exam. Buildings normal rate is 10%. Furniture normal rate is 10%. Plant and machinery normal rate is 15%. Motor vehicles normal rate is 15%. Motor bus and all is not coming for exam. Computers is 40%. Books is 40%. Ships and all is not coming. Intangibles is 25%. Okay. Okay. Yes. These are your normal depreciation. These are your normal depreciation. Income something called as additional depreciation. Income something called as additional depreciation. Income tax comes and says, boss, if you are into manufacturing, but manufacturing, or you are into power sector, if you have a new plant and machinery which you purchase in the current year, you have a new plant and machinery which you purchased in the current year, claim additional 20% depreciation. Claim additional 20% depreciation. Only for new plant and machinery. Only for new plant and machinery. In your book, plant and machinery rate is 15%, meaning additional depreciation will be 20%. Total depreciation you will claim is 35%. Question to you, this 20% only allowed in year 1 or allowed every year? Only in year 1, because only in year 1 it is a new plant and machinery. Next year it has become old. Yes sir. Yes sir. Marriages are only good for 1 year. After that nothing useful. Yes. Yes, it is only a new plant and machinery. New plant and machinery is only for year 1. In year 1 you can claim a depreciation of 20%. Next year you cannot claim any depreciation. Next year you cannot claim any depreciation. But if you were married only for the next half of the year, meaning you were only claiming half depreciation, put to use itself happened for 180 days. You did not even get the benefit out of it yet. Okay? In that case, you will only get the benefit of 10% current year, 10% next year. 10% current year, 10% next year. Carry forward, ma. Carry forward. Next year claim half. After that you will get tired. After that you will get tired. So first half you will claim 10%. Second 10% you will claim in the next year. You will claim it in the next year. Clear? Yes, this is what is the concept of additional depreciation. Question comes and says new plant and machinery. What do you mean by new plant and machinery? They say, boss, it should not be a second hand machinery. Not be a should have not been used either in India or outside India. Should not have been used either in India or outside India. Look at the plant and machinery. What and all items do you have? You have general rate. You have general rate. You have motor cars. Do you use motor car for manufacturing? Do you use motor car for manufacturing? Not allowed. Additional depreciation not allowed on motor cars. Additional depreciation not allowed on motor cars. Next item is motor bus. Do you use motor bus for manufacturing? No, not allowed. Do you use aeroplanes for manufacturing? No. Do you use computers for manufacturing? Maybe. Maybe possible. Maybe possible. So therefore doubtful. Do you use books for manufacturing? Class ku padchale peri vishayam. Manufacturing ku vera ya. Do you use books and all? Not likely. Not likely. Do you use pollution and all? Not to. Do you use modes? No. Technically, they are coming and saying, boss, if it is a plant and machinery, there are certain conditions. Condition number 1, it should be new. It should be new. Condition number 2, it should not be a motor vehicle. It should not be a motor vehicle. Condition number 3, should not be installed in office. Should not be installed in office. Manufacturing. Manufacturing company la poite office la send ponna na what will I give for you? Not allowed. Okay. Point number 4, you should not claim full depreciation on it. You should not claim full depreciation. Maximum rate of 40 then. 45 na chigo. How will you claim full depreciation on this? In the other cases, how will you claim full depreciation on this? Very good. You will get the full deduction of it under 35 AD or 35 scientific research or investment allowance. Scientific research or investment allowance. Anga air convey claim podadhukku appuram inga vandu vaangidadu. Okay, if you have already claimed the full asset there, then you will not get any kind of depreciations here. You will not get any kind of depreciations here. Yamogiliya. Confidence elna unnu aagaporadhu. Done. What are the kind of plant and machineries? It should be a new plant and machinery. Should not be in office. Should not be for motor vehicles should not have claimed full depreciation or deduction. Should not have claimed full depreciation or deduction. If you satisfy these conditions, I will give you the deduction of additional depreciation of 20% in first year. Additional depreciation of 20% in year 1. But if you have put to use the asset for less than 180 days, I will give you 10% current year, 10% next year. Correct. Correct. Yes. I have a office. I have a office. I also have a factory. I also have a factory. In office, I installed a computer for 5 lakhs. I installed a fridge for 1 lakh. I installed a TV for 50,000. Okay. On my factory, I installed a computer for 5 lakhs. I installed a fridge for 1 lakh. I installed a furniture for 20,000. I installed a motor vehicle for 10,000. I also installed one building cost. I purchased a new building. I purchased a new building and a swimming pool. Created a new swimming pool for 5 lakhs. For 5 lakhs. Which items are eligible for additional depreciation? Start from the top. Start from the top. This is office. This is factory. This is factory. Huh? Office, nothing. Sandosham. Factory. Computer. What condition do you want? Nada factory na soltenda. Computer allowed, not allowed? Allowed. What is F? Fridge. Fridge allowed, not allowed? Ice cream company. Allowed, not allowed? Allowed, not allowed? Allowed. Fridge என்ன பிரச்சனை? ஃபேக்டரியில தண்ணி கொடுக்க மாட்டேன். கம்ப்யூட்டர் மட்டும் என்ன பண்ற நீ? அது மஷினரிக்குள்ள வருதுமா, கம்ப்யூட்டர் தனியா இல்ல. அது அதுக்காக ஃப்ரிட்ஜ் வைக்க மாட்டாங்க. they will keep a cold chain facility. இன்னும் ஏதோ பாதி பேருக்கு தான் கொடுத்துருக்க மாதிரி இருக்கு. எஸ், நெக்ஸ்ட் ஐட்டம். வாட் இஸ் எப்ரா? ஃபர்னிச்சர். ஃபர்னிச்சர் நாட் அலவுட். எப்படிடா? we are giving additional depreciation for plant and machinery. ஃபர்னிச்சருக்கு தனியா ரேட் இருக்குல்ல, இருக்கா இல்லையா? is furniture a different block? What are the blocks? Building, furniture, plant and machinery, intangible assets. வராமா வராதா? வராது. நெக்ஸ்ட். what is MVDA? motor vehicle. Plant and machinery, not plant and machinery. Plant and machinery allowed, not allowed? Allowed, not allowed? Allowed. டேய் இப்போதானே சொன்னேன். not allowed. Building allowed, not allowed? ஐமா not in plant and machinery, it's a different block. Okay, so the only items which are eligible for additional depreciation is the plant and machinery block, which means your plant and machinery, motor vehicles, ships, molds, pollution, computers, books, etc., etc. Okay, be careful on those lines. Clear? Clear? Yes. With this we are done with what is called as depreciation. With this we are done with what is called as depreciation. Any doubts? No. No doubts? Clear? Yes, this is the completion of depreciation. With the depreciation getting over, we need to first understand one more small item here, which is called as a closing WDV. We are done with depreciation. We are done with depreciation. Last item in this is called as closing WDV. What is closing WDV? Opening WDV of next year, correct? What is closing WDV, people? Table பாத்து சொல்லு. Gross block minus depreciation claimed. gross block minus depreciation claimed. What the hell does this claimed mean? You have taken a car. Guys, focus. You have taken a car. Car is worth 2 lakh rupees. Car is worth 2 lakh rupees. Depreciation allowed on this is at the rate of 15%. You are allowed a depreciation at the rate of 15%. But what happened is income tax came and said, the employee went, the company came and said was the car is going to be used part for business, part for personal, part for business, part for personal, part for business, part for personal. But the problem is it is not 50-50. It is not 50-50. It is 20-80. It is 20-80, meaning 20 is for personal, 80 is for official. Question to you. You were eligible for a depreciation at the rate of 15%. So it is 15% of 2 lakhs. Number is 30,000. Can you claim the full 30,000? Why? 20% is personal. If 20% is personal, you can only claim depreciation of 24,000. Question to you. In this table, your gross block is 2 lakhs. Your gross block is 2 lakhs. Depreciation to be claimed is 24,000 or 30,000. 24,000 or 30,000. 24,000. Depreciation actually claimed will be allowed as a deduction. Someone will have a question. Rahul, what is the number now? 1 lakh 76. Next year, when you are claiming depreciation, you will claim on 1 lakh 76. Yes or no? But technically speaking, that 6,000 rupees which you disallowed, 6,000 rupees which you disallowed, that is anyway part of 1 lakh 76. Yes or no? Yes or no? Technically, 6,000 should be disallowed. Should be disallowed, which means next year you should have claimed a depreciation on 1 lakh 70,000. But you are claiming depreciation on, which means over the year, can I come and say I will claim the depreciation of full 2 lakhs? Yes or no? I will. Every path, full 2 lakhs I have got a depreciation. But technically in that asset, 20% was personal, which means I should have not got 20% worth of the cost for me. Yes or no? Poor wording of the law. Poor wording of the law. Law comes and says you can only claim depreciation actually allowed. I actually allowed only 24,000, which means I will claim depreciation on 1 lakh 76. Eventually, I will end up claiming for the full 2 lakhs. I will eventually end up claiming for the full 2 lakhs. One of the exam questions. Exam, like if they come and say, boss, there is an asset, part used for personal, part used for official. For that year alone, depreciation claim panamodu, you will disallow the personal nature. But for the purpose of the block, you will reduce only the depreciation you claimed. You will reduce only the depreciation you claimed. What you did not claim will not be reduced, which means you will eventually end up claiming the depreciation on that also. You will eventually end up claiming depreciation on that also. Puri. Clear? Confident? Yes. This is the end of your depreciation. With the end of depreciation comes the second type of loss. The second type of loss is called as UD. Not a bad word, it's an unabsorbed depreciation. It's unabsorbed depreciation. Income tax comes and says, boss, if you have a loss showing in your books, pertaining to PGBP, understand how much of the loss pertains to depreciation. If you check, you found out that your net profit is showing 1 lakh. Depreciation is showing 1 lakh 50. Therefore, your PGBP loss is showing 50,000. Your total loss is 50,000. This loss is because of your depreciation. This loss will be called as UD. Your net profit was 3 lakhs. Loss. Your net profit was 3 lakhs loss. Your depreciation is 1 lakh 50,000 loss. Your total PGBP will be 4 lakh 50 loss. How much of this loss pertains to depreciation? 1 lakh 50. How much of it pertains to business? 3 lakhs. Yes or no? Yes. Your net profit was 3 lakhs positive. Your depreciation is 1 lakh negative. Your PGBP is 2 lakhs positive. Your unabsorbed depreciation is 0. Why? Last sale. Clear. Rahul, why the hell are we splitting? Why the hell are we splitting? UD has more benefits. UD has more benefits. If you have a UD, UD can be carried forward for infinite years. UD can be carried forward for infinite years, and every year you can set off against any head other than salaries. Every head you can set off against any head other than. But if it is a PGBP loss, you can set off in the current year against any head other than salaries. But from next year, you can only set off against PGBP income. That also only for a period of 8 years. Only for a period of 8 years. That also only if you file your return on time. Rahul, I did not file my return on time. UD, allowed, not allowed? Allowed. Question UD allowed, not allowed? Allowed. First exception to return filing, UD. If you have a UD can be claimed for any number of years, can be set off against any head other than salaries. Return filing on time also not mandatory. But if it's a business loss, you need to file your return mandatory this year. This year you can set off against any head other than salaries. Starting next year, you can set off only against your business income. If you're not able to set off, please carry forward for a period of 8 years. Okay. So now we have split our loss into 3. Let's wait. Next one is coming in. 3 losses over. Until now, any doubts? No? Depreciation clear? Hello?
Yes, sir.
Can we go forward?
Yes, sir.
With this section, 32 is done. 33 not in syllabus, 34 not in syllabus, jump to 35. Comes to scientific research. Before we get into scientific research, just to clarify, in your 32, if you opt for 115 BAC, additional depreciation not allowed. If you opt for 115 BAC, additional depreciation will not be allowed. Normal depreciation can be claimed. Yes. First exception. Let's go to section number 35. If you are in old regime, only one line, whatever you have, everything is allowed. That's all. If you are in old regime, whatever expense you have, everything is allowed. Whether it is capital or it is revenue. Except for one item which income tax never likes, called as land. If you have a land, no deduction in scientific research. No deduction in depreciation also. Which means land, keep it with yourself, look at it face and go off. That's all. Don't do anything with it. Scientific research, whatever expense you have, whether it is capital or it is revenue or it is a donation, everything fully 100% allowed as deduction except for land. Clear? In my book, you will see multiple charts. நீ எந்த சார்ட் படிச்சாலும் எல்லாமே 100% தான் எழுதுறீங்க. நீ என்ன சார்ட் படிச்சாலும் everything is showing 100%. Except for one item which will show as nil. Gains on transfer of compulsorily convertible debentures is taxable at what rate, sir? I don't know. Chapter itself has not started. What does it say? Gains on transfer of compulsorily convertible debentures. If you are transferring your compulsorily convertible debentures, the period of holding will be 36 months. With the period of holding being 36 months, LTCG will be taxable under 112. It will be taxable under 112, or it will be the finance rate. 112 means 20%, finance rate means finance rate. Okay, yeah? Whoever it was, I don't know. Yeah? Done? Yes. Coming to the chart, if you notice, everywhere in the chart I will say 100%. 100, 100, 100, 100, 100, 100, 100. Wherever you see nil is land, land, land. Come to the next page. 100, 100, 100, 100. என்ன படிச்சாலும் 100 தான். என்ன படிச்சாலும் 100 தான். அப்போ why Rahul have you given multiple charts? Because in 115 BSc, third chart not allowed. In 115 BSc, third chart not allowed. First two charts allowed. First two charts allowed. Third chart not allowed. Okay. That is the reason. That is the reason. If you are into 115 BSc, third chart will not be allowed. Balance two charts will be allowed. Abdin NR Rahul. If you do an expense yourself, you can claim a deduction. If you do an expense in the form of donation, no expense allowed as deduction. No expense allowed as deduction. That is the logic. That is the logic. Donation panna no deductions. Incur panna allowed. Incur panna allowed. Here is where we come into the third loss. Here is where we come into the third loss. Third loss comes and says unabsorbed scientific research capital expense. What? Unabsorbed scientific research capital expense. Abdina enna artham? If you have taken a loss, understand how much of the loss pertains to the capital expense you claimed on scientific research. Capital expense you claimed on scientific research. Put that separately. Provisions are same as UD. Provisions are same as UD. Whatever you read in UT, appear copy paste. Will it come in exam? No. Never has come in exam. Just for your clarification. Never has come in exam. Exam Puerto Rico speculative loss UD. Speculative loss and clear. Any doubts? The scientific research. இப்போதைக்கு புரியுதா? Till now what we've done in PGBP ஓரளவுக்கு புரியுதா? Yes, ஒரு அட்ஜஸ்ட்மென்ட் வந்தா புரியும்ல என்ன பண்ணணும். ரிசர்ச் வந்தா என்ன பண்ணுவீங்க? சயின்டிபிக் ரிசர்ச் பண்ணா என்ன பண்ணுவீங்க? லேண்ட் இருந்தா டிஸ்அலோவ், லேண்ட் இல்லனா இக்னோர். அண்ட் ஏற்கனவே கிளைம் பண்ணிருப்பீங்களா? அதானே அப்பே சொன்னேன். ஏற்கனவே கிளைம் பண்ணிருக்கீங்கன்னா எதுக்கு திருப்பி அலோவ்? லேண்ட் பொறுத்த வரைக்கும் disallow. Others you will ignore if it is claimed. If it is not claimed, claim. It is not claimed. Clear. Yes. Coming to the next item called as 35 AD. Right? We are now into investment allowance. Income tax comes and says, boss, there are certain businesses which I like a lot. Which I like a lot. One example is hotel. If you do a hotel with 2-star and above, or you do a hospital with more than 100 beds, I don't know what is the significance of 100 and all here. Hotel more than 2-star, hospital with more than 100 beds, then cold chain facility, any kind of warehouse facility for agricultural produce or sugar, agriculture produce or sugar, then very good. Pipeline facilities, then housing development for rehab slum areas, then and the beekeeping cold chain of beekeeping facilities and all those things. Yes, all those scenarios, what will you do? They come and say, boss, whatever is the revenue expense fully allowed as reduction, whatever is the capital expense also fully allowed as reduction, except for one item, land. If you have a land, no deduction allowed. Land no deduction allowed. Something she told. The point is, warehousing facility we said for agricultural produce or sugar. ICI is one of the favorite questions using edible oil. They'll come and say, boss, you have a warehousing facility for edible oil. What do? You say, boss, it is a normal business. What do? You say it is a normal business, meaning you will get depreciation. Capital assets, you will get a depreciation. Balance business, you will get full deduction. Full deduction. Clear? Yes. This is where comes the fifth loss. This is where comes the fifth loss. Income tax comes and says, if your PGBP loss sign பண்ணுமா அங்க இருக்காங்க. I'm not the signing authority, but okay. நாளைக்கு திருட்டு போச்சுன்னா சொல்றாங்க. ஹலோ. நான் சைன் பண்ணி வச்சிட்டோமா? ஓகே சைன். ஃபர்ஸ்ட் ஒன் எங்க பண்ணோம்? ரிசீவரா இருக்குமா? You need to be careful. CA sign is very valuable. நாளைக்கு this sign can be ஏதோ பண்ணிட்டாங்கன்னா பிரச்சனை ஆயிடும். மெம்பர்ஷிப் போயிடுச்சுன்னா பிரச்சனை இல்லை. I generally don't sign things. It's very, I mean, except for if it is an admit card. Other than that, I generally don't sign anywhere else. Very, very risky it is. Membership ரொம்ப ஹோல்ட் பண்ணி வச்சிருக்கு. கஷ்டப்பட்டுட்டு வாங்க. Yes. Where are we? 3580. We are into 3580. Provisions come and say any kind of capital expense fully allowed as a deduction. Revenue expense is fully allowed as a deduction, except for one item called as land. Except for one item called as land. If you are into the warehousing facility of edible oil, normal depreciation will come for you. Normal depreciation come for you. One of the ICA's favorite question. I think I have a question on this. We'll discuss if it is. Yes. This is where comes the fifth loss. Income tax comes and says, boss, if you have a loss from 3580 business, you have a loss from 3580 business, please set off only against the profit from 3580 business. Please set off only against your profits from 3580 business. If you're not able to set off, carry forward infinitely. Carry forward infinitely, but return filing mandatory. But return filing is mandatory. That is what the rule says. Okay, this is where the fifth loss comes into. What are the losses we have discussed? What are the losses we have discussed? First item is your speculative loss. Second item is your unabsorbed depreciation. Third item is your unabsorbed scientific research expense. Fourth item is your speculative loss. Fifth item is balance loss. Fifth item is your balance PGBP loss. Clear? Clear? Can someone repeat what is the investment allowance loss? What is the provisions? 3580 loss. What is the loss? Very good. Losses of 3580 can only be set off against profits from 3580. If you're not able to set off, you can carry forward infinitely. You carry forward infinitely. Return filing on due date is done. 115 BSc. Will you get this deduction? 115 BD. Will you get this deduction? 3580 deductions are not permitted under 115 BSc. Abdina 115 BSc பொறுத்த வரைக்கும் these will become normal business. These will become normal business, which means while you will not get the deduction under 3580, you can still continue to claim depreciation. You can still continue to claim depreciation. Don't mistake for the fact that just because 3580 is not there, it means capital cannot be claimed at all. You can still claim it in the form of depreciation. Be careful on those things. Be careful on those things. Clear? Clear? After 3580, what comes? What comes? 35D. What comes? 35D. While we are at it, just me clarifying. If at all you have any kind of investment business, that 3580 business, if you make any kind of expenditure and the expenditure is more than 10,000 rupees, in non-permissible modes, more than 10,000 in non-permissible modes, in that case, whatever expense you wanted to claim as deduction will not be allowed, will be ignored. That is one thing which you need to know. Other than some places in 35 and 3580, you'll see something about sale of assets and all, not relevant for exam. You can ignore it and go. Okay, now you're into 35D. 35D talks about preliminary expense. What is the English? Very good. Any kind of expenses incurred by you before the incorporation of the company or before setting up a new entity. Will be called as preliminary expenses. Income tax comes and says, boss, I will allow you the preliminary expense only up to a maximum of 5% of the cost of the project. 5% of? What do you mean by cost of the project? Don't care. Exam will give you. What you need to do? 5%. 5% of the cost of the project will be allowed as a deduction. Maximum. If it is lower than that, great for you. It is actual loss of 5%, whichever is lower. That loss will be allowed as a deduction over the next 5 years. For the next, where have you learned this before? Very good. Where have you learned this before? Pre-acquisition interest. Where in income tax, whenever you have a losses pertaining to earlier periods, they will allow it over a period of 5 years. That's how the rule is. Okay. HP la ponalo 5 years, PGBP ponalo 3 years. Clear? Clear? Yes. So 5 years will be allowed as a deduction. 5 years will be allowed as a deduction under the head PGBP. Done. Easy. Next. After 35AD, 35D. Voluntary retirement, ignore. Voluntary retirement, ignore. Family planning expenses, income tax, CA inter porta varico disallowed. That's all. CA inter porta varico disallowed. Reason is very simple. It comes and says family planning can only be claimed by company. Family planning can only be claimed by company. For your exams, who is going to be tested? Individuals or firms. What is going to be tested? Individuals or firm. Company is not a part of your syllabus. Therefore, whatever expense you see in your exam, directly. That's all. Directly disallowed. Don't think about it too much. Done. Done. Coming to the next expense called as zero coupon bonds not coming for exam. Next. Interest on borrowed loans. Here is where you need to go back to your accounts. You have something called as borrowing costs. Borrowing cost. What does the provision come and say? I don't care about the standard one. Section number in Yamagila. If you can't remember income tax sections, you are not worthy to remember AS standards also. Both are not important. Provision part is pacha poro. Pass yes, borrowing cost with the standard. Standard comes and says any kind of interest you have incurred on an eligible qualifying asset will be capitalized up till the date on which the asset is accounts now ready to use. Copy paste provisions here. If you have any kind of asset and the asset is still not put to use, whatever is the interest on the asset will be capitalized. If you are having the asset and the asset is ready to put to use, if the asset is put to use, whatever is the interest can be claimed as a deduction. Here is where 43B second part comes. They come and say, boss, interest can be claimed as a deduction only if you pay within the due date of the filing of return. If you don't pay, claim it in the year of payment. If you don't pay, claim it in the year of payment. 43B second part also done. That's all is the provision. If you have an interest has been taken for a capital asset, you can disallow it only to the extent the asset is not put to use. Capitalize that asset, claim depreciation on it. If you have put to use, claim it as a reduction subject to 43B. If you have taken the interest itself directly only for a revenue item, for your working capital, in that case, what will happen? Accounts also you would have allowed, here also you allowed, subject to 43B. That's all. Subject to 43B. Done. Next item. Ignore. Coming to the next item. Contribution for the welfare of employees. We are into PF now. How many PFs have you learned? 4 PFs you have learned. In all the 4 PFs, there will be 2 people. Employer, employee. Income tax comes and says, boss, recognize the provident fund and all, employer makes contribution allowed. Unrecognized provident fund, employer makes contribution disallowed. What? Recognized provident fund, employer makes contribution allowed. Unrecognized provident fund. Next item is employee contribution. Company oda expense, employee oda investment. What is the company doing here? They will collect as an agent and pay on their behalf. Income tax comes and says, first, you are an agent for your employee. If you are collecting their PF, ensure that you deposit this with the government within the due date of the PF Act. due date of the PF Act. If you deposit within the due date of the PF Act, good for you, no problem. Good for you, no problem. If you do not deposit this to the PF authorities within the due date of the respective act, I will add it to your income permanently. I will add it to your income permanently. Rahul, I got the contribution from my employee. Due date for payment is 15th March. I by mistakenly paid it on 16th March. Can I claim the deduction on 16th March? No. 15th March, your responsibility, pay on 15th March. 1 day delay, gone for you. It's only for employee contribution of PF. It's only for employee contribution of PF. Here is where 43B third part comes. Here is where 43B third part comes. 43B third part comes and says employer contribution to PF can be deposited by return filing due date. Can be deposited by return filing due date. You did not deposit by return filing due date, no problem. No problem. Claim it in the year of payment. Bus employer contribution you are permitted to pay whenever you want. Employee contribution you will pay by the due date of the PF Act. Yes, you have a PF contribution. 100 rupees employer paid, 100 rupees employees paid. 100 rupees employer paid, 100 rupees employees paid. This PF pertains to March. Due date is 15th April. Is the due date? You by mistakenly paid it on 16th April. By mistakenly paid it on 16th April. Employee contribution. Employee contribution, what will happen? Add it to your income. Add it to your income. Employer contribution. Nothing. It was done before the due date. Hey, when did you pay? 15th April. You paid on 16th April. 16th April is before due date of return filing, yes or no? Yes, will you make any change to the current year? No. Allowed as deduction. Allowed as deduction. Clear? Yes, can we repeat the provisions? Yes. What are the provisions? You have PF, two kinds of PF, employer, employee. In employer, unrecognized, disallowed, recognized, subject to employee contribution, collected by, paid by, due date of PF Act. 1 day delay. Add to the income of the employee. Add it to the income of the employee permanently. Correct? Add it to the income of the employer permanently. Here. Next. Bed it. Next. Bed it. Simple. Follow accounts. Follow. In accounts, what will you do? You will first recognize the sale. You first recognize the sale. Then you will recognize the bad debt. Yes, sir. How will you recognize the bad debt? By writing off the debtor. Income tax comes and says you want to claim bad debts. First to recognize the income. Next to write off the debt. And then prove it to me that you will not get it. Prove it to me that you will not get it. You will claim a bad debt. That's all. What are the provisions? Recognize income. Ensure it is not recoverable. Write off the debt. Write off the debt. You will claim a deduction of bad debts. You will claim a deduction of bad debts. Rahul, today I did bad debt. 3 years later, the debt came back to me. 3 years later, debt came back to me. Offer it to income. Offer it to income. Rahul, business for which I had the bad debt shut down 2 years back itself. Business for which I had this bad debt shut down 2 years back itself. Today he gave it to me when I was a salaried guy. Enjoy your income. You will still tax it. You will still tax it. It does not matter even if the business is not existing. It does not matter even if the business is not existent. Money has come to your hand, pay the tax. Same PGBP. It was a PGBP income only, no? Had the business been alive, it would have been taxed under. Same logic. Okay. You will continue to tax it under the head PGBP even if the business is not into existence. Clear? Here. You have a bad debt of 100 rupees. You have a bad debt of 100 rupees. You tried to claim the bad debt of 100 rupees. Tried to claim bad debt of 100 rupees. Assessing officer said, no, boss, I will only give 80. How much? 80. I will only give 80. Which means 20 rupees you had to offer as income that year itself. True or false? True or false? True. 2 years later, you got back 90 rupees. What did you get back? 90 rupees. How much will you offer to income? How much will you offer as income? Question Purunda. Let me repeat. You have a bad debt of 100 rupees. You tried to claim bad debt of 100 rupees. Assessing officer said, no, I will only allow 80 rupees. I will only allow 80 rupees. Next year, you got a recovery of 90 rupees. You got a recovery of 90 rupees. How much will you offer as income? 70. How much will you offer as income? 70. Understand, people. How much did you receive in your hand? 90. How much should you offer as income? 90. But out of this 90, 20 I already offered that year. FD. I should have got 100. I only got 80. How much did I already offer? Why will I offer again then? Correct or not? Next year I will only offer. How did this become 70? It's very simple. But 70 you offer right now. 20 you offered that year. So totally became 90. How much we are supposed to get? 90. How much was a bad debt? 100. Which means 10 is the loss for you. This is how it will match now. Correct. If you offer 80, what will happen? You offer 80 today. You offered 20 there. No bad debt itself for you. Yes, sir. Understand, whenever you recover, always remove whatever assessing officer already taxed. Always remove whatever assessing officer already taxed. Clear? Bad debts done. Next. Okay, all this ignore. 36 is fully ignored. Okay, last item. Section 37. Section 37, garbage section. Section 37, garbage section. Garbage section comes and says, boss, if you did not find any item till now, we should discuss. Expense. You have a expense. You have not discussed it with me till now. All that garbage you can come and check here. Rules of accounts follow. First rule in accounts, you can claim something in P&L only if it is incurred in the current year. Rule number 2. It should be revenue item. Rule number 3. It should be of the business. Yes or no?
Yes, sir.
Same rules apply. Rule number 1. You should incur it in the current year. You should incur it for the business. You should treat it as a revenue expense. Rule number 4. They are coming and saying, boss, it should not be illegal. Illegal. Rule number 5. It should not be paid for an offense under a law. Rule number 6. It should not be something which we already discussed. Anga discuss panadhukku appuram thiruppi if you come and check here and come and say no Rahul, here it is allowed, no. Anga vanducha gali pochu avladha. Yes. Can I take some examples? Donation. Allowed, not allowed? Donation. Allowed, not allowed? Hey, follow the rules, ma. Rule number 1. Incurred in the previous year. Yes or no? Yes. Incurred for the business. No. Ingada donation business. Is it for the purpose of business? No. Disallowed. Done. You paid bribe to police officers. Why? Illegal. Yes, sir. You paid goodies to doctors. You gave goodies to doctors. You basically went to a doctor and came and said, sir, I have created a Saridon. Inimele, you should only sell my Saridon. Now, like if someone has loose motion, also Saridon only. Doctor also says, okay, boss, if you're giving free Saridon, I will also tell them only Saridon. This Saridon expense, allowed, not allowed? Why? It's an illegal item. You cannot influence the judgment of a doctor. Doctor is supposed to promote your job or promote employees' health. Don't influence them. This will all become illegal. Correct? CSR expense. Another CSR. Yeah, என்ன CSR கேட்டா full form. Disallowed. Disallowed. Why? What do you mean by corporate social responsibility? You are parking some money of your profit for doing benefit for the society. For doing benefit for the society. What benefits coming to the business in this? Nothing. Not allowed. Donation made to political party. PGBP disallowed. PGBP disallowed. Interest paid to MSME. Interest paid to MSME disallowed. Not under this section. Under section 23. Under section 23 of MSME Act. Under section 23 of MSME Act, interest paid to MSME will also become disallowed. Yes, sir. Yes. Let's read the example. Let's read the examples. Premium paid by the company on key man insurance policy. Premium paid by company on key man insurance policy. Our company or key mans we have paid premium for the purpose of business, not for the purpose of business. Revenue capital. Revenue or capital? Revenue. Allowed, not allowed? Benefit perquisite to a person, acceptance of which is in violation of a law, rule, regulation, guidelines, etc. governing the conduct of such person. Violation. Expense incurred for compounding any offense under any law. Why? What is compounding, people? What is compounding? Hiding. Adding. Compounding is you had to pay penalty to the government. You had to pay penalty to the government. You go to the government and come and say, I'm sorry, sir, I made a mistake. I'm sorry, I made a mistake, but the number you're asking me to pay is very high for me. The number you're asking me to pay is very high for me. Please look at my face and give me some smaller number. Look at my face and give a smaller number. Example to you, PEMA comes and says you need to pay 100% of whatever amount you received in India as penalty. No? 100% of whatever amount you received in India as penalty. Tomorrow, if you are receiving money from your company of 100 crores, you forgot to file one small form. You forgot to file one small form. RBI will come and say, pay 100 crores to my pocket. Pay 100 crores to my pocket. Hey, you got it as capital. Correct? In this case, you can go to RBI and come and say, sir, small mistake, sir, one small form only, no, it is. It is one very small form, sir. Please do not penalize me for so much. Please come down. Please come down. He will come and say, okay, boss, instead of paying 100 crores, pay 1 lakh rupee. Instead of paying 100 crores, pay 1 lakh rupee. This is called as compounding fee. This is called as compounding fee. Question to you, 1 lakh rupees, allowed, disallowed? Disallowed. Hey, eppadi paatalo, it is a penalty only. Does that it is changed from 100 crores to 1 lakh? So no. So no. Continues to be disallowance. Continues to be a disallowance. Amendment for the current year, likelihood to come. Please keep in mind. Done. Done. Next item. CSR expenses. Disallowed. Expenditure paid for political parties. Disallowed. Interest payable to MSME. Disallowed. Interest paid on tax. Beautiful. If it is an interest paid on income tax, it will be disallowed. If it is an interest paid on any other acts, it is allowed. Penalty paid under income tax. Penalty paid under indirect tax. Disallowed. Penalty paid to your customer for not honoring the contract. Penalty paid to the customer for not honoring the contract. Allowed. It should be a violation of a law. Customer is not your law. Customer is only the king. So, customer is only the king. He is not the government. Okay? You need to have an offense to the government, not to the customer. Penalty and all is just a word used. It's just a compensation, nothing else. Will you disallow? No. Here. Here. Yes. Look at the line. Interest and penalty. If it is an interest paid to income tax, it is disallowed. Interest paid to any other act, it is allowed. Penalty paid under income tax, it is disallowed. Penalty paid under any other act is disallowed. It is disallowed. Any late filing fees under income tax act is allowed. It's compensatory. It's compensatory. But for some reason, ICA feels that if you delay your return filing, then whatever late fees you pay is penalty. If you delay your return filing, whatever the late filing fee you pay on the return filing will be disallowed. Will be disallowed. Comedy enna interlike the disallowed, finally the allowed. What is the comedy? We have a question in final. There they'll come and say, boss, late filing fee paid for TDS returns allowed. In inter, they'll come and say, late filing fees paid for return filing disallowed. அவனுக்கே புரியல நாங்க என்ன பண்றது? They itself don't know what the right answer is. நாங்க எங்க போறது தெரியல. Yes, for your inter syllabus, if TDS return is anyway not coming, income tax return is coming. So income tax return pay பண்ண the late filing fee will be disallowed. முடிச்சு போச்சு. புரியுதா? Done. With this, we are done with what is called as deductions. Done with what is called as deductions. Any doubts? Inimala, you see a question, you see a word, you should know where the section is and what the provision is. Will you be able to? I am giving you 3 days time. We are meeting on. Sums are going to be done on Saturday, second half is the class now. Okay, today, second half, there is a class. No class. Okay, merge paniko. Tungadu. Seriya? Yes, you have 3 days, ma. Saturday, we are meeting at 3 o'clock. Saturday, we are meeting at 3 o'clock. Today, balance day. Tomorrow, full day. Day after tomorrow, full day. Saturday, 3 o'clock. Saturday, 3 o'clock. We will be doing PGBP sums. We'll be doing PGBP sums. If I use the word in the PGBP, you should tell me what the provision is. Tell me what the provision is. Okay, yeah? We have balance half an hour. Let's complete the balance part of PGBP. Let's complete the balance part of PGBP. We are right now done with deductions. Right now done with deductions. Now we are getting into disallowance. Now we're getting into disallowance. I'm going to discuss with you and tell you what are those cases where if you don't satisfy something, it will be disallowed. You don't satisfy something, it will be disallowed. First item is TDS. First item is TDS. Income tax comes and says, if you are given the mandatory obligation to deduct TDS on someone, if you are given the mandatory obligation to deduct TDS on someone, you are liable to deduct TDS on someone. You're liable to deduct TDS on someone. I asked you to deduct TDS on 31st March. If you deduct on 31st March, good. If you don't deduct by 31st March, I will give you time till 31st March only. Meaning, TDS should be deducted before the end of the previous year. TDS should be deducted before the end of the previous year. If you did not deduct, what will happen, Rahul? I will disallow the expense. I will disallow the expense. How much will I disallow? 2 people. Resident, non-resident. If it is a resident, 30%. If it is non-resident, 100%. 30% of what? Percentage எல்லாருக்கும் தெரியும். Percentage of what? Expense. அவ்வளவுதான். If you are not deducting your TDS, 30% of the expense will be disallowed. 100% of the expense will be disallowed. Okay, government, you asked me to deduct before 31st March. I deducted and I kept it in my pocket. Kept it in my pocket. Income tax comes and says, boss, if you have deducted, please deposit before the due date of return filing. Please deposit before due date. Where have we learned this? Where have we learned this? Huh? Employee. Where have we learned this? That is one of the examples. Where have we learned this? 43B. Where have we learned this? 43B. 43B comes and says what? Pay the payment by the due date of filing return. Here it comes and says pay the TDS by the due date of filing the return. Provision comes and says if you are supposed to deduct TDS on someone, you are supposed to follow 2 conditions. Condition number 1, deducted before 31st March. Condition number 2, whatever you deducted, pay before due date of return filing. I did not satisfy any one condition. Expenditure 30% disallowed. Expenditure 30% disallowed. No, Rahul, I am a non-resident. Expenditure 100% disallowed. Expenditure 100% disallowed. Rahul, permanent, temporary. Temporary. I will temporary disallow. Allow it in the year in which what payment is made? TDS is deposited. Allowed in the year in which the TDS is deposited to employee, customer, government. Company, government. A company get the TDS care. Deposit to deposit it to government. Deposit it to clear. Clear. See the example. Tell me what are the answers. You have incurred the expense in 22-23. You have incurred the expense in 22-23. You deducted the TDS on 21st October. Within the previous year, after the previous year? within the previous year. You have deposited on 7th November within the previous year, after the previous year. Allowed, not allowed? Which year allowed? 23 na assessment year or previous year? Allowed in assessment year 23-24 or previous year 22-23. Same. Okay. Next one. You are incurred the expense on 22-23. You deducted on 1st Jan within the previous year, after the previous year. You deposited on 1st August 23 after the previous year. Allowed, not allowed? Allowed. You paid before the due date. You paid before the due date. Allowed, not allowed? Allowed. You incurred it on 22-23. Deducted on 5th May. Deposited only by 10th December. Allowed, not allowed? Why? Why? You deposited after the due date of return filing. You will claim it as deduction in the year. Previous year, 23-24. Yes or no? Yes or no? You are in previous year 22-23. You deducted on 9th April. Deducted on 9th April. Within this year, next year. Allowed, not allowed? Allowed, not allowed? Not allowed. Not allowed. Allowed in the year in which TDS is deposited. When deposited? 6th June 23-24. Correct? Correct? Last case. You deducted on 26th July. You deposited on 14th May 24. Disallowed in the year 22-23. Allowed in the year 24-25. Allowed in the year. There are. Yes, sir. For those smart people, wherever it was disallowed, it was read. Reason போட்டு வச்சிருக்கேன். மூணு யூஸ் பண்ணா தெரிஞ்சு. Done? Done? Yes, these are your TDS sections. These are your TDS sections. Remembering the TDS sections again, it comes and says if you have a TDS obligation deducted before the due date, before the end of the previous year, deposit before the due date of return filing. If you do it, great. If you don't do it, I will disallow. 30% in case of resident, 100% in case of non-resident. Allow it in the year in which you deposit your TDS. Done. Next provision talks about taxes. Next provision talks about taxes. Comes and says any kind of taxes, interest, cess, surcharge, fees you pay under income tax act will be disallowed. Any kind of tax, surcharge, cess, interest will be disallowed under income tax. Yeah? Income tax. That's all. Next item. What is the next item? The next item. Ignore. Done. We're into the next item called as 48.2. We're into the next item called as 48.2. Talks about related party transactions. Talks about related party transactions. Yes. Yes. Yes, na enna. What is the yes? Hey, don't know, na don't waste time. Don't know? AS18. AS18. Okay. Doubt இருக்கா? Check பண்ணுமா? Check பண்ணுமா? You want to check if Rahul told right or not? நான் என்ன சொன்னேன்? Yes, we are into related party transactions. We are into related party transactions. Here it is 48.2. Here it is 48.2. Income tax comes and says, boss, if you are entering into a related party transaction, please ensure that your expenses to your related party are at arm's length. Alright? In arm's length, simple terms, they're telling it is reasonable. Simple terms, they're telling reasonable. If the assessing officer finds out that the expense is unreasonable, whatever is unreasonable will be disallowed. Whatever is unreasonable, disallowed. Full stop, that's all over. Enna provision? If it is a related party, please make sure that the expense is reasonable. If it is unreasonable, it is. Question to you is what is related party? Simple. IFOS left to side. IFOS left to side. Abdina enna artham? You, spouse, parent, grandparent, sister, siblings. That's all. That's all. Okay, you spouse, a spouse your side or left side or right side or? After marriage she's come to left side only. After marriage she's come to left side. Okay, so it is you, your spouse, your kids, your parents, your grandparents, your siblings. These are all your relatives. These are all your relatives. Rahul, I employed my spouse's brother in my company. I நோனா பண்ணக்கூடாதா? பண்ணலாமா பண்ணக்கூடாதா? வேற வழி இல்லடா. இல்ல மட்டும் சொல்லிட்டு வச்சுக்கோ, காலிதான். Yes, I employed my spouse's brother in my company. Employed my spouse's brother in my company. I pay him a salary of 50,000 per month. How much? Market says you should only pay 5,000 per month. Market says you should only pay 5,000 per month because he's doing nothing but giving you tea and coffee. That's all. For tea and coffee, you are paying him 50,000 per month. Market says you should only give him 5,000 per month. Amount to be disallowed is 0. Amount to be disallowed is 0. Why? He does not come into related party. He does not come into related party. Logically, it is supposed to be unreasonable only. It is supposed to be unreasonable only. You have to go home and cook food also, no? Food varum la veetla appoda varum. Okay, if you are going to give him the same 5,000 rupees, you think tomorrow you'll get food? No food only for you. Okay, it is supposed to be unreasonable. Income tax also realizes that. அவனுக்கே புரிஞ்சு வச்சுக்கோங்க, பாஸ் மச்சான் மச்சி நிச்சயக்கெல்லாம் நான் தடவே முடியாது. Don't even touch them. Okay, unreasonable இருக்கட்டும் பரவாயில்ல. Don't even go and question them. அதெல்லாம் போவே கூடாது. Okay, even income tax lawmakers also realize what is going on in their home. They said, boss, do not consider them related party. Please let them allow. Do not disallow. One of the exam questions. Not joke only, exam question. An exam question. It comes and says, if you are giving a job offer to your spouse's brother or sister, whatever it is. If your sister na kandipa agadu, brother na. Okay, sister and all, you know, wife itself will not allow. Okay, so if you are going to give a job to your spouse's brother, if the salary is unreasonable, also amount to be disallowed will be 0 because they are not a related party. You will not be treating them as unreasonable expense. Clear? Yes. Question number 2. I am into the sale of mobiles. Mobile phones. I went to my brother and I said, boss, this is an iPhone of 1,50,000 rupees. It's an iPhone of 1,50,000 rupees. I am giving it to you for 5,000. But it's an iPhone of 1,50,000 rupees. I am giving it to you for 5,000 rupees. Assessing officer will disallow. I have given my brother 1,50,000 worth of iPhone for 5,000 rupees. Amount to be disallowed by assessing officer is 0. Rahul, brother relative, correct then? What is the word you use? Disallowed. Disallow can only mean for expense or income. Disallow is for an expense or an income. What are you doing here? Income transaction, expense transaction. Every disallow panna. Purinjada? Hey, this provision says expenditure to the extent it is unreasonable should be disallowed. Is this an unreasonable expenditure or an unreasonable income? It's an unreasonable. Where is the expense in this? You did a sale transaction. Sale transaction was of the worth 5,000 rupees when it should have been for 1,50,000. Is it hitting your left side of the P&L or right side of the P&L? It is hitting the T balance sheet. T P&L ma right side income, left side income. Right side income. Is it hitting right side or left side? Right side disallow panna mudiyuma. What can you do? Only add. Does this provision permit addition? It only permits. Yes or no? This provision only covers expenses, does not cover income. Does not cover income. In my book, somewhere on the bottom it will be. Okay. Okay. Purida, clear or now? Yes, when it comes to expenditures, it has to be to specified persons, meaning your left side, right side and all. Even if it is unreasonable, it is allowed. Even if it is unreasonable, it is allowed. But even if it is a specified person, only what I am disallowing is an expense, not an income. Clear? Clear? In this, Rahul, what do I have to read? The only thing you need to read is the first three line items. The only thing you need to read is the first three line items, meaning individual. Individual relatives is spouse to brother, sister, linear ascendant, linear descendant. Business in which he has a substantial interest. What is substantial interest? That is all that is going to come for exam perspective. Other than that, nothing is going to come from exam perspective. Done. 48 is also done. Coming to 48. I already discussed. What is that I discussed? I said, boss, if there is an expense which you make to someone and the expense is more than 10,000 rupees to one person in 1 day, in that case, you should make this payment only by permissible modes. If you make the payment by non-permissible modes, whatever expense you have will be disallowed. I took the expense on an accrual basis today. Next year, I make the payment in unpermissible modes. I will deem it as an income in the next year. Meaning I will add. Clear? Yes. First question. What do you mean by permissible modes? Account pay check, account pay draft, electronic clearing system, permissible modes, other permissible modes. What is other permissible modes? Card, debit card, credit card, IMPS, NEFT, RTGS, UPI, BHIM Aadhaar, all these things. Question to you: bearer check allowed, not allowed? Cross the check. Cash definitely not allowed. Definitely not allowed. Okay. Here comes certain exceptions. Exception number one. If the payment is happening to a transport operator, 10,000 will become 35,000. 10,000 will become 35,000. Transport operators, you can pay up to 35,000. Exception number two. They're coming and saying, boss, if you're paying it on a day where there is no bank, if you're paying it on a day where there is no bank, still disallowed. That provision was there till 2020. After that, they removed it. Now they came and said, boss, online transactions are there. Bank illana unukku enna prachane? Bank online poidu panikko. Okay. What are the exceptions which are covered? Is exception number one. They came and said, boss, if you are transferring to somewhere else where there is no bank, transferring to someone else. I have asked you to go and sit in Ladakh. You don't have a bank in Ladakh. What will you do? Take cash and go. So places where there is no bank allowed. Second, I am going and making a payment to a farmer. If I am making a payment to a farmer, allowed. Understand what I am making a payment is only to farmer, not to middleman. If I make the payment to wholesaler, retailer, middleman, farmer, cultivator. Correct. Done. Look at the book. Payments made to RBI, SBI. What payments will you make to RBI, SBI? Interest. Payments made by letter of credit, mail, telegraphic transfer, book adjustment. Book entries. Debit, credit, knockoff. Payment made by netting of dues in the book. Sada, debit, credit, knockoff. Then payment made to farmers, cultivators, growers, producers. Payment made to cottage industries. Payment made in villages where you have no banking facility. Payment made to someone for retirement benefits if it is not exceeding 50,000 rupees. Payment made to employees transferred for 15 days or more in a place where he does not have a bank account. payment made to agent for acquiring goods and services. Agent ko poi cost putta, no problem. If the agent is going to make a payment to someone else more than 10,000 rupees, disallowed. No shelter shall be given to assessees on the premise that payment was made on the day of a bank holiday or a bank strike, will continue to be disallowed. What are the permissible modes? Credit card, debit card, net banking, RTGS, EFT, IMPS, UPI, BEAM, other. UPI, BEAM, done. This is 48.3 and 48.3. 48.3 and 48.3. Last provision for your class is 47 ignored. 47 ignored. Last provision for your class is 43B. Have we discussed? Almost discussed. Some items we discussed. First item was your tax. First item we discussed is tax. Any payment to the government should be done within the due date of return filing. Second item we discussed is interest. Any kind of interest which you make to bank, NBFCs, PFIs, PFSIs, whatever it is, all these people also you should make within the due date of filing the return. Third item which we discussed, any contribution made for employer contribution to funds. Any contribution of employer to fund. Any contribution for employer to fund. Then any kind of bonus or commission to employees. Any kind of bonus or commission to employees. Next, any kind of leave encashment payments. Any kind of leave encashment payments. And the last item is any kind of payment for the use of railway assets. If you are going to use railway assets, if you make a payment to railways for it, you should make it within the due date of filing your return of income. Rahul, I did not make the payment within the due date of filing of return. Disallowed. Allowed in the year of payment. Done. I think this is one example which is there in your book. Just to clarify, they're coming and saying, boss, if you have interest to be paid to banks, if you have any interest to be paid to banks and you forgot to make the payment, you went to the bank and said, Rahul, do one thing. Instead of having all the interest together, accumulate it and make it into loan. In your balance sheets, interest will be reclassified as loan. Which means in your balance sheet, is there any interest outstanding? No. Can you claim the full deduction today itself on conversion? No. They are coming and saying in these cases and all, please get the deduction only in the year in which you pay the loan. Correct? Examples are there in the book. Please read it off. And we are done with the chapter. We are done with the chapter. What is pending in the chapter is your presumptive taxation. Will not impact my answers for Saturday. So Saturday we will start with the sums. Then we will go into presumptive. What I needed to capture for you for Saturday is done from my side. PGBP, this is what is it. You just need to use a word and tell me what is the provision and what is the disallowance. Okay? Okay, can we play some examples? Example number 1. You have a cash payment. First check whether it is an expense or a capital. Capital in the ignore. Expense in the up to 10,000. If the number is less than 10,000, allowed. If it is more than 10,000, disallowed. But if it's transport operator, 35,000. I have something called a specified business. I have something called a specified business. 3580. What will I do? 100% capital revenue allowed except for land. I have scientific research. 100% allowed except for land. Yes, sir. Interest on tax. Income tax disallowed. Other taxes allowed. TDS paid on 30th November 2022. TDS paid on 30th November 2022. Paid na not allowed, not allowed. By for previous year 22-23, I paid the TDS to the government on 30th November 22. Allowed, not allowed? Allowed. I have an employer contribution to PF. Subject to 43B. I have an interest on loan which I have taken for a capital asset. Added to the cost of the asset only till the date on which the asset is to use. Hey, are ready to use. Put to use. Put to use. Buildings depreciation 10%. இது மட்டும் தான் ஞாபகம் இருக்குல்ல உனக்கு? Yes. Speculative loss. Set off against speculative income only. Can be set off only against speculative income. Penalty paid to customers. Interest paid to MSME. CSR expense. Gifts given to doctor. Disallowed. Employee contribution to PF 1 day delay. Permanent income. Permanent income. Yes or no? Yes or no? GST paid on capital assets. No credit available. Add to the cost of the asset. Subsidy given to me for doing my regular business. Subsidy given to me for doing my regular business. Hello. The subsidy na income or expense? What to do? Huh? Subsidy given for doing my one adjustment I give out of the book. Abriye prashne vandrom. That's all. Take it to your P&L. That's all. Take it to your P&L. Subsidy given for my capital asset. Add a reduce it from the cost of the asset. Books order depreciation. 40%. Books order depreciation 40%. Done. This is how I have to read, people. Okay, this is how I have to read. Whatever adjustment comes in your head, everything should come on the book. Okay, it should come in a flash of a second. That is what we need to do in PGBP. If you can do to that extent, your answer is already through. 12 marks in your first question, and some here and there in some fourth and fifth question, you're already through for your exams itself. Okay, that is how I have to read. Can you prepare yourselves?
Yes, sir.
Let's meet on Saturday. Thank you, people. Have a good day.
Thank you.